of Master Investor and our brand here. Welcome. If you're an existing subscriber, make sure to click the link in the description if you're new. And if you're an existing subscriber, maybe there's a tool or something that we are sharing today down below here on the description of this video so that you can have access to something that will help you build the asset column ultimately. If you're new, make sure to turn on the notifications, subscribe. And if you have any questions, please let me know. Okay, we're going to come back and answer. I'm watching the chat here. So if you want to interact right now, let me know. If you have anything to say, we're going to be talking about the different levels of investors that exist today. I have a great article that we just published. So if you want to have this on a newsletter, you can tap into our newsletter that is free. We also have a paid version, but you can have the free version, and we're publishing every single day. We're sending an article, which you're seeing here on a live stream. So I'm also going to be doing a podcast, as I'm usually doing every single day too, just to kill two birds in one shot. Because if I don't do it right now, then I'll have to do it later, and I'll have to pretty much repeat myself in a way. Although I always freestyle when I'm on a podcast, so it's never the same, even though it might be the same topic in the same article. I always add side notes and things like that. So welcome. We're going to be talking about money like we always do, okay? So stay tuned. Write down some notes, whatever works, whatever resonates, whatever you're learning. Remember, a master is always learning to become better at investing. And the way we do that is by investing in our financial education, self-development. So this year, the rest of the next year, listen, we're already like 4 months into the year. We haven't stopped since the year started doing a live stream. We kept that promise. We're going to keep that promise going. Okay. And we are happy to say that we reach over 300,000 views already on our YouTube channel. So we're growing tremendously. This topic of money and building wealth is something that is lacking in the world. There's more entertainment, and we make it as simple as possible, because being a capitalist, and we're going to talk about being a capitalist today, since we're going to cover the levels of investors that exist. Okay, we're going to choose the one that resonates with our mindset, and we would recommend which one to be, of course, because a master investor is one of the levels of the investors that we would cover. Okay, and even though it may not have that name in there, it relates to that. Okay, and we're going to explain why. So at the end of this video, you'll also master the basic rules of investing. We're going to cover that as well. And yeah, so let me get this podcast ready right now. If you have a topic, listen, we're going to be talking about building our wealth, right? And that means that we're going to be speaking all the time about investing for passive income. That means that we're going to be, you might be watching me on a live stream handle a real estate deal. I'll be looking for real estate deals. I'll get emails and calls, and I'll get, referrals and things like that, okay, through my lines all the time about real estate deals. So you might be on a live stream with me, and I'll be covering how to handle a real estate deal from A to Z, how to cover it, how to acquire, how to raise the capital, how to put it together. Even if you don't have the money, the level of investor as an inside investor or a master investor, you will learn which level is that today, is a person that can raise capital. Okay, and that's the job number one of an entrepreneur, is to raise capital, to make money, to raise capital, of course, and have a business to raise that capital with, right? So, and then the number one skill is to sell without selling, using systems and smart marketing. And then the job number one of a inside investor is to make money work hard through sound investing. Okay, for passive income, and sometimes we'll have capital gains income, because some investments are only for capital gains income, but we focus specifically to build and work for passive income and make money work hard through sound investing, and then we will get capital gains income, because we will diversify among the 5 different asset classes that exist. Let me get this ready, because this is good stuff that I'm telling you, and I like to catch it too for the podcast audience. Okay, if you're driving, if going to Spotify, or if you have SoundCloud, and just type Master Investor. You'll find us there. Okay. Turn your time, your environment into improving your financial education. It's a topic that maybe not entertain a lot. It's not like, we're going to laugh a lot, but trust me, the reward is total freedom. Once you master how to make money work hard for you, once you approach money and start seeing the world with the entrepreneur's eyes, then you'll be able to really create the freedom and lifestyle that you always desire. A lot of people never get to achieve that. And that's the issue that we're solving here, is the lack of financial education that exists in the world. Our mission at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. And we will never sell you an investment, right? We will never tell you where to invest your money. That's up to each member. We all are responsible for our results and what we do in our finances, right? What we do is our responsibility, it's our duty to get the results that we want to have. But the most important thing is that we will be sharing data, which is key. The right information with the right tools, applying that information, then you get the results, and then you can do magic with that, right? So we will have an open curtain in our community for our members, and we're all developing the investor that we have inside of us to be a master investor, to be an inside investor, and to be the level of investor that we will talk about, which is level number 7. And that's the level that we encourage everyone to be here at Master Investor. That's why we create our brand here, right? We're the authentic brand of money, business, and investing. We keep it real. We don't just encourage people to invest in stocks. We actually tell people and show people how to build businesses that turn into brands, because we want to have excess of cash flow. And then those businesses will buy us stocks and other things. But even when we invest in stocks, we can create money without money, because it takes financial education to make money with money and also without money, because the job number 1 of an entrepreneur is to raise capital. Even when we don't have money, we can raise the capital from the front end through sales and also through the investors, because they see that we have an infrastructure that is solid, that is founded on the principles of a successful business. The companies that a successful business have, we talk about them inside of our ebook, How to Build Cash Flow with the Internet Turn Passive Income On. So I encourage you to click the link in the description and get that, because it shows you the cash flow triangle, and we need to build our business like that. So we encourage everyone to build businesses and acquire businesses that create cash flow, and usually invest in real estate too. If you have the ability to have a real estate property, and even if you have a residential house right now, and that is your biggest liability, meaning that's your biggest responsibility because you're paying for it every single month. If you're working hard at a job to pay for that, okay, if you have to get up and go to work to pay for that, then that's a liability, even though it's the bank's asset on the bank's portfolio or in the bank's books, I mean. So it doesn't mean that it's your asset. The asset is determined based on the cash flow. Okay, which way is it flowing? Is it flowing into our pocket or is it flowing out of our pocket? If it's flowing out of our pocket, it's a liability. No matter what anybody labels it, it may be somebody else's asset in their asset column, and usually that's the case. Everything that we have on a liability column is in somebody else's asset column. However, with financial education, we can turn many liabilities on our liabilities column to become assets, and still be assets to the people that control or own those, or the entities that control those liabilities, or now assets, because we turn them into assets, right? And how do we do that with a home that we maybe have? If you have 5 rooms and right, and you're in a good location, and now there are events going on year round, then look at the neighborhood around and on Airbnb and put your house there. If it's bringing in a lot of money every single week, where now by the end of the month you can cover the mortgage, the expenses, the cleaning, everything, and it still leave you 2-3 times more than what the mortgage is, so that you can pay for another house. And now that is bringing in cash flow. Now that mortgage is good debt. It's not bad debt now. It's good debt because it's making us money. You'll see the difference, right? And so, okay, let me get this ready. Because once I get going, it's hard for me to stop, because I want to get that out, and I go on a whole tunnel to deliver the message to improve your financial education and intelligence and to be able to give you the wealthy mindset. That's what we're doing here. Okay, so yeah, we will never tell you where to invest your money. That's up to you. How do you want to invest? Okay, let me see. So this is, and then I'm going to go have dinner and then I'll be back. We'll hang out tonight. Okay, so make sure you subscribe. We hear it every single day, and I'm going to show you that with consistency. Don't worry about the likes, don't worry about the views. If you want to get started doing live streaming, maybe you're a gamer and you're just playing a lot of time, like a lot of hours, and just that, even if it's 1 hour, I don't care if it's doing 30 minutes, record that, put it on, right? If you turn it, all your passions and monetize them with all the platforms that we have today. You never know, one little clip can go viral and it can give you sponsorships, many things like collaboration deals. So, okay, so this is 170. Okay, let me see here. Okay, let me start here. I'm going to give a little introduction, okay? And then we're going to dive into the article. Hello, welcome to another podcast of Master Investor. Glad to be here again on another valuable talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. Welcome back if you're an existing subscriber, and if you're new, make sure you follow us on all of the social media platforms. Click the link in the description and start investing in your financial education. That's the best investment we can make, and it's the only investment we will ever encourage everyone to make here. And then you can decide what you want to be moving forward. What type of investor do you want to be? Okay, we're going to be talking about what level of investor should we be. There are 7 levels of investors that we're going to mention today, and we're going to encourage everyone to be one of these investors, but it's up to each member how we want to be in regards of the game of money, right? Because we're all playing this game of money. So in order to be an inside investor or a master investor, we need to have financial education. And does it take money to make money? Well, it takes financial education to make money. And also we can make money without money. We're going to explain how we can do that. We can create money from thin air in many different ways. When you have financial education, it gives us the tools and the resources and everything that we need in order to start tapping into unlimited wealth and access to money, excess of cash flow. The 3 E's of a master investor. Number 1, financial education. Number 2, financial experience. Number 3, excess of cash flow. Our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. Today, we're going to cover some of the basic rules of investing so we can master those. There are numerous reasons why many people go broke in their lifetime. So that's what we're going to be covering, ways that we can avoid falling into that trap, into those habits, because it becomes patterns at the end of the day. When you look at the wealthy mindset, we operate with a certain pattern when it comes to utilizing our money, the way we see opportunities when we face financial crisis, as they call it, and we actually call it financial opportunity. Here in Master Investor, that's what we call it, because it is opportunity. When you have financial education, we can actually spot opportunities where other people cannot see. And when they panic, then that's when we come in and we take assets for free, basically. Cheap dollars, because we can raise capital, and more when inflation is skyrocket and it continues to go up and goes into something that is called hyperinflation, quantitative easing, right? And that's when the government continues to print money unlimited, because it is the way the economy works. We learned that in August 15, 1971, President Nixon separated the gold standard from the US dollar. And that was one of the best things, I believe, in my personal opinion, because I'm a capitalist, one of the best things that has ever happened in history of humans. it allows anybody to become wealthy very fast using fake money, if you will. Because today money is created with debt due to that change in the law. When President Nixon did that, and I'll tell you why he did that in a few seconds, but we need to understand that once he did that, money stopped being real money because gold is not longer backing the dollar, meaning that money is fiat, is fake, is monopoly money, it's a currency, and it's just an idea backed up by confidence. And President Nixon did that because he understood that we are a country which imports more than exports. Unfortunately, and I don't know why, but we should actually be making more. But maybe due to that change, we can actually just get other people to create things for us. And that I guess that is a capitalist. So we just use other countries to create things for us. But anyway, we actually are a country which imports more than exports, meaning that if the dollar is attached to the gold and we import, meaning we're giving the dollars to other countries because we're buying items, we're buying products and things like that, then because for whatever reason, maybe the labor is cheaper and whatnot, but we're giving our money away. That means that if the dollar is attached to the gold, we're giving the gold away, right? And so we don't want to do that. That's real money. Gold is a real source of, that's gas money, if you will, because it's limited, right? And that's why Bitcoin also, and I guess is also very valuable now because crypto has become it's not only an asset or an asset class to invest for capital gains income, but now crypto is a currency, is the new money in town. So we need to use crypto to empower ourselves to riches, because when we acquire the right cryptocurrencies, then we can utilize them to pay each other, to pay businesses. The governments around the world are accepting crypto as their digital currency. Therefore, we need to understand how to build wealth through crypto too, because it's the new money. We need to adapt, we need to change, we need to learn the new trends and so forth, okay, to stay ahead of the average investor. We want to be optimized at all times. If you know Master Investors brand, we're all about going back to the basics. Being a master investor means that we're a student for life of business, money, and investing. The more we know about business, the more we know about investing, because we cannot have investing without business. Business is at the core of investing. Choose the right level of investor to build true wealth. We're going to also talk about improving the B.E.A.R framework, and as is the ultimate cause of remaining in the poor mindset or shift into the wealthy mindset. And I will explain what that stands for, B.E.A.R. Next, having money does not make us wealthy. Knowing what to do with it is the key to true wealth. Financial planning in the B.E.A.R framework. Number one, belief are the underlying thoughts that underpin all our actions. These are nearly entirely subconscious. Our beliefs serves as a framework for how we think and act. However, our beliefs are not always facts. They are our views about what we feel to be true. These opinions have a significant impact on our activities. Number two, excuses, which are things we say because we believe they are true, such as somebody will say he or she doesn't have enough time. Excuses create a cycle that return us back to our beliefs, no matter how flawed or inaccurate they are. And we rely on our built-in excuses based on our beliefs and past patterns to keep us rooted in the same poor habits. Number three, actions are decisions we make based on our beliefs and excuses. Excuses eventually lead to bad decisions, which become our actions. And excuses lead to poor decisions, better than bad decisions, right? Because we can always optimize. It's not so much that it's bad, but it's maybe not the best decision for us at that specific moment. Number four, Results are the natural consequences of our beliefs, excuses, and actions. Just desserts. Using the B.E.A.R framework, beliefs adopt to the wealth beliefs about money, right? Let's grab whatever the wealthy uses to create wealth. That's exactly what we're taking from the wealthy mindset, their framework, how they think, how they act, how we approach investment, how we do business. Reasons have a strong and meaningful whys for what we are doing. When we have a strong why behind the project that we're handling, then it becomes even better, because when it gets tough, if we love it enough and we have a strong and big enough why, then we can persevere through the tough times if there are any, because I believe we can also have a great shot to success if we surround ourselves with the right mentors who are learning from other people's mistakes. And that is actually the shortcut of life, if you will, because you can actually learn from others' experiences and we can gain that wisdom without us having to make those same mistakes. However, we are learning from our mistakes as well, but we can also learn, so we can do more reading as we grow our wealth. The more reading, the more we know, the more words we know in our vocabulary regarding business, the better we can handle negotiation, the better we can talk to people and bring the best out of them. We can communicate with smart people and make them work to fulfill the mission of our businesses, right? So all of this counts. Actions. We must be active investors to get the experience to be a master investor, an inside investor. Results. Seeing, analyzing, and improving results all the time. Not all investors are created equally. We see in their investment strategy and, more significantly, in the results. Some investors strive to achieve more than their schooling has equipped them for, while others allow themselves to plateau. Understanding the various tiers of investors can help us determine the type of investor we are all becoming. We will learn what our ambitious and we would require, what will require from us to achieve the level of investor that we want to become. Okay, so again, we're all playing this game of money, whether you like it or not. Like, you have to deal with money every single day, and to the end of our lives, we have to do this. So it's up to us, right? I mean, how you deal with money, how you make your money. I mean, if you don't master money by the time you go into your deathbed, right? By the end of our lives, if we have to master money, right? We have to tell money what to do, because money is dead. Money is something that it doesn't have a heart. It's not a vivid thing. So we have to master that, because it's just paper. It's an idea backed up by confidence. It's digital. So we need to just tell money what to do and make it go work for us in sound investing, because we are acquiring assets. We know how to build assets that solve problems in the world. It's all about helping the world become a better place. When we do that, we solve problems through systems, because a sound business is a system of systems. Then we can actually tap into marketing, right? Marketing is doing sales via systems, and that means that we're using sales funnels. We're using the basic rules of investing, because having assets means that we are working less and less and less, but making more and more and more and more, and keeping more and more and more, because we can minimize taxes. We're not giving our wealth to the government because we're using debt. Why? Because debt is tax-free, and the reason why debt is tax-free is because money is created with debt. Remember what I mentioned about August 15, 1971, the separation from the gold standard from the US dollar? Money became debt after that. So today the economy works with debt. That's why the government is over $17 trillion in debt, and it doesn't stop. So we cannot complain about inflation, because we should use it as a tool to become wealthy and to tap into unlimited wealth. We can print money like the government does every single day. They print billions of dollars per day, and it doesn't stop. So if they can do that, we can also do that legally. And because they do that, the laws say that debt is tax-free, whichever type of debt, credit card, loan, personal loan, mortgage, debt is tax-free. So we like to use debt all the time, because We're minimizing the highest expense humans have, which is taxes. And then if we can do that and use debt to, of course, be good debt, meaning that we're investing in acquiring or building an asset that produces excess of cash flow, then that passive income can also be tax free because we're minimizing it through business expenses legally, because we have the right tax strategy in front of it. Before we even get the money, we already know exactly what we're going to do with each dollar, so that we can utilize the business expenses that exist for each business so that we can minimize taxes, okay? Because the government gives tax advantages to the wealthy entrepreneur and inside investor, because we're doing things that they want us to do, which is improve the economy through housing, technology, food, right? Green energy, etc. Things that interest the government and the economy, they will give us tax advantages. So operating through a company, that's what we incorporate a company, is not only to minimize taxes, to take advantage of the tax advantages that exist. That's why we need to incorporate. So even if we're starting small, you need to be operating with a company, okay? Even if you're not making any money at the beginning, because you're setting things up, maybe a month gonna go by, maybe you haven't, maybe not even that long, right? But you need to be operating with a company, because once you start creating those sales that are coming in from affiliate marketing, whatever, you want to run that income through the company that you control 100%. So we think big, we start small, we take baby steps every day, and we make sure that we stay focused on building businesses that produce excess of cash flow and that they run on themselves. It doesn't require us to be there. The more the business makes money, the less we have to be there. That's the whole thing about controlling assets. If it doesn't do that, if it's requiring us to be there, then it's not an asset. The business has to make money without us being there. Okay, let me see. We have folks contacting us for financial advice, but when we can tell by the question they ask that their expertise level does not fit the investment they are looking for, it is as if they are trying to race in the Tour de France while riding on train wheels, meaning that they don't have financial education to do the investments that they want to do. And that's why I always say, just make sure we're reading every day, we're listening to podcasts like this, we're investing in self-improvement, right? Leadership skills, any type of seminars that we can get our hands on. I mean, 30 minutes counts, 10 minutes, 15 minutes. They say the 100-hour rule, right? If we do 18 minutes per day on an activity, we are at the top 1% of that activity by the end of the year. So pick whatever you want to do great and do that 18 minutes every day. Devote your time into that craft, okay? And when it comes to investing in business, we have to be generalist, meaning that we know a little bit about everything. And we hire the specialists to do whatever we need to get done, because they are the specialists. We don't care about being the best in the team. We rather give the credit. Okay, somebody can create that for us, great. This is what we want done, create it for us. And then now we control our time at all times, because a capitalist controls our time. We are free. We have true wealth. We're going to learn the levels of investors that exist in just a minute. Don't invest if we are concerned it will be too complicated. If we're eager to study, beginning with our articles, our ebooks, click the link in the description. We can guarantee all that everything is possible. Even if we don't comprehend everything, we will know more about investing than many people who are already investing. To understand where we are headed, we must determine where we are. This is why understanding the 7 levels of investors is critical. Knowing the levels allows us to tailor our education to our investment. It also helps us plan for what is ahead. It allows us to identify the skills we will need to become the best investor we can be. There are numerous possibilities accessible for people of all levels of expertise, but many people may never take advantage of them because they let fear to stand in the way of progress. If we want to improve our life and begin our journey to financial freedom, spend a few minutes to be honest with ourselves and identify our investor level. Don't be average. That is our recommendation at the end of the day. Whether we invest to be secure, comfortable, or wealthy, we should have a plan for each level. In the information era, our financial education and investing expertise are critical. Level 1, the lottery winner. Level 1 investors are considered lottery winners. These are the unconscious incompetents who don't realize what they don't know. This category of investor has spent little time, if any, learning about money and investing. They rely on other people's advice, which is typically harmful. We refer to the level of level 1 investor as a lottery winner, since approximately 70% of lottery winners become insolvent within 7 years, and nearly 1/3 declare bankruptcy, leaving them worse off than before they struck the jackpot. They have found themselves with a huge sum of money, and due to a lack of financial education and understanding, they fall victim to financial consultants who are more concerned with making money than with clients' financial health. Many individuals believe that investing is dangerous or risky, like gambling. The poor person thinks so. The wealthy, on the other hand, we see the poor's mindset's proposal as dangerous. The poor mindset value comfort, stability, and a solid career. The poor mindset value a plan that prioritizes savings over spending. The poor mindset simply lacks financial education because the poor mindset didn't understand investing. They believe investing is riskier than saving. So they save money when the bank is lending that money to us, the capitalists, because we know what to do with that money. We know how to multiply because we're bringing sound assets to those banks, to those lenders. The banks are in the business to lend money. So in the new economy, the savers are losers and good debtors are winners. Investing is not risky. Nevertheless, a lack of education is. Our suggestion, getting educated financially, is the simplest way to prevent becoming a level 1 investor. Without a financial education, we won't know what to look for to identify higher performance assets, and we may fall victim to so-called financial planners who will cost the uneducated investor a lot of money. And that's why we always tell you and everyone here in our community, all of our partners, that we don't give our money away to anybody. We will never sell you an investment. You must understand how to control your money and how to invest that money, how to raise money from the bank, and other ways that you can invest money through private lending and so forth. Many ways, friends, family, depends, right? If you have a good asset, if you bring in a good business into the table, maybe it's an existing business and you need to raise some money, then you can raise in many ways. We explain actually that our next book is going to be on that. We have 3 books right now that you should get. The 10 New Rules of Money, How to Build Cash Flow with the Internet, Turn Passive Income On, and How to Invest in Crypto to Build Wealth, Understanding Bitcoin and Blockchain. And then we're releasing our 4th ebook in the next month. It's called How to Raise Capital to Build Wealth. And also we're going to emphasize on the topic of investors and the best level of investor and so forth, so that we can give more light into that, into those values, into what we need to do in order to tap into the best investor that exists, okay? Because when we're playing this game of money, we need to be at the highest level when it comes to the mindset, right? It doesn't mean that you have to make millions of dollars. Remember, wealth has nothing to do with making millions of dollars. Wealth has to do with the freedom that we have, okay? What type of lifestyle do we want to have and we desire? And we have that, and we can do that without working for how many years? That is our wealth number. So everybody's wealth number is different, because not everyone wants to be on a penthouse or on a mansion right on the beaches of the world, right? Maybe somebody is okay with being at a certain level and they're happy with that and they feel wealthy and they have tremendous excess of cash flow coming in from their assets and they're living like kings and queens. So listen, everybody's wealth number is measured on time? How much can we go without working and be able to thrive with that lifestyle? Okay, without having to worry about paying for the bills, right? Because our assets are paying for those bills. Level number 2, the borrowers. Borrowers are considered level 2 investors. Instead of investing, these individuals address their financial issues by borrowing more money through bad debt. Okay, there's nothing wrong with, I said earlier, savers are losers and good debtors are winners. And these are borrowers are bad borrowers, like borrowers that acquire liabilities instead of acquiring assets first. There's nothing wrong with acquiring liabilities, but first we need to have assets that will pay for those liabilities. That's why we always say, if you want a liability, then first figure out which asset we're going to build or acquire to pay for the cost of that liability. That way we can enjoy it as much as we want to, and it's free at the end of the day. We show you how to position ourselves so that we can get everything for free legally, because that's how the ultra wealthy do it. We get everything for free at the end of the day, legally and ethically, because we have businesses that return any of our capital invested initially back to us, and we control that asset and we continue to collect passive income. So that is money for nothing. That is legally printing money for free, right? It's putting money into our pocket. We recoup our entire capital back and we still control it. We collect the money and we use that money for whatever, whether it's to pay a liability that we want, and hopefully we are using part of that capital to invest back into acquiring more assets, and we can compound the asset column so we can tap into the velocity of cash flow. And that's when we literally have freedom units everywhere in different asset classes, giving us passive income and capital gains income, excess of positive cash flow specifically. And we focus on investing for passive income because that's what we do here at Master Investor, because that's how we build true wealth, right? Is to have assets that produce passive income. And then, of course, capital gains income will come because we're investing through sound investing, and different asset classes will only have assets that will produce capital gains income, but we will know exactly which type of income we're working to obtain from that investment. These are the people, the borrowers, these are the people who believe that refinancing their home will help them pay off their credit card debt. They convert their high interest short-term debt to low interest long-term debt. They think this makes sense because they believe the government will give them a tax break if they have debt on their home. This is how a borrower addresses their financial troubles. These people also utilize credit cards and spread their debt into liabilities before using that debt. A capitalist would use that debt, those credit cards, and we always encourage you, who cares about the interest rate? As long as you're investing that credit card, that money, right? Because debt is money, into an asset that will produce enough excess of positive cash flow to pay for the credit card interest or the loans interest, the debt service completely, and then also leave us with positive cash flow, whatever is left. And that is money for nothing. That is printing money legally for free. We're using other people's money, OPM, legally, and it's tax free. But we're investing it for passive income. Don't invest it first to acquire liability. Now you have to pay for that yourself, and that is bad debt. We don't want to have that before we have good debt. We have to acquire an asset first, and then we acquire the liability that we want for free. Nowadays, consumers transfer their credit card debt from one company to another. These individuals are the obsessive shoppers without actually investing into their financial education first to acquire assets. It boils down to that. Their asset column is pretty much empty. They always have debt, but they have a high-paying job. They do not, and usually attorneys, CPAs, accountants, depends of, and not all of them, because some of them have the wealthy mindset. The ones that we deal with here at Master Investor, they all have the wealthy mindset, and they do that because they love what they do, but they don't have to do it. They have business, they have investments as well, and they understand how to utilize the laws legally to minimize taxes. And they actually encourage us to make more money because then we can minimize taxes if we do it the right way. We have to have a tax strategy always ahead of the year, and we have to know exactly what we're doing with the money. And that's a good exercise. Before you touch your money, know exactly what. Put a plan on it. Okay, you're gonna get 100,000. Okay, you're gonna put a plan to that. Okay, this is how this money is gonna multiply and grow. These individuals always have bad debt. They do not know how to stop the bad debt. Borrowers are the ones who appear rich, but they're not rich. They have the biggest house, gorgeous Mercedes SUVs, and go on lavish holidays. They appear to be in fine shape, but a closer glance at their financial statements reveals financial disease. Our suggestion to avoid becoming a level 2 investor: first, quit wasting hard earned money on frivolous purchases first, right? And put that into your asset column. And of course, financial education. We must understand that anything that takes money out of our pocket is bad debt or a liability. With this investing thinking and conduct, we will never achieve our financial goals. We must take control of cash flow and put it to work. Level 3, the saver. Level 3 is a person we refer to as the saver. These people save a tiny bit of money every month rather than invest in it. They believe that by placing their money in a fake 401k vehicle, they are investing it. However, 401k is primarily a savings plan. That is why 401ks are so enticing to them. It gives them the impression of investing while feeling safe, like saving. But astute investors understand that a 401k is a saving plan. A savvy investor seeks higher profits while maintaining our equity or capital. Savers are those who work hard to save money. We are afraid the majority of people will fall into this group. Many in this level will go from grocery to supermarket, spending thousands to save pennies. They don't only spend money on petrol, but they also lose time attempting to save money. Many shops appeal to this type of individual by saving. Come in here, shop like crazy, and save money because things are on sale. The word save has the power to entice people. They are actually wasting money or purchasing unnecessary items, but they rationalize it in their minds because they believe they are saving money. They are saving money on liabilities or doodads, as we call them, rather than actual assets. In the investment sector, it is like a grocery store having a half price sale on toilet paper. Customers rush in to purchase as much as possible. If the stock market experiences a sale, often known as a market collapse, and there are blue chip companies half price or real estate below market value, the ordinary consumer will not rush in to acquire more. The usual person will run away with their possessions. That is one of the mental and emotional distinctions between the wealthy and the poor. When the market is high, professional investors use the stand aside mode strategy. We aren't in the market. We are waiting for a sale in the market to take advantage of bargains offered by sellers. There are spiritual, emotional, and mental differences when it comes to money. Most investors now need to save. Most financial advisors recommend that individuals have at least 6 months worth of monthly expending on hand. For example, if our total monthly expenses are $2,000, they advocate saving $12,000, not much more. We should maintain the remainder in the market. If we don't feel confident in the market, expand into 12 months or purchase insurance. If we do not have enough savings, insurance is a must-have. In other words, if you are a young couple just starting out and do not have much in savings, life insurance can help because for a few dollars, if you pass away unexpectedly, the insurance will cover the difference between what you have and what you have not yet accumulated. When we speak with folks about money, insurance is an extremely significant paper vehicle. Always be aware that there are insurance options for the poor, wealthy, and middle class. Each performs differently. Therefore, insurance is a vital asset as well. Understanding the various types of paper assets is a key step in the 7 stages of investing. Our suggestion: money advice, as mentioned above, can create a negative outlook towards money. For example, finding deals such as coupon sales and cheap gift cards takes a significant amount of time and effort. Do you save money? Yes, but lost time, on the other hand, which is more valuable than money. Is your financial intelligence growing? No. The only knowledge that grows is how to save more money rather than making more money. Identify what our financial goals are and then seek financial education to help us attain them. Level number 4, the smart investor. Level 4 is a smart investor, a savvy investor. The smart investor is someone who understands the importance of investing. They fully participate in 401k and mutual funds. They have a decent financial education. They are frequently middle class. They have limited financial knowledge. They are skilled at allocating and budgeting. They store the money in safe areas. They take a long-term view of investment and are quite reliable. For most people, becoming a level 4 investor will be a lofty goal. Unfortunately, at least 50% of the population falls below that threshold, which concerns us. The smart investor is someone who does not gamble. They do not speculate. They avoid initial public offerings. They do not buy derivatives, day trade, or engage in other similar activities. They are really solid. The Millionaire Next Door focuses on the level 4 investor, that book. Our suggestion, the smart investor should collaborate with or recruit people who are smarter than them. A lack of financial knowledge may be forcing the savvy investor or smart investor to leave money on the table. When seeking assistance, make sure to choose our consultants carefully. At the end of the day, knowledge is our most valuable asset. What we don't know is our biggest risk. Rather of avoiding danger, learn to manage it effectively. Invest in our financial education so that we can eventually become a wealthy investor through innovative investing. Level 5, the long-term investor. Level 5 is for long-term investors. For level 5 forward, we are talking about professional investors. They are what we will consider insiders. When someone inquires how do you become an insider investor, we suggest start with real estate or acquire or build a business that become a brand, such as a digital business. The reason for this is that if they buy stock in IBM or Microsoft, they will never become insiders. They are so far removed from the decision-making process of IBM and Microsoft. However, purchasing real estate and businesses requires financial literacy. We must grasp financial statements, formas, and due diligence reports, and our level of sophistication increases. They actively invest. They make their own deals. A level 5 investor is becoming increasingly sophisticated. They are making their own arrangements. They bargain. So when people ask, well, how do you find these good deals? A large part of the answer is being able to read a financial statement and negotiate the buy or sell price. A level 5 investor is someone who is relatively sophisticated and invests on their own. They learn to prioritize safety, security, and comfort as a level 4 before venturing into real estate. The wealthy mindset then refer level 4 to 5 to what is known as business broker. At the moment we will approach someone selling their business, we were not going in there to buy anything because we didn't have enough money. For example, we were going in there to investigate the transaction. We are reading financial reports, assessing companies, and looking for what we call the twist. In other words, is there something the owner of this company doesn't perceive that we can take advantage of and profit from? This demands financial knowledge. We must be able to read financial statements. Level 5 investors are those who desire to close their own deals and start their own companies. In other words, they strike deals for themselves. It is higher level of sophistication, an insider rather than an outsider, which is the case for the majority of level 4 and lower employees. To become a level 5, we must master critical talent known as negotiation, but the wealthy mindset refers to it as knowing how to sell. Selling is the ability to persuade someone to alter their decision in a peaceful, curious manner, because every seller wants the greatest price and every buyer wants the lowest price. We must eventually come to a point of discussion. That is why the ability to negotiate points through red herrings and persuade others to change their minds is a valuable skill. Even if our first businesses we purchase is a small, for example, laundromat, Let's say that it does not pay well, but we learned a lot by negotiating the sale, researching the company, determining what price to pay, what we could sell it for, and what terms we could get. And even if we don't purchase it, we can still learn just by reading. And I recommend everyone to do that. And you'll be surprised, because that's how I got started with our company, right? In our real estate. That's how we obtained the first real estate, where we started reading and we started, learning about real estate. And so there's a lot of information out there, okay? And we're providing that inside our community as well. But we always encourage everyone to go out there and look for mentors as well, and keep Master Investor one of your mentors about money, business, and investing. Always come back and check on the information here, because then you can relay that with whatever other mentors you're dealing with, right? To make sure that you stay aligned, because we are the authentic brand of money, business, and investing. Our profit comes from buying, not selling. This is a crucial lesson for those who purchase a real estate with the intention of selling it once it increases in value. That is gamble or speculation. That is really unsophisticated method to invest. We always recommend to invest with facts, no speculation, no opinions. Stay away from opinions. We can view the opinions, we can listen to them, but our decisions and return on investment is measured with facts of the financial statements of the current moment and the past performance. Level 6, the sophisticated investor. We are now on level 6. Level 6 refers to sophisticated investors. A competent investor can afford to pursue riskier investment techniques. They can accomplish this because they have strong cash flow management skills. A knowledgeable investor doesn't diversify. He or she is really concentrated. A sophisticated investor understands tax, corporate, and business rules. Many people are unaware that the majority of their income is generated through what the layperson refers to as a loophole. The sophisticated investor understands how real money is made. They can read financial statements and have an excellent staff of accountants and attorneys. They understand how to structure the transaction such that they maximize their profits. The average investor frequently claims he or she is going to buy a stock at $50 and it is going to go up to $100. So he or she will make $50. A knowledgeable investor isn't concerned about capital gains. They are interested with cash flow and how much of that money can be transferred from the investment into his or her pocket with as little taxation as feasible. These are some of the things a sophisticated investor understands that other investors do not. This type of investor also recognizes the market's unpredictability. In other words, if a stock prices rises, they are pleased. Okay, they don't care about going up. They understand it goes up and down. They're also pleased when stock and real estate value falls. For example, if a stock is trading at $100 and they are scared it will fall to $50, they may short it. This is what drives most typical investors nuts. An average investor will ask, what do you mean short a stock? A short sell is when you sell shares you do not own. Here we are with no money in the market. XYZ stock is priced at $100. We go to our broker and ask, would you mind shorting that stock for me? This means they take someone else's stock and sell 1,000 shares for $100. We now have 100,000 in our account and owe the broker 1,000 shares. If the stock price drops to $50, we purchase back those shares with $100 and return the 1,000 shares to the broker for $50 or $50,000. We retain the difference. We are literally making money for nothing. When people remark it takes money to make money, we respond, well, that is because the poor mindset does not know how to play the game. Now, have shorted stock and it's going up. That was one of the most difficult days of our lives, since we had to buy back with money we didn't even have. We assure all that learning experience was invaluable, since it truly woke us up and inspired us to learn more. To summarize, a sophisticated investor, they have excellent personal cash flow management and fundamental skills. They also understand how to deal with market volatility by employing short calls, straddles, put up options, and other strategies. The main distinction is that they still not diversify. Diversification is an average investment approach for their mindset, right? Because they think, and we always recommend here at Master Investor, that once we get excess of cash flow, you need to diversify among the 5 different asset classes to hedge for inflation or protect ourselves from down economies. Because if you just have your eggs in one asset class and that market crashes, then you can lose everything in that moment. So it depends on what type of assets you have, but the best thing we can do is to diversify and have different assets that are healthy assets, that are sound, that are creating passive income and capital gains income on autopilot. To get wealthy, we must be wiser than the ordinary investor. It is a game of winners and losers out there. And being second best means you are the loser. That is why we need to recognize whether we are playing the game to get wealthy or investing to become secure, comfortable. Diversification is acceptable as long as it is safe and pleasant. In fact, it is recommended that we diversify. However, in order to get wealthy, you must be intelligent, focus, and have a very narrow perspective on the marketplace. We know people who represents the 10% in 15 city blocks. In other words, we discover 15 city blocks. He discovers 15, this individual, for example. This is a case study. Discovered 15 city blocks and owns 90% of the real estate within that region. That is why diversification among the 5 asset classes is essential. Diversifying only in one asset class is risky. But if we want to be wealthy, we must focus and diversify among the 5 asset classes that exist to create excess of cash flow. And once that begins to pour in from our businesses, then we can redirect that into our asset column even more. Starbucks, for example, focuses on a single cup of coffee and is the greatest in the world. McDonald's is the best in terms of average hamburger quality, but McDonald's is not just in the business of hamburgers. McDonald's is in the business of real estate. And many people don't know this. McDonald's is the wealthiest real estate company that exists in the entire world. They hold about $31 billion in assets, real estate. So they own every single corner, every single McDonald's that you see. They own that they control that real estate, and they obtain that real estate with the bank's money. So at the end of the day, they sell the franchise for $1.6 million. They get that. They get royalties. They get also the payment from the lease for the rent. And so they get that entire land for free because the franchise, the person who purchased the franchisee from McDonald's, the new owner of that franchise, pays McDonald's Corporation for rent and royalties and so forth, and $1.6 million at the beginning. So McDonald's is getting that property for free. You see, that's making money from thin air, legally for free. Those are freedom units. And in return, makes McDonald's the wealthiest corporation in real estate in the entire world because of that genius idea and that strategy. That is a capitalist strategy. That is why to be wealthy, we must be in the top 10%, which requires focus. That is how we take 90% of the money. This is one of the financial principles. Regardless of our industry, we can currently discover a place as a businessman or businesswoman. We have a specialty in some of the tiniest oil firms, mining companies, and real estate companies, and we are growing them. That is our specialty. We take a little niche and make it big. That is the reason why we say we dream big, start small, think big, take daily steps, have good fundamentals, and make it grow into a huge asset. Our suggestion when it comes to wealth, there is the 90-10 rule. That guideline states that we must be in the 10% to make 90% of the money. The 90-10 rule applies virtually universally. 10% of the golfers earn 90% of the money. 10% of the movie actors earn 90% of the money. 10% of the network marketers get 90% of the money. 10% of investors make 90% of the money. If we want to play the game, we must focus. To win the game, we must place in the top 10% to earn 90% of the money, which is why we recommend dream big, but start small. Level number 7, the capitalist. This is the inside investor. This is the master investor right here. The 7th and last level of investor is known as a capitalist, and this is our favorite. The wealthy mindset encourages us to pursue a career as a capitalist. What is the distinction between a capitalist and everyone else? Simply said, a capitalist excels at what he or she does to the point where people pay us to do it. In other words, Warren Buffett is such an excellent investor that people will willingly give him their money to invest. That is why we cringe when people say it takes money to make money. That has not been our experience. When someone has a high hand, they do not need money. People will throw money at them to make deals with them. The ultimate goal of financial literacy is to be able to avoid using our own money. In fact, all we have to do is create and think, and people will pay us to accomplish stuff. For example, when we announce that we are starting another business, people practically come up to us to give us money since we have a track record. This doesn't imply we always make money. The same applies when we write a book. Many people have asked, what is the secret to become a great author? Well, we tell them, or I tell them, I am a capitalist. We don't consider ourselves an author just because we own a company that produces financial education and write books. We consider writing books as a business entrepreneur. Why would we create a book if we didn't believe we could make money from it? Again, the truth is that 10% of authors earn 90% of the money. The reason is an attitude. It distinguishes between being an author or an employee and a business owner or an investor. A capitalist is so competent at what he or she does that they can use other people's time and money. We can either hire or have individuals volunteer to work for us. Capitalists have one primary skill: the capacity to save money and make more money from it. If we know how to take money and grow it, we will attract even more money. That is known as good stewardship. The higher our financial intelligence, the easier it is to make and attract more money. Many people now believe that the word capitalist is as offensive as the word communist to others. However, let me clarify the two systems. A communist system is basically free of capitalism. A capitalist understands business ownership and financial success. The communist believes that capitalists are bad, so they ban capitalists and the government constructs all of the houses and regulates all industries. And everyone knows what happened to communism. It is practically failed. Communism was a system aimed to avoid exploiting workers, which was a wonderful idea in theory. The difficulty was that most bureaucrats don't know how to run a company because those in charge are professionals and no inside investors. They're employees. They have the poor mindset. They're not capitalist. What kind of investor would we like to be? After seeing the poor mindset person struggle and the wealthy mindset person seek the next investment opportunity, we made up our mind. We are mentally prepared to become an inside investor or a capitalist or a master investor known as the capitalist, right? And we hope all partners in our community here at Master Investor to choose this level 7 of investor. What kind of investor do we want to be? If we are a true inside investor, it makes no difference whether the markets are rising or falling. A true inside investor does well in every market environment. In other words, our success depends on us rather than the market. As we can see, everyone fits onto one of the 7 investment tiers. Some levels keep the poor and middle class where they are, while others help people become affluent. Our intention is not to argue one level superior to another. It is up to each member to decide where we want to be. Our argument is that our determination to obtain the financial education required to succeed will determine the type of investor we become. We have recently learned about the first two aspects of obtaining our own financial education. Our intention is not to argue one level is superior to another, like I mentioned. It's just to shine light on which levels exist so that we can choose which path we want to go when it comes to building our wealth. Know the 6 basic rules of investing. Learning the fundamentals of any subject is essential regardless of age. People who play golf have most certainly taken a golf lesson to understand the fundamentals. I'm sure Michael Phelps had a swimming lesson before becoming a world champion swimmer. Unfortunately, most people do not learn the fundamentals of investing before investing their hard-earned money. Rule number 1, determine the type of income we are investing for. Most people simply think about making money. They do not comprehend that there are several types of money to work for. For years, the Master Investor brain has taught us that there are 3 types of income. There are 3 types of income called, number 1, earned income comes from a job, right? An employee or ordinary income, right? And the next one is capital gains income, which comes from investing. And the next one is passive income, which also comes from investing. If you want to be wealthy, work for passive income. Rule number 2, convert ordinary income to passive income. The majority of people begin their lives as employees earning average wages. The path to wealth creation begins with recognizing the many sources of revenue and then turning our earned income or your earned income into other types of income as efficiently as feasible. Rule number 3, without giving it to somebody else, take control. You invest in it. You're taking decisions and you're controlling and you're incorporating your company. You control those companies because you own them. Rule number 3, the investor is either the asset or the liability. The investor is often more at risk than the investment. As previously stated, a lack of financial education increases the investor's risk of making costly mistakes that they would not have made if they were financially literate. Rule number 4, be prepared. Most people try to foresee what and when events will occur. A true investor is prepared for anything that could happen. Rule number 5, good bargains attract money. One of my primary concerns as a new investor was how I will raise funds if I discover a good deal. Getting money is the simple part. The difficult part was finding a good deal. Rule number 6. But now it's easier than ever because we have the internet available more than before, right? We have AI and we can find great deals online all the time. So invest in your financial education so that you can access those deals. Rule number 6, learn how to evaluate risk and reward. To become a good investor, we must learn to balance risk and return. Investing is not equivalent to gambling. Gambling is the act of foolishly turning over our money to someone else to invest it for us. Good cash flow investments are built on financial education. Conclusion, you have made crucial investments simply by taking the time to read this article. If you're having this on via email, and if you're watching this on our live stream, then you're looking at it on your screen right now. If you're hearing this on our podcast, then you can also have this article be sent to you via email, so you can go to our website and subscribe to our newsletter. Whether we agree or disagree in today's environment, the most important thing we can do is to invest in ourselves and our education. The investor's success or failure, money or poverty is entirely determined by his or her intelligence. A sophisticated investor will make millions and amateurs will lose millions, or the uneducated will lose millions. Once we have decided on the style of investment that interests us, there are numerous options for furthering our education. We can take online classes, participate in local workshops, or attend seminars, reach out to industry professionals and pick their minds. Well, we all had to start somewhere and ask for support from mentors. If there if they are excellent people and have time, they will be pleased to talk with us about getting started. The next step in financial education is to take action. We have the freedom to choose our classes, lectures, mentors, and seminars. Our education will never be completely effective unless we use it. And every time we learn something, right, we use what we have learned. Get out there and check out the deals, make offers, sign the deal, and begin to acquire your first asset. If you never made money online, if you want to start your digital company, then make sure to click the link in the description so that you jumpstart your entrepreneurship career and begin to invest for passive income. I appreciate you joining me on this amazing talk on money, business, and investing. Start investing in high quality financial education. I will see you inside of our inner circle. If you have any questions, drop it below. Any feedback, I appreciate it. And remember that we recommend all of us here at Master Investor to become level number 7, which is a capitalist, to become a level 7, which means that we are a capitalist investors. Okay. We are active investors. We are inside investors. We raise capital and we understand how to make money work hard through sound investing. Bringing the good and bad news of money, the business principles that work in on economies. Talk to you in the next podcast. Stay extraordinary and wealthy. Bye for now. I knew that was going to be a little long because when I did the article, I have to correct some things, by the way. When I did the article, I knew, look, almost an hour exactly. I knew it was going to be long, but I thought it was important to cover this. I'm glad I did it because that stays there forever. It came out really good. All right, so I got to go get some dinner. I'm going to play some podcasts as I go get dinner. And I got to work out too. But I'll leave the podcast on here and I'll be back soon. 1 second. All right, I'm going to write down this. What level of investor should we be? Okay. Get our ebooks. Now I do the podcast live so that I encourage and inspire you to get your podcast going to ebooks and courses, because this is also a digital asset, right? It stays up forever. It's playing 24/7, accessible worldwide. I have a call of action and I'm providing value and something that the world needs, which is financial education. Okay. Okay. Okay, let me go back to. Let me see here. Okay. Good. All right. That's it. Let me see. Yeah. All right. Good. All right. It's published. That's it. All right. I got to go get some dinner right now. And then let me see what else we have here. Wait, I need to fix something here too. Okay. There's, let's see where the typos were. right, let me see. All right, good. All right, let me see what else we have here. Let's see here. Okay, not to start. Let's see. So, Master Investor Company, happy to be here again with another valuable video on business and investing. Today, we're going to be speaking about what is the business and investor triangle. I'm going to give you the 8 elements that is required in order to build a successful business, and it is also required for you to tell whether an asset is a true asset or no. This will allow you to build great wealth because every business that is successful must have these 8 elements. All right. Make sure you're subscribed to our channel. If you're hearing this from our podcast, then also please subscribe to our podcast and make sure that you leave a comment below. If you have any questions, we're going to come back and answer those for you. I appreciate your time in business. And if you're new, welcome to our community here at Master Investor. Our mission is to elevate the financial well-being humanity through high-quality financial education made simple with lucrative opportunities to build passive income and true wealth. All right. As we've been speaking about this week on why saving is a bad strategy, because it is impossible to become wealthy and truly rich by saving money. You must understand that money is not longer real money. And this happened back in 1971 when President Nixon separated the gold standard from the US dollar. From that point on, money was created with debt and it's not longer real money. So we can say that money is fake, money is paper money, is monopoly money. And we must understand that money has to move from a cash flowing asset to another cash flowing asset in order to maintain its value. Because the more the Federal Reserve Bank prints the money on a daily basis, it loses the value. Okay, it goes back to its intrinsic value, which is zero, right? So if you look at the graph of the dollar, it has lost about 80% of its value since 1971. However, inflation makes the rich richer and makes the poor poor because we understand the new rules of money. We understand that money is an idea backed up by confidence. There's nothing backing it but just the confidence of the economies around the world. So we can say accurately that it does not take money to build passive income. What it takes is knowledge. Knowledge is the new money. So if you have financial education, your financial IQ rises and you can solve financial problems. And the bigger problem you solve, the more passive income you'll have and the less risk you'll have. Everything has its risk, but it can be calculated because of your financial education. It allows you to minimize that risk, okay? And that's why the 8 elements of a successful business are important for you to understand and use when you are doing business and investing, okay? Because it's going to help you build a successful business, and it's also going to tell whether the business or investment that you're going to acquire is a bad or a good business, all right? Um, Make sure you visit our website, masterinvestor.education. You're going to find products. We have ebooks, we have digital courses that can literally change your life today, because our goal is to elevate the financial well-being of humanity. So our financial education is made for you to understand and take massive actions with steps that will guide you through your entrepreneurship journey, okay? And remember, the more we talk about business, the better we're going to be at investing, because investing is business, okay? So let's dive into our blog. You can go to, I'm going to put the link in the description of this video blog. If you're watching this on YouTube right now, then you can just take a look at the description if you want to read it, okay, instead of listening to it. And you can do so. Just visit our website. We have it available to everyone. So we just released this about 50 minutes ago, okay? So let's dive into today's topic. What is the business and investor triangle? When building a business, we must understand the elements required to build a successful business. Also, by knowing these elements will give us an unfair advantage. The business and investor triangle is one of the keys to great wealth. It is very important to us because it gave structure to our ideas. There are many people with great ideas, but few people with great fortunes. And that is why this is very important, because it's going to allow you to bring your ideas into the real world by building a successful business around your great ideas. The business investor triangle has the power to turn ordinary ideas to great fortunes. It is a guide to taking an idea and creating an asset. Today, I own interests in several different companies in completely different industries because I use the business and I triangle as a guide. While you don't have to own as many companies as Master Investor Company does, you could, by following the same outline in the business and triangle, can acquire different companies and build different investments that are producing passive income even while you're sleeping, okay? There are 5 different asset classes that exist, and diversification only makes sense when you do it among those 5, okay? You gotta do it at least more than the 3 asset classes, okay? There are 5, choose 3 or 4, and then learn how to build or acquire an asset that produces passive income, because it will help you during inflation, and also it will hedge even when the economy goes down. A true master investor knows how to build and acquire great assets at any time, okay? And we also know how to cash flow, because we have assets that produce passive income in bad economies. So we know how to see opportunities in bad economies, and our assets that we acquire before the economy crashes it still produces passive income even during bad economies. That's what's important, to diversify in more than 3 asset classes, so you don't have any issues when the economy crashes. Remember, here at Master Investor, we give you the knowledge so that you prepare for any type of market. And we're not just going to predict the market, because we know that the market goes up and down, and we're here to build passive income. So people that are relying on capital gains income, then they're worried about the market, okay? And we're not going to do that, because our main focus is to build your asset column with real assets that produce passive income, okay? So when people invest, they invest for 2 things: capital gains or passive income. Majority of people, because they lack financial education, they build and they try to acquire capital gains, which is more risky than building passive income, because you have to rely on the market, and nobody controls the market except the companies. And the economy goes up and down. That's what you must understand. So if you know that, then you focus on building passive income that will do good in any economy, okay? And it's very possible, because we do it here at Master Investor, and we have our associates and partners that also are having great success when we build passive income with real assets, all right? So as you can see, I have a diagram on the screen. It has the triangle with the mission on the bottom. It has the team on the side, the leadership on the other side, and then from bottom up, you'll see cash flow, communications, systems, legal, and product. Okay, we're going to go through them quickly. You can read the entire blog on our main page, like I said earlier, if you like to do that. However, I'm going to briefly go through them, and we're going to have a great dialogue. You're going to learn a lot in this video. I'm going to give you the 8 elements in detail that you need to understand in order to build and acquire great businesses, okay? Mission. A business needs both a spiritual and business-driven mission to be successful. Especially in the beginning, when we explain the diagram, we always begin with the mission, since we know it is the most important aspect of the triangle. You will notice it is at the base, or the foundation of the triangle. If the mission is clear and strong, the business will weather the trials every business goes through during its first 10 years. When a business forgets its mission, or the mission is no longer needed, the business begins to die. What is the spiritual and business mission of the business? The mission of a business needs both the reasons to succeed. Many new entrepreneurs start a business to only make money. Just to make money is not a strong enough mission. It does not provide enough fire, drive, or desire to keep going when times get tough. That's why I always say you got to focus in what types of problems are you passionate about solving in the marketplace, right? Because you want to be doing your business not just for the money, right? You want to be profitable, you want a cash flow, you want to get wealthy, but you got to be solving a problem. You have to be acquiring financial education so that you solve bigger financial problems. And when you look at the market, there are always problems to be solved. So it's a matter of determining what type of problem you want to solve, or problems, right? You can solve more than one problem. That's okay. Don't get paralyzed. Just do something and take massive action, but make sure that you have a spiritual and a business mission. Like, what is your bigger why? Okay. When it came to the spiritual component of the mission, look at the founder of Ford Motors. As an example, Henry Ford was a man driven by a spiritual goal first and a business goal second. He wanted to make the automobile available to the masses, not just the rich. That is why his mission statement was democratize the automobile. When the spiritual mission and business mission are both strong and in line, the combined power builds huge, successful, and wealthy business. Although the mission of a business is hard to measure, impossible to see, and for all practical purposes, intangible, most of us have experienced it. We can identify the mission of someone who is trying to only sell us something for a commission just as easily as we can tell when someone is trying to actually meet our needs and be authentic to their message, right? What is the type of information that you are consuming every day? What are you buying? Why are you buying that? You know, do you need that? Are you doing it because you're emotionally influenced by the salesperson? Are you making the right decisions when you're investing in any business that you're involved today? Are you doing it for the right mission? What is the mission of that business? Okay, you gotta ask all of these questions and make sure you align with who you are and your purpose in life. That's why I always say here on our channel that you gotta learn how to live through your purpose in life, because you have something special within, and you have talents and skills that the world wants to see. Okay, we want to see that coming from you, but a lot of people can't find themselves because they're too busy with other people's dreams. So you got to ask yourself, what is your purpose in life? What are you great at? What are your passions? And find problems in the marketplace that you're passionate about solving, and find a product or build a service that you can solve that with a system of systems, because ultimately you will learn by the end of this video that a business, successful business at least, is a system of systems working simultaneously to fulfill the mission, okay, with other people. Although the mission of a business is hard to measure, impossible to see, and for all practical purpose and intangible, most of us have experienced, right? So as the world becomes crowded with more and more products, the business that survive and do well financially will be businesses that focus on serving and fulfilling the company's spiritual mission rather than just increasing the company's revenues or bottom line. Master Investor Company has the following mission: to elevate the financial well-being of humanity through high-quality financial education made simple with lucrative opportunities to build passive income and true wealth. By being clear and true to the dual spiritual and business mission of this company, we have enjoyed a great success. Okay, and we continue to build our asset column. We are giving back to the community. We're doing this live broadcast. We're providing what we are here to do, which is giving you financial education made simple with lucrative opportunities to build passive income and true wealth. So because we are reminding ourselves of that mission every single day, and our partners knows what we hear, then we are able to achieve that. And when times get tough, then we can continue and we are persevering to any type of economy, because we are fulfilling our spiritual mission, not just our business mission. Okay. Some people call it luck. I call it being true to our mission, and as much having the consistency to continue even when the times get tough. Over the years, I have come to believe that the importance of having a spiritual mission and business mission be strong, in line, and vivid always. Remind yourself daily of the mission, and it can be adjusted as the company grows, but we must be clear of the mission daily. Also, we must make it clear and remind the entire company's employees, staff, partners, allies, prospects, and clients of the company. What is your company's spiritual and business mission? Many people will say, I don't have a mission. When I speak to people about starting a business, they get hung up when it comes to the mission. They say, I just want to make money and this business opportunity is available. I don't have a mission. While that may be true on the outside, they have to find the person who doesn't have a spiritual mission that drives them. The mission may have little to do with the product or service. It can be a broad life goal. Here, our mission is, I hear most often, I want to create a business to pass on to their children. I want to create jobs to help their town. I want to create opportunities for themselves and friends so they can grow successful together. Wealth alone can be a burden. I want a business I can run out of my house so they can be with their family more, right? They want to create more freedom. I want a business I can run from anywhere so they can travel. So all of these are spiritual mission statements that people have. They just don't know that that exists. So you gotta find out what is your bigger why and chunk up until you get that big why and find out why you're doing the things that you're doing today. Okay? All of this can be pieces of your mission that will be equally important to guiding your business decisions. Money is the scorecard of a business, but why you are making money is often the spiritual part of your mission. When I managed a restaurant, we had many goals. We wanted to make money and we saw a great opportunity, but there was so much more to it than that. I had a philosophical belief about food and what I wanted to share in the world. Just like everything else in the world, the quality of the input has the biggest effect on the quality of the output. Healthy food needs to be available to everyone to improve his or her quality of life. It is also needed to taste great and be affordable. So I set out to create healthy choices without sacrificing flavor and portion sizes that are always 100% fresh, affordable, and fast. In fact, I have the whole business plan for this franchise that eventually we will attempt to build around the world, which is healthy food, like McDonald's, but in a healthy manner, where you have 10 combos and everything is healthy. You can get shakes, protein shakes, everything basically that McDonald's has, but healthy 100%, okay, to help people better their health. I never understood why there's not a healthy restaurant out there, like fast food restaurant, okay? So, team is the next element, okay? So we're gonna focus on the mission and the team now, okay? Business and investing are a team sport. Investing is a team sport. We always say that here. We will also say the problem of with being an employee and self-employed is that those individuals play the game against a team. That's why I always say this must be a team sport. Okay, when you do business or investing, don't be a greed. Don't be selfish about anything. Learn to listen to others. Learn to acquire a team of people that believe in your mission and see the potential that you have and the value that you bring to the table and put them together to work. You know, one of the hardest things is to do that is to acquire great people around your business, okay? But you can do it by improving your communication skills, leadership, and all the things that we're going to be talking about in this rest of the video, okay? So one of our strongest criticisms of the educational system was in school, they train students to take tests on their own. If a child attempts to cooperate at test time, it is called cheating in the real world of business. Business owners cooperate at test time, and in the world of business, every day is a test time. So, you know, the best thing to do is to start with the team mindset, okay? So you have the mission, now you got to think of the team. Who's your team behind this whole business idea that you have and the business that you're building? A very important lesson. Let me give you an example. There's a woman who has an outstanding recipe for chocolate chip cookies. Everyone loves them, and people are always asking to buy them. So she goes into business. She's excellent at baking the cookies, but when it comes to accounting, sales, marketing, and legal issues, important aspects of any business, she is ill-equipped and no longer enjoys her work. She just wants to bake cookies. Now, suddenly, she's no longer a baker. She's a bookkeeper, lawyer, marketer, and not doing well at any of them. The same thing can happen to an accountant who goes into business and finds out he or she must be a marketer and sales rep too, or the lawyer who focuses too heavily on the legal aspects of the business and prevents his own success. You get the point here. It is next to impossible to do it all yourself. How do you afford a team? I'm often asked how you can afford to pay for a team. The question usually comes from someone who is an employee or self-employed. The answer goes back to the different laws and rules of the different cash flow circle. Business owners pay their business expense first before they pay taxes. That means they have more money before taxes to pay their team and less net income left over for the government to tax. In other words, we play by the rules and laws, and we run everything through our business entities, and therefore we are allowed legally to pay for our business expenses first before we pay any taxes, because it is not smart to pay taxes when you have a successful business. You got to learn how to utilize the laws and have a team to help you be a tax-free entity, which is possible and legal totally, because a tax code is an incentive. It's a package of incentives for entrepreneurs and investors. So there are laws that allows us to do and take tax breaks in certain areas because we're doing what the government wants us to do. Is building a business risky? When people say building a business is risky, they often speak from a point of view of doing it alone. A habit they learn from school, and such statements usually are alleged by people who lack of financial education. In my opinion, no building a business is risky. By not building a business, you are failing to gain priceless real-world experience, incentives such as tax breaks, and you are failing to get the best education in the world. The education that comes from your team of advisors, people who play it safe, lose out on the best education in the world, and they waste a lot of precious time. Time is our most valuable asset. Employees and teams. What is the difference between a business owner and a self-employed? The team and vocabulary that we speak. So as you can see, we have this cash flow circle in front of us. And basically, you are part of this cash flow circle, regardless if you are an employee or a business owner or an inside investor or self-employed. On the left side, you're going to find the employee. Underneath the employee, you're going to find self-employed, and they occupy the left side of the circle. Just imagine, if you're listening to this on a podcast, a circle divided in 4 slices, a line to the middle, vertical, and line to the middle, horizontal. And on the right side, you have the business owner. And then underneath the business owner, you have the inside investor. Most self-employed businesses are structured either as a sole proprietorship or partnership. Okay, they could be teams, but not the kind of team I'm talking about. Just as people in the E cash flow side, the employee, often bind together as a union. People in the S as a self-employed, solo, or specialist circle often organize as a partnership. When I think of a team, I think of different types of people with different skills coming together to work together to fulfill the mission and vision of the business. It's a different type of team, okay? Like, think of an attorney that has a law firm of, of a certain area of the law, and they have their secretary, and they have partnerships maybe with other attorneys and so forth. It's a partnership. It's not really a team coming together. In a union or a partnership, such as a teacher union or a law partnership, the same kinds of people and professions often come together. So that's the problem, right? Because a true business is composed of different types of experts coming together. That's why that's one of the most difficult things to do when you build a business, is to put different people together to work, okay? Because people are hard-headed, they have egos, and we all have feelings. So we need to learn how to manage through all of that properly. And it is possible. The better communicator you are, the better you will do when it comes to business, okay? Because we have to deal with people. A well-managed business will have excellent and committed employees. In this instant, I say the employees are responsible for the day-to-day activities of the business. The E of the cash flow circle stands for employee, and it stands for extension, because the employees are the extension of the business owner and represent the business to the customer. The specialists are typically from the self-employed mindset, highly educated or someone without financial education. The self-employed in the S from the cash flow circle stands for self-employed, solo, or specialist, because each specialist will guide you based on his or her area of expertise. While specialists may not participate daily, their guidance is invaluable in keeping your business moving in the right direction. So you see why we all are part of this cash flow circle, regardless of where you are today. So we do need a specialist as a business owner investor. We just got to learn how to build the right team, okay, with the right mindset. The structure has a better chance of being stable and enduring if the 4 points are working in concert. While the investors provide the funding, the business owners must work with the specialists and employees to develop the business and make it grow so there will be a return on the investor's original investment. Okay. A team is made up of different levels. Let me see. One of the first things we need to look at as an investor is the team behind the business. If the team is weak or lacks experience and a proven track record, I rarely invest. I meet many people who are running around trying to raise money for the new product or business. The biggest problem most of them have are that they personally lack experience and they have no team behind them, a team that inspires confidence. Okay. Another line we need to look at in the numbers of a business plan is the line item called salaries. If the salaries are high, we know we are looking at people who are raising money in order to pay themselves fast salaries. And that's a big no, and it's a turn off for any investor. So when you are attempting to raise capital, you got to understand you're here to solve a problem in the marketplace. You got to take care of that capital with your life, because investors that know what they're doing, we usually understand that our capital must be multiplied. And if we're just seeing being used to pay fast salaries to the entrepreneurs or the owners of that company, then we know there's something wrong with that business, because you must be thinking of the mission first and fulfilling that. And that's what we want to also invest in, because we believe in the mission of the business. Investors, in this case, if the entrepreneurs or the business owners are attempting to raise money to pay fast salaries, the mission of the business is probably to provide them a job with a nice salary. Investors invest in management. They look at the team within the proposed business and want to see experience, passion, and commitment. It is hard for me to believe that there is high level of commitment from people who are trying to raise money to pay their own salaries. Money follows management. We often mention that money follows management in the world of business capital. To succeed, a business must have the proper expertise in key areas. Okay? Your mentor, coach, trainer. To put it simply, a mentor is someone who tells you what is important and what is not important. A lot of new entrepreneurs get caught up in details that ultimately won't really make an impact in the business. Your mentor should be a successful entrepreneur in the business you plan to enter. For example, if you want to start a restaurant, my advice is to find a successful entrepreneur who started their own restaurant and ask them to be your coach or mentor. Okay. The difference between a pro golfer and an amateur golfer: the amateur takes lessons but does not have a full-time coach. That is probably why the amateur pays money to play golf instead of getting paid to play. But when it comes to business, I have several coaches and mentors. Why? Because I get paid to play the game of money. I think that distinction really expresses the importance of a coach or the right trainer. If I want to start a business to make a few extra dollars and just have another hobby, then great, I will do it on my own. But if I want to start a business, create a real successful business, and fulfill my mission, then I get the training and instructor to support what I need. I turn pro. Just like I recommend a business mentor coach, I also recommend a spiritual mentor. Your life will be going through huge changes when you become an entrepreneur, and seeking someone to help you balance will be of great benefit. Everything needs a leader. Okay, so now we talked about the mission, we talked about the team, and now we're going to the next element: leader. Okay, true leaders are not born leaders, and that leads to the part of the business and investor triangle, leadership, because every team needs a leader. A leader's role is to bring out the best in people, not necessarily being the best person in the team. The technical skills of a business are easy. The hard part is working with people. With practice, we will get better over time. That's why signing up for seminars to learn about leadership, to practice leadership and communication will help you tremendously. So never put that to the side. Make sure that it's priority, that you are taking classes and courses, whether online or in person, about leadership and communication. Truly, true leaders are not born leaders. True leaders know what it takes to be leaders and are willing to be trained to be leaders. And training means being big enough to take corrective feedback. A true leader also knows when to listen to others. I have said before that I'm not, let me see here. I rely on the advice of my advisors and team members to help me be a better leader. Okay. So we gotta listen to our team. Okay? They're there to help us build a successful team and also fulfill our mission. So we gotta listen to everybody. Everybody matters in the team, and they affect everything in the business. Okay. Visionary, cheerleader, and pitbull. As a visionary, the leader must keep his or her focus on the corporate mission. As a cheerleader, he or she must inspire the team as it works together towards that mission, as well as herald the success along the way. As a pitbull, he or she must be able to make tough calls regarding issues that distract the team from achieving the mission. The unique ability to take decisive action while maintaining focus on the ultimate mission is what defines a true leader. With the right mission, team, and leader, you are well on your way to building a strong business. Okay? Without leadership, there's no mission. Listen more, observe more, and talk less. If people are only talking and no one is listening, the business has very big problems. Okay? Cash flow management. Now we move to the next element, which is the most important words of business and investing, cash flow. Okay, now we talked about the mission, we talked about the team, we talked about leadership. Now we're going to cash flow. Cash flow management is a fundamental and essential skill if a person truly wants to be successful in the business and investor triangle. So if you want to build a successful business, you gotta understand cash flow management. I learned to read financial statements of other companies. In fact, I spend most of our time teaching others to be financially literate. Financial literacy allows you to read the numbers, and the numbers tell you the story of the business based on facts. If you ask most bankers, accountants, or loan officers, they will tell you that many people are weak financially simply because they are not financially literate. It is shocking to see a perfectly good business go down just because the owners are not financially literate. Many small business owners fail because they do not know the difference between profit and cash flow. As a result, many very profitable businesses go broke. They fail to realize that profit and cash flow are not the same things. We must understand the importance of cash flow management. Business owners need to see the two types of cash flow if they want to be successful. There is actual cash flow and there is phantom cash flow. It is the awareness of these two cash flows that makes you rich or poor. One of the skills as an entrepreneur and investor is to learn how to recognize the difference between these two types of cash flow. The more you apply this information in real life and acquire more financial education, people begin to sense the difference. The more you play this game of money, the wealthier you will become. You become richer because your mind begins to sense the often invisible phantom cash flow that the financial educator cannot see. Okay, the ability to run a company from financial statements is one of the primary difference between a small business owner and a big business owner. Cash flow tips. Cash flow is to a business what blood is to the human body. Nothing can impact a business more dramatically than not being able to make a payroll on Friday. Proper cash flow management starts on the first day you begin your business. When I began building Master Investor, we agreed that no purchase would be made if it were not justified by increasing in sales. In fact, we often talk about our strategy for increasing book sales and so forth, because it is important that you take your business serious, and the cash flow, even if it's one sale per per day on the first time of doing business, you got to take that as if you're making millions of dollars and manage it as if it was already a wealthy business, because you're going to go far like that. Good cash flow managers review their cash position daily, looking at cash sources and needs for the next week, month, and quarter. We have to plan ahead. So even when we're getting receivables or we're getting sales coming in, we're already planning what we're going to do with that capital and how we're going to increase sales, utilizing that capital to acquire more assets, whether it's an asset under that existing business or diversifying into a different asset class, to another another asset that produces passive income. Okay. Okay, let's move to the next one. Communication. Okay, that will be the next one. So we have mission. We talked about team, leadership, cash flow, and then communication. The better communicated you are, and the more people you communicate to, the better your cash flow will be. So you got to learn how to communicate with others. Therefore, communication management is the next level up on the business and investor triangle. To be good at communication, you first need to be good at human psychology. You never know what motivates people. Just because something makes you excited does not mean it makes others excited. To be good at communication, you need to know what buttons to push. Different people have different buttons. Many people are talking, but only few are listening. The world is filled with fabulous products, but the money goes to the best communicators. Cash flowing into your business is in direct proportion to communication flowing out. In other words, the more you communicate and the better you communicate with people, the more you will have in cash flow. And the more profit the business will make, and the more cash flow as the owner and investor you will have, okay, aka passive income. Whenever I find a business that is struggling, it is often a reflection of poor communications going out, not enough communications going out, or both. In general, I find a 6-week cycle between communication and cash flow. Stop communicating today, and in 6 weeks, you will see an impact on your cash flow. Okay. A public company has increased communications problems. It is like the two companies in one for the public and one for the shareholders. Communication to both groups is vitally important. When I hear people say, I wish I had not taken a company public, it usually means that they are having shareholder communication problems. As a general policy, we should attend one communication seminar a year. I continue in that tradition. I have always noticed that soon after I attend the seminar, my passive income increases. Raising capital. All of these topics, raising capital, interest entrepreneurs the most. Most businesses do not get off the ground because the entrepreneur does not know how to raise capital. Raising capital is the entrepreneur's most important job. It does not mean that the entrepreneur is constantly asking for money from investors. What it means is that an entrepreneur is always ensuring that capital is flowing, and either through sales, direct marketing, private sales, institutional sales, investors, and so on. Onto the business system is built, the entrepreneur is a system to keep the money flowing in. At the start of any business, keeping the cash flowing in is the entrepreneur's most important job. Don't argue with people who ask for advice but don't want the advice you are giving them. End the discussion immediately and go on minding your own business. Learning about sales is important, so practice sales will be useful as sales is number one skill of an entrepreneur. Being able to communicate effectively with as many people as possible is very important life skill. It is a skill worthy of annual updating, which I do by attending seminar. If you want to be in the business owner, your first skill is being able to communicate and speak the language of the other three players in the money game: employees, self-employees, and inside investors. Fear of selling. Get through your fears and the world will open. Give in to your fears and the world will get smaller every year. After you begin to overcome your fear of selling, you can join Toastmasters or Skillshare organization to learn to overcome the fear of speaking in front of large groups. Skillshare is a great company where you can, it's like Netflix. Basically, they have different experts giving classes, and I added a link in the blog so you can actually go in there and find it. And just go there and sign up. And whatever topic you want to learn about, you're going to find a class. And it's very great, actually. I use it all the time. If you're thinking about starting your own business, I recommend those same two skills. First, develop the skill to overcome your fears, to overcome rejection, and to communicate the value of your product or service. Second, develop the skill of speaking to large groups of people and keeping them interested in what you have to say. There are speakers that no one listens to. There are salespeople that cannot sell. There are advertisers that no one watches. There are entrepreneurs that cannot raise capital, and so forth. If you want to be successful as a business owner, don't be any of those people. The difference between sales and marketing. While we are still on the subject of communication, know the difference between sales and marketing. Many business owners suffer with low sales or poor communication with staff and investors. If a business has a strong and convincing marketing, the sales will come easily. If the business has weak marketing, the company must spend a lot of time and money and work very hard at gathering sales. Once you learn to sell, you need to learn how to market. As an S quadrant business owner is often good at sales, but to be successful in the business world as a business owner and as an investor, you must be good at marketing and well at sales. Sales is what you do in person, one-on-one. Marketing is sales done via a system. Most self-employed are very good at one-on-one sales. For them to make the transition to as the business owner, they need to learn how to sell through a system, which is called marketing. So you gotta learn how to use marketing to sell even without selling. That's why I say the job number one of an entrepreneur is to raise capital. And this number one skill is to sell without selling, using systems that do the selling and telling for you. Okay? Otherwise, you're going to be attached to that business forever. You want to be on the business, not in the business. You want to build a business that produces passive income, that solve any problem in the marketplace, and now you can move and you have freedom. You have creative freedom. That's the reward. Once you achieve your daily mission and you are fulfilling that successfully, your reward is total freedom and passive income, aka cash flow. Okay, the business making profits, paying all the expenses, and at the end of all of that, you still have passive income, aka cash flow. Okay, and we have external communication, sales, marketing, customer service, investor relations, public relations, internal communication, sharing wins and successes with your entire team, regular meetings with employees, regular communication with advisors, human resources. Okay. Communication is a two-way street. The role of the leader is to keep the team communicating. Most people think that leaders' job is to solve problems. I do not believe this is true. The team will solve the problem. The leader simply gives the team the tools to solve the problem, and the greatest tool is communication. That's why I say you gotta learn how to build a system of systems and communicate your mission to the team that you're building together so they can help you fulfill that. And you want to be detached from it, okay, because you're creating freedom for yourself. Communication with your customer. I believe that the world of social media has greatly changed the way external communication is done, but hasn't changed what should be said. Social media allows you to blast out a message to millions of people in seconds and allows you to gauge your community's reaction. By closely observing which messages resonate with your followers, you can quickly fine tune what your message is until you have hit the perfect chord with them. Okay. Now we move into the systems. Okay, so we have mission, we have team, leadership, cash flow, communication. Now we have systems. So the human body is a system of systems, so is a business. The human body is made up of circulatory system, respiratory system, digestive system, and so on. If one of those systems stops, there is a good chance the body will be crippled or die. The same is true with a business. A business is a complex system of interoperating systems. In fact, each item listed within the inner triangle of the business and investor triangle is a separate system that is linked to the other systems and into the overall business that the triangle represents. Okay. A good business person can manage multiple systems effectively without becoming part of the system. A true business system is much like a car. The car does not depend upon only one specific person to drive it. Anyone who knows how to drive it can do so. The same is true with a business owner business, but not necessarily for a self-employed business. In most cases, a person in the self-employed business is the system. No one else can drive that system for them or that business. Every business, whether large or small, needs to have systems in place to enable it to conduct its day-to-day activities. The better the system, the less dependent you become on others. Look at McDonald's systems, it is the same everywhere in the world and is run by teenagers. Okay. Entrepreneurs need a process to keep reevaluating their systems and to keep the human element present in business. This is where the earlier chapters about team, mission, and leadership become so important. Now let's move to the next component, legal. This level of the business and investor triangle, legal management, was one of the most painful lessons we can ever have to learn. We can identify a serious flaw in a business if the entrepreneur fails to secure the legal rights to the business products before start producing them. More specifically, if the entrepreneur fails to patent some of the products, he or she fails to do so because they believe the legal fee of a patent attorney's fees was too expensive or it's too expensive and not important enough to spend that much money on, then that's a big problem. You're going to find yourself wasting a lot of time because another company can come along and take your idea and they can just go ahead and file a patent, they can trademark and so forth, and you lose all the rights of your business. It's that simple. That's why a piece of paper, a legal piece of paper, paying an attorney that knows what you need done is important. You need a business attorney in your business. These attorneys, if they are good and ethical, will protect your ideas and your agreements from intellectual bandits, people who steal your ideas and therefore your profits. The world of business is filled with stories of smart entrepreneurs with great ideas who begin selling their products or ideas before protecting them. Okay. Protect your ideas. Avoiding legal problems. Some of the most valuable assets you can own are the intangible assets called patent, trademarks, and copyrights. These legal documents grant you a specific protection and ownership to your intellectual property. Licensing your rights to a third party is a perfect example of your assets working for you. However, legal issues can also surface in almost every facet of a business. Obtaining competent legal counsel is very important, not only as you are forming your business, but as an ongoing part of your advisory team's activities. Legal fees may seem expensive at first, however, when you compare them to the cost of legal fees from lost rights or subsequent litigation, it is much less expensive to set out your agreements properly in the beginning. This is another area where franchises and network marketing can help you jumpstart your business. A small price to pay. Legal is such a large topic, it touches everything in every part of your business. Before you start protecting your IP, you need to decide what type of legal entity you need to best protect yourself personally, your business, and to get the greatest tax benefits. Okay. And the last element that we're going to be talking about is product. Okay. Focusing on the one thing. As you can see from the business and investor triangle, product takes up the smallest area of the triangle, which is at the very top. While product is important, it is the least important integrity. The world is filled with great products, many of which never make it to the market. The world does not lack product ideas, but the world lacks are great entrepreneurs who can bring great products to life with great teams. Many people come to me for advice on how to start a company or how to raise money for a new product or idea. I listen usually for about 10 minutes, and within that time, I can tell where your focus is. Is it the product or the business system? In those 10 minutes, I most often hear words such as this. This is far better product than company X, Y, and Z makes. I have looked everywhere. Nobody has this product. I have been working on this product for years. I often use the McDonald's hamburger example when responding to these types of people. After listening, I ask, can you personally make a better hamburger than McDonald's? So far, 100% of the people I have talked to have said yes, they can make a better hamburger than McDonald's. My next question is, can you personally build a better business system than McDonald's? Some people see the difference immediately and some don't. I do my best to explain that there are a lot of entrepreneurs out there offering far superior products or services than are offered by the mega rich multinational corporations, just as there are billions of people who can make a better hamburger than McDonald's. But only McDonald's has created a system that has served billions of burgers in a real estate machine. Okay? Because McDonald's is the richest real estate commercial company in the world. They control about $31 billion in real estate. They are not just in the business of selling franchise fast food. Okay. The team makes the product. The product is an important piece of your business. Welcome to another podcast of Master Investor. Glad to be here again with another valuable talk on money, business, and investing. Remember, our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look for opportunities to build passive income and true wealth. I'm going to drop a link in the description so that you can visit our website and download our ebook, How to Build Capital with the Internet, Turn Passive Income On. Whenever you're ready to start building wealth and in your investing journey, or if you have an existing business and you would like to scale that or sell your bottom line, this passive income, then go to our website. There you'll find resources, tools, digital ebooks, digital courses, and much more to help you build passive income and true wealth. Also, follow us on all platforms. Look for the logo. And if you have any questions, let us know. We would like to interact and give you as much feedback as we can as we go through this journey together. Today, we're going to be speaking about the importance of how to pay ourselves first to build wealth. The real meaning of pay ourselves first and the reasons why wealthy people don't save money. Who do people pay first when they get a paycheck? If they are like the majority of Americans, they probably pay the rent or mortgage, grocery, electricity, car payment, insurance, government, to the taxes and other bills first. They're typical paying themselves last. Situation is when they finish paying all the bills and put what's left over, if anything, into their savings account. Then they repeat the process while eagerly awaiting their next payday. The American rat race is that. But we are doing everything wrong if we ever want to escape the rat race. The concept of paying oneself first is an important lesson. It still applies today, regardless of how the world will change. Paying ourselves first will help us create wealth faster. Also, business and investing is a team sport. Getting a bookkeeper with the intention of having a clear understanding of our financial condition, because it is time to take responsibility. The bookkeeper will assist in realizing the way we manage our cash flow, if we are putting anything for our wealth, or what we're doing with the capital that we are handling, right? That's the whole key, to figure out, even before we get that income, we already have a plan of action to make that money work hard for us into an asset, into financial education, things that will improve our bottom line, our passive income. Every penny will show where it's allocated to pay our expenses first. The shortest path to poverty is in paying ourselves last, and the path to wealth is paying ourselves first. Getting ourselves paid first. Started making behavioral changes and choose to pay ourselves and their debts first. Whether it makes sense or not, people set aside a certain amount of money each month and add it to our asset column. Even though our cash flow is less than our bills, we must make sure to give this column top priority by treating it like a cost or expense. In other words, we put ourselves as an expense. You see, a lot of times, majority of people actually put themselves last, and there's no money left after they pay all the bills if they put themselves last. So they have no money to invest in financial education. They have no money to go maybe to network places where are like-minded people. They don't have money to cover an emergency. And a lot of times people end up doing that same pattern the rest of their lives. And that's what we're going to change right here, is to first get your wealthy mindset on and have the spirit of the entrepreneur in you, and then execute actions that align with the spirit of an entrepreneur, and of course the mindset of a wealthy person. Okay, that's why financial education is key, because otherwise fear will kick in when you don't know how to do something. So the way we calculate risk, because investing in business comes with risk. When we're starting a company out, when we're doing any type of venture, we are going to experience risk. And it's all about putting all the pieces of the puzzle working together, aligned towards the mission and the vision of the business, right? So there's risk with anything. However, the more financial education we have, the more calculated risk we can take. We will know exactly whether that is going to work or not, okay? So fear kicks in when a person has a lack of financial education. Okay, so we have to put ourselves as an expense, the first expense, on our expense column. We have to demand that, hey, we gotta get paid first, because it means that we are investing for our future and our freedom. Okay, the only person in the world that will take you to financial freedom and true wealth is ourselves, is you and I, right? So we have to understand that. That's why putting ourselves on our expense column as an expense that must be required to get paid every single month or every time money comes in, then we will become ultra wealthy by applying that method, and we will get out of any bad debt that you feel that maybe is keeping you a slave to pay that payment off. And the way we do it, and we're going to talk about it in this podcast today, is how we can take steps towards covering bad debt, getting out of bad debt. Sometimes we want to have the bad debt. Maybe it's a car, a luxury car that we like to drive. It doesn't make us money, but it's something that we like. So that's considered bad debt. And all we have to do is create or acquire a cash flowing asset that is producing more than the payment of that car. And that way we can pay the car payment with the cash flow of the asset. So we're not working hard to pay for that liability. We enjoy it, and that's the way we do it. The wealthy will always position ourselves in a way that we obtain everything for free legally, and we pay zero in taxes because we're using debt. Debt is how money is created today. That's why debt is tax free. So whether we are using debt for liabilities or assets, we pay zero taxes on debt. That's what's important, to get comfortable using debt to invest for passive income, because it's a perfect way to minimize taxes all the way to zero and be a tax-free entity. The highest expense we all have are taxes. So we can minimize that entirely, then we are on the right track towards unlimited wealth and being tax-free entities, okay, legally. So having a team is critical, okay? So make sure you get a bookkeeper, invest in that, right? So that money that we are getting every single month, because we are paying ourselves first, it's going to go towards our investment team. We need a bookkeeper. We need certain people in place so that we can begin building our assets. And it's better to invest in those people now rather than later, because it's going to cost more money later, because they have to come back and fix something like legalities, right? You have to have your documents properly filed with the state in which you're going to be doing your entity to run your first asset, okay? So talk to a business attorney, talk to a right CPA. A lot of times we can find this as third parties online. So today everybody's going digitally. Therefore, we have a lot of competition and the cost goes down. So you can actually take advantage of those feasible prices online, okay, to file your entity, to handle all the legalities of that entity, ensuring that it's properly filed with the right structure, designated with the right tax designation, so that you can keep more into your packet, right, legally, more cash flow without paying taxes. So when we look at the financial statement, we're going to find that we have an income statement and we have the balance sheet. An income statement has the income column and the expense column. And then the balance sheet has the assets and liabilities. So our goal as entrepreneurs and inside investors, or a master investor, right? Because an inside investor is a master investor, is to focus on building our asset column, to acquire assets that produce passive income and capital gains. At times, we're going to maybe flip a property or something to gain the profits so that we can roll them over into a new asset. But we must keep the gains and the positive cash flow that we're getting from our assets working by investing it in other assets that will produce passive income or capital gains. So the other story of the money world is how the poor people handle their cash flow, right? Because they're getting income coming in maybe from a job, and that's the only way that they earn money. Okay. And I'm talking about the mindset is poor, and then also behavior is poor, because remember, it starts with the mindset. Once we shift our mindset to a wealthy mindset, then we will act differently with money, with everything. Okay. So follow the patterns of the wealthy and rip away any poor habit that we may have. Okay. It's all about shifting our mindset first. So when a person has a job and they have that income from the paycheck, is called earned or ordinary income, and it's taxed at the highest bracket. That's why when the employees get their check, they have taken all the taxes out and other things. About half of their check has been ripped apart, and the government didn't even show up to work. So the employees pay the highest in taxes when it comes to uh, paying taxes on income. Okay, so that's earned income. It's taxed at the highest bracket. So the pattern of the poor will be getting that paycheck and running that through the income column, right? Because it comes into the income column and it goes down to the expense column on the income statement. Um, and it will go down out the expense column to somebody else's asset column. Okay, because every expense that the poor person, or maybe they have liabilities too, so that it will actually go from the job to the money will flow from the job to the income column, and it goes down outside to the liability column, because it has to run through that and pay those payments, and go up the expense column because all the liabilities payments will be listed on the expenses column, and it will go out the expense column to somebody else's asset. if if you're at the bottom, if the person's at the bottom, they have maybe no liabilities and they just have expenses. So either way, the money flows out of their financial statement into somebody else's asset column. And the holy grail is to keep that money coming back to our asset column. Okay, because we are reinvesting and we are acquiring more assets, so we should have good expenses. It's not about shrinking our expenses. It's actually about expanding and having good money habits when it comes to spending money, right? So we have to actually live above our means and expand our assets, expand our passive income. Okay, so we have to grow, and we do not save money, or we do not cut expenses. All we do, we focus on our asset column to build and acquire assets that produce passive income into our income column. And with that income, we will pay the liabilities and expenses. And we will bring that money back as much as we can, bring that back into our asset column, because we can always turn our liabilities, majority of our liabilities, into assets, because it's somebody else's asset column. A liability on our liability balance sheet, that is somebody else's asset on their asset column. So we can always turn the liability into an asset on our balance sheet, and then it still be an asset to that other individual or entity which we do in business, which holds that liability. Okay, who's receiving the payment of that. But I'll give you an example. Let's say we have two Teslas. One you will use to rent out on Turo, an app that is like Airbnb. You put your Tesla there, it rents out every day for $500. The payment of that Tesla is $1,000, let's say a month. 2 days will be required to pay the entire payment of that Tesla, and all of the rest of the days will be positive passive income, right? Positive cash flow. So that Tesla now becomes an asset because it's making us money, and we're still making money to the Tesla company, whoever lent us the money to lease that car or purchase or finance that car. So it's still their asset, and of course it's making us money. So we can always turn a liability into an asset with financial education. You have to be able to see the opportunity and structure it correctly, okay? So let's continue here. It is possible that we are thinking, I thought we were going to share a story, but those are just pictures of the financial statements. As the saying goes, a picture is worth 1,000 words. You can find this article on our website. I'm going to put the link below. Make sure you visit our website and get the ebooks, the 10 new rules of money, and how to build cash flow with the internet, the life changers for those who apply the information that is found inside those ebooks. Okay, you gotta apply it. You gotta turn the information into knowledge. Try to identify some of the difference between the two stories by carefully studying the aforementioned diagrams. Financial savvy people can recognize key differences in the narrative they share. The acts of people who adhere to the pay ourselves first principle are shown in the first diagram. Before we pay our monthly bills, we allocate funds each month to our asset column. The activities of people who pay others before they pay themselves are shown in the second diagram. They set aside money each month for their expenses and use the remainder, which is typically little to zero, to save or invest without financial education. The people in the rat race are depicted in this diagram as being destitute regardless of how much money they earn. Understanding the importance of cash flow can help us recognize the flaws in the second diagram. Because of this, 90% of people put in a lot of effort throughout their lives and depend on government assistance like Social Security once they are no longer able to work. They pay themselves last, which is the cost and a majority of reasons why they have financial trouble in the future and right now in the present. We need the self-control to prioritize paying ourselves first if we want to be wealthy. This simply refers to investing our income in cash flow and assets prior to paying our debts, bad debts, or treating ourselves to something pleasant. As a result, we will earn more passive income, which we may use to buy more assets with positive cash flow. If we do that, we will have more money than we can possibly need. Paying ourselves first is difficult. In fact, it might even be prideful, particularly if the debts are mounting. But to do that, we must cultivate discipline. Okay, so we have to create a plan. We have to learn how to manage the money that is coming in and treat every dollar as our employee. We tell it what to do. We make sure that we are the masters of each and every dollar that goes through our hands, and we tell it where to go work and bring more cash flow back. The 10-10-10 plan is the following. The 10-10-10 strategy is a great plan of action that anyone can implement to begin creating wealth. We divide 30% of our earnings each month in the following ways. 10% for investments. We set aside 10% of our monthly income as a reserve for excellent investment possibilities. Usually we decide to invest in real estate or other assets that produce positive cash flow instantly. 10% emergency. We set aside 10% of our income each month for unseasonable events and unique possibilities. This wasn't an emergency account meant to last a lifetime, instead to invest even more. 10% tithing or charity. And because we firmly believe that we must give in order to get, we set aside 10% of our total income each month for tithing or charitable giving to causes we are passionate about. Generosity is key when building wealth. Changing habits. First, avoid taking on bad debt that we will have to repay with our own time and efforts. We can only acquire bad debt when we have an asset that will pay for that bad debt every month. Reduce our spend it on liabilities until we can have assets that will provide the cash flow to pay for that payment of those liabilities. So there's nothing wrong with having liabilities, but there's something wrong when there are no assets to pay for those liabilities. Create assets first, later purchase the large home or luxury vehicle we want with the cash flow of the business we have built or acquired. Expend our good expenses and invest capital actively. Second, rather than using our assets or saving as a safety net when we run into financial trouble, go ahead and let the pressure develop. As we can see, the poor have bad habits. One of these bad practices is using funds to pay bad debts. Use the pressure to motivate our financial whiz to come out with fresh ways and ideas to earn money with assets, which we can then use to pay our expenses. Bonus, our capacity to earn more passive income will have risen, as will our financial acumen. Let's assume that our monthly income is around 4,000. We will have 3,500 left over after paying ourselves 500 to cover living expenses. We will have paid ourselves 6,000 after a year. To avoid the temptation of spending the money on liabilities, we can even have our bank set this up to happen automatically. The money has to have a plan before we even get it, so that we know where it's going to work hard for us. Do not be a saver if you want to be wealthy. One of the most common pieces of conventional financial advice is to save money. However, most people do not become or remain wealthy through saving. In actuality, saving is a surefire way to lose for the great majority of people. Why? Due to the fact that inflation frequently increases faster than the interest rates savers receive on their money. Their savings are actually losing money the entire time they are in their bank account. While the wealthy mindset, good debtors, we are borrowing that money to invest, which is the savers' money, provided to us by the banks. Let's choose a good round figure like $100 to demonstrate this. By the end of the year, we will have $101.50. If we have that much in savings earnings, the typical interest rate offered by banks today of 1.5%. Unfortunately for the saver, inflation is currently 8.3%, so that they could currently buy for $100 will now cost $108.30. That represents a $6.80 difference. If they multiply that over time, we can experience a significant decline in their money purchase value. Worse still, money is a form of currency. It expires if it doesn't continue to move. That's why the most important words of the business language are cash flow. Sad to say, people who save money never put it to work for them, which prevents them from becoming wealthy. Because of this, we educate individuals to spend money wisely rather than train them to save it. Too much bad debt to get wealthy? Sometimes it takes bad debt to spark the entrepreneur spirit to make better decisions when it comes to spending money. It can help us become creative and invest debt into assets that will produce excess of cash flow, passive income. The following advice will help us get out of bad debt and position ourselves to becoming ultra wealthy. Step 1. First, stop accumulating bad debt right away. Put an end to contributing to bad credit card debt. If you're going to be using your credit card, it's for an asset, it's to build your asset column. So yes, invest debt, invest credit, raise capital for passive income, invest it and put it to work. Treat it as if it's money in your hands, because it is. That's what money is debt. Okay. So, and when we use debt, as I mentioned, it's tax-free, legal. Step 2, to ensure that everything is properly organized and accounted for, make a list of every bad debt or any type of debt we have: credit cards, student loans, vehicle loans, personal loans, etc. And step 3, the next step is to hire a bookkeeper so that we can run away from the reality of our finances. This person will keep precise records each month so that we always know where we stand. And even if we don't want to admit it, we will have somebody to keep us accountable for our decisions when it comes to paying ourselves first and, of course, spending money. Okay. We need to know exactly where our money's going, what are we going to do with the money that's coming in, and we have to put it to work. We got to pay ourselves first. Okay. So once we hire a bookkeeper, right, that's step 3. We go move to step 4. The 10-10 plan is a step 4, right? We have to now make sure we pay ourselves first. We got to put 10% for charity. We have to put 10% for emergency, which ultimately will go back to investing. Okay, you want to continue investing, get in the habit of having an investor, a wealthy investor mindset, and of course, have that entrepreneur spirit always in you. Everything that you see from now on is with the entrepreneur set of eyes. Everything has to be with how can I profit? How can I make positive passive income from this operation, from connecting this deal, okay, from bringing these people together and connecting a deal that is a win-win for everybody, right? We talk about integrity, fairness, loyalty, respect, and ethics. Okay, we gotta keep our hands clean and make sure that all parties are transparent of what we are getting involved with, so that we can all create positive cash flow together and everybody is winning. Okay, and that way the deal will sustain any type of economy and will hopefully last a lifetime and even more. When we do things the right way, when we build and acquire real assets, they will be here forever. Okay, at least until the end of times. So let me continue here. So after consulting with a bookkeeper, we can make the decision to deduct a predetermined portion from each dollar that enter our pockets and set it aside with a plan to invest the money to create cash flow. We start paying ourselves first at this point. Okay, so 3 money banks, right? Piggy banks, whatever you want to call it, can be set up: one for emergency, one for the charitable giving, and one for investments. Each receives a fixed percentage of 10%, totaling 30% of the earnings that we have right now. Remember that we don't have to start with 30%, but we should stick with it each month, whatever we choose, and raise it when we can. But step 5, decide which debts should we pay off, in what order. I'm talking about bad debts, right? Starting with the smallest and working our way up. Pay only the minimum monthly payments on all other debt. After paying off our first bad debt, which is the lowest, move on to the second lowest loan, and so forth. Stay the course. In step 6, keep in mind that we must follow this every month. Ourselves, this month, we won't develop the habit to pass on the wealth. And that won't disappear. Can our wealth construction. Clearly, some individuals understand the phrase "pay ourselves first" when we hear actually hear this phrase "treat yourself first." They believe it to indicate spending money carelessly. In contrast, the goal is to intentionally add to the asset column so that one can invest our money and make it work for ourselves. This is when the saying any money in the asset column stays in the asset column. comes into play. For instance, when we begin to invest, we can start with small deals and work ourselves to bigger deals. It takes the same amount of energy to do a bigger deal than to a small deal, but sometimes we have to start with the small ones to build up the confidence, okay? And there's nothing wrong with that. The important point is that we get started, we execute, okay? So we turn information, the financial education that we're learning, and we apply instantly into our lives. Okay, so at the end of this podcast, what are you going to do? That's the question. What are we going to do? How are we going to create our first or acquire our first asset? We're going to make sure we can read our financial statement and know exactly what liabilities are bad debt, right? What is bad debt? What can be turned into good debt from a liability column, and how can we turn that into an asset, right? That will create passive income. So a lot of times you have resources and you already have opportunities in front of you that you can turn into an asset. So make sure that you know exactly what is the story behind your financial statement so that you understand how to improve it and how to become wealthy fast. Because with the technology that we have today, we can become wealthy very quickly, okay? So do not underestimate the ability to become ultra wealthy fast, okay? Don't underestimate that, because you have to be ready to see the opportunity so that you can cash new trends and we can begin to build that asset column with real assets that produce passive income, okay? And then once we start building that foundation with our first assets, then we can move into acquiring bigger assets. It only requires discipline and financial education, okay? So always strive with the formula of velocity of cash flow. We talk about the 5 different steps. Number 1, acquire a cash flowing asset. Number 2, recoup the capital invested back as soon as possible. Number 3, keep control over the asset. Number 4, invest the cash flow generated into a new asset that generates positive cash flow, passive income. Step 5 is repeat the steps, okay? The wealthy don't reduce expenses, instead, we raise them. This does not imply that do not appreciate finer things in life. Saving money is something that the impoverished do. The wealthy do not make budget cuts. We instead ask, how can we afford that? The duty number of an entrepreneur is to raise capital, and the number 1 duty of an inside investor is to make money work hard in sound assets. Finance strategies to create money that don't involve depleting our asset column is necessary if we want to buy something good for ourselves. Simply put, look for assets that can generate enough cash flow to pay for our expenses and luxuries, including any type of liability. For instance, if we adore high-end cars, we desire fancy cars for a very long time. So we set to work to build an asset that produces passive income. We can explore fantastic assets that generate monthly income, passive income, cash flow to pay for the car. We can acquire anything as a result, increasing our asset column. The key message here is to never increase our bad debt by deducting from our asset column. Keep it in the asset column instead, and keep adding to it so we can buy the goods we want for free, basically, because we're not physically working. The asset's going to be working for us and creating that passive income. Planning ahead for the real estate investments that will make us wealthier is a good idea. It's a good plan as we attempt to get our personal finances in order. So start investing in the different asset classes that exist. Remember, right now there are 5, and one of them is real estate. So another one is businesses, crypto, commodities, and paper assets. Okay, so we have to really focus on diversifying in the different asset classes that exist. That way we hedge for inflation and protect ourselves from down economies. Here at Master Investor, we don't predict the market because we know that the market goes up and down. What we do instead we prepare ourselves for any type of economy, because a master investor will always know how to create positive cash flow with any type of economy. Okay, so the goal is to begin paying ourselves first. Check out the article if you like to see the diagrams, and also if you want to read, uh, listen or read the article, How to Pay Ourselves First to Build Wealth. You can find it on our website and start implementing this strategy. Okay, I hope that this has been helpful today. I'm happy to be here again. We will talk tomorrow, and make sure that you take massive action. Okay, remember, today money is created with debt. That's why debt is tax free, and that's why good debtors are winners and savers are losers. Bringing you the good and bad news of money, the business principles that work in all economies. Stay great and wealthy. Bye for now. Welcome to another podcast of Master Investor. Glad to be here again with another valuable lesson on money, business, and investing. If you're new to our community, thank you for listening to us here at Master Investor. We appreciate your time. And if you're an existing customer, of course, thank you for supporting the brand and becoming partners of Master Investor. Today, we're going to be speaking about the good news and bad news of money, and of course, the business principles of working on economies. Remember, knowledge is the new money. Knowledge is when we have the financial education and we apply it into our real life. So when you learn something, our goal is to go ahead and execute. Okay, that's how we can build wealth fast, and more so today because of the technology that we have available to us on our fingertips. And I'm talking about the phone. It is how I'm recording this podcast today. So think about that for a second. 100 years ago, this didn't exist. So we are living in times where we can communicate with the world with ease and very fast. In an instant, we can be on a live broadcast, on a live video call with somebody. We can send a live voice message through somebody, right? And we can get a response very quickly. So the speed in which things are delivered to one another today is the power that we have on our hands to become wealthy fast. And that amount of speed, okay, because we can make a transaction happen that fast. And it's all about the velocity. Remember that there's a formula that we talked about here in our community, which is called what is the formula of velocity of cash flow? Okay, and there are 5 steps to it. Number 1, because the goal is to have passive income coming in from assets, right? Okay, that's the holy grail. That's how you not only going to be financially independent, but also that's how you're going to create wealth, because is when we are controlling assets that produce passive income, and those assets could be a business, could be a real estate, commercial property. So it could be even a residential property that's creating passive income for you because we turn it into an Airbnb, right? You could start small and work yourself to doing bigger deals or thinking bigger. And we always say, think big and do the necessary to be able to have those thoughts and be comfortable with thinking big. Okay, it's the same amount of energy that we're going to put into something that is smaller size. So if it takes the same amount of energy, the logical and savvy thing to do is to do the bigger thing. It's going to take the same amount of time and energy. So let's think big, right? Because we are here to expand our vocabulary, our mindset. We must adopt the mindset of the wealthy. In order for us to be wealthy outside, we have to become wealthy inside. You have to operate with the wealthy spirit. Okay, you can tell whether someone is operating with the wealthy spirit or the poor spirit by the way they handle themselves around other people, how they speak, how they introduce themselves, what they talk about during the time of conversation with somebody, right? If we want to create massive change in our lives, we have to look at what we're talking about, what we're thinking about. We have to control our thoughts, because one thing that we can control is our thoughts. And the better control we have and the more accurate we point those thoughts to deliver certain types of images in our mind, and that's how we're going to tap into our greatness, because we are deliberately given existence to only the things that we truly want and desire. And we're finding every possible second of our lives to be manifesting that ideal scene. So the question is, what is your ideal scene in regards to money, business, and investment? Remember that money Today's created with debt. That's why debt is tax free. So there are new rules of money. We created an ebook that is called the 10 New Rules of Money. You can find it on our website. You can also find it on Amazon, and you can read it on your Kindle app. So, but I suggest that you go to our website first and check it out from there, because you usually will get additional bonuses that will come with the ebook that you don't get somewhere else. Okay, just by having a virtual office on our, because we have a membership site. So when you go into our website, you'll find the ebook inside of a course. And so you just log into that course and you can view the ebook and download the ebook into your smart device. And you will always have access for that course for the rest of life, forever, right? And that's going to be more valuable as we grow our company and grow our community, because we added more bonuses to that one e-course. So you'll see, for example, like you'll be able to see the ebook, log in, read the ebook, and maybe download another document or watch another video, or we have another bonus inside that course that will help you build your wealth. But the ebook can be downloaded and can be purchased right on our website. Go over there. It's called "What Are the 10 New Rules of Money," or the 10 New Rules of Money, and you'll be able to enjoy this amazing financial ebook that will change your whole perspective about how you see money, business, and investing. Because you need to operate first and foremost with the wealthy spirit, and then you need to have an understanding of the new rules of money. And why are they called the new rules of money? Because the old rules of money are obsolete. Okay, because money has changed, money has evolved in the past decades. New laws have taken place, and they have been enacted. So we need to understand how to become aware of those changes and be flexible and evolve with the money as well. But the good news about this whole change in the laws is that it benefits the entrepreneur and the inside investor, or the master investor, right? So we're going to help you understand everything that you need to know about how to build wealth, how to start seeing passive income coming in, how easy it is to turn a liability into an asset once you understand the 8 elements of a successful business. Okay, and we talk about the business and investor triangle, the master investor triangle, where we use that triangle to determine whether a business that we're building is going to be a great one, whether a business that we're going to be purchasing is a great business, or an investment that we're going to look into to invest in. Because ultimately, an investment is a business. Okay, an investment is composed of business, or maybe more than one business, right? But it's a system of systems making positive cash flow for the investors. Okay, so as a master investor, we always want to reach infinite return on investment, which is when we have recouped our entire money back that we invested initially, and still be able to control the asset and keep getting the positive cash flow from the business. So from the investment, so we still get paid in the form of passive income, even though we have no money involved in the asset anymore, because we recoup the entire money back. But now we're printing money legally for free, right? Because it's money for nothing. We really have a printing machine that is giving us cash flow, excess of positive cash flow into our bank account. Okay, and then we can do something else. We'll go and build something else. We'll acquire another investment. But that's the whole game, is to learn how to multiply our money and other people's money. Because when we use the bank's money, when we're raising debt, that's the bank's money, which the bank's money is basically the people's money, and other people's the savers' money. But maybe some of the bank's money as well, because they also are in the business to make a profit, and they're in the business to lend money. So that's why we have to become partners with the banks, because they are willing to give us as much money as we can handle. Okay, and they will put that money to work when we bring them an investment, a deal, right, that has been making money already. It has a track record. Maybe it's a commercial real estate property that is big. So the bigger, the better for the bank, because they stop looking at us as the the entrepreneur and the investor, they start looking at the investment itself. So if it's a skyscraper, and it has financial statements and it has the tax records and you can show the cash flow analysis to the bank, then we can definitely raise any type of money to acquire that asset, because the bank ultimately is looking for safe and homes, if you will, or sound assets that produce passive income and can bring that money back and then keep pumping passive income. So they want to always make their money work hard. And so, but they need people like you and I to come in and manage everything and control everything. The key word here is control. It's not ownership, because when we're raising capital, we don't care about the pink slip, right? If you were like, we don't care about who holds the deed at the end, but we want control over the investment 100%, because we put the deal together. Money will find us or we will find the money. Remember that the job number one of an entrepreneur is to raise capital. Okay, and the number one skill of an entrepreneur is to learn how to sell without selling, using systems and marketing strategies. Okay, but we have to learn how to do it without selling, because we have a good deal put together. It sells itself because the record shows it, right? We have financial statements going back 10 years. We have did the due diligence of this entire operation. Here is the report. We talked to specialists on this thing. Look, this is how much it's making at the end of the year, when everybody's paid, when all expenses, taxes, everything is paid. This is what this asset is producing per year. This is how much it's producing per month on positive cash flow. That's the bottom line. That's when literally the debt service is paid, the mortgage right of that property is paid, everybody and every expense is paid. That's how much is left. So we're looking always to get to the bottom line, to the positive cash flow, and control that. We want to be the ones touching that bottom line, okay? Because when we focus on touching that bottom line and being able to be the ones that control that is our passive income. That means that we position ourselves correctly in the deal, okay? Because we are the entrepreneur and the master investor in the deal. And yes, we can, of course, collaborate with other people and other partners, because business is, and investing is a team sport. I always tell you, right, that always see this as a team sport, never do it alone. But you have to invest in your financial education, sometimes alone, in order to start getting the right networks to be part of your life. So make sure that you're investing in yourself. Go read one of our ebooks. You can get the 10 new rules of money. We also have the how to build cash flow with the internet, turn passive income on. And even when you want to invest in real estate, you gotta look at properties online. You gotta send a message to the broker if it has one online. This is all done online. But if you also want to learn how to create digital assets or acquire digital assets, then we also have a section on that, a chapter on that specific asset class, right? Which would be like digital assets, right? It would be something like whether you're using other people's products or your own product that you want to create. We're going to show you exactly how to do it step by step. Get the ebook. It has over 500 pages long. How to build passive with the internet, turn passive income on. And in that ebook, when you get it from our website, like I mentioned before, you will have bonuses. You have a financial statement that you can download on your computer and can fill it out. Remember that the foundation of true wealth is the ability to read financial statements, including our own financial statements, because we all have a financial statement. And then the next thing is we have a mutual agreement for you to use whenever you are doing networking and you meet somebody that needs something for your network and you connect them, right? You connect the end user with the supplier or vice versa, and you put a contract in between, because that customer is going to that business because of us. So we want to make sure that we tell the business, look, we're bringing money and business into your business. We would like to get a percentage out of that, because I have a lot of people on my network that will be interested in what you're offering. So there are products that you can actually do that online right now. So if you go to our website, you'll find the investor tab, and there are marketplaces where you don't even need to you sign basically a digital agreement with the company, and you can start marketing the products. And they give you all the marketing tools, they give you everything. And a lot of the products are membership products. So meaning that the customer pays every month for the next year or for 3 years, so however long they keep it. And we continue to capitalize on that client for life. And if they buy something else, we get also a percentage of that. And that's it. We just brought them to the business. We showed them where the business was. And we don't have to even use our face. We can do this through video, using other people's tools. They give us the tools, right? So you can start building passive income right now. That's my point. That's why I'm telling you this, that you can start building wealth today, faster than ever. And online, you can also start with, which I always recommend, because remember, as a job number one of an entrepreneur, we need to focus on raising capital and using debt, using OPM, other people's money. But when we focus also online, and I always say here in our community, it does not take money to make passive income, it takes knowledge. However, once you have excess of cash flow, once you have, maybe, or if you have saved that money, then you want to make sure that money works hard for you. Put it into something that will make it work hard, make it come back with more money and produce passive income. And the only way you can do that is if you have financial education. Okay. And I'm not talking about investing this into a stock. I'm not talking about that, because you lose control over that unless you have a team of experts that are helping you get dividends and also get, like rent out your stocks. And there are strategies that you can apply today. And part of our ebook on how to build cash flow with the internet and turn passive income on, it has a chapter on stocks and how you can create passive income with stocks, okay, every month. So, we have detailed information just about every asset class, just to get started and understand which route you want to go and start building passive income. But the reality is that you can start today. You can, find a product. You can start promoting that product using marketing strategies that will not include you, in a video. If you don't like to do videos, you can actually sell without selling, and that's the whole goal, right? Because you're just going to promote that product to the people that want to buy that product. Okay, and there are many ways to find out where are these people located. Easy one is Facebook groups, right? So if you're selling a health product about keto or whatever type of diet, you go get it into a group that they are talking about that subject. And there are hundreds of thousands of groups on Facebook, and these are real people that log in every day to chat about that specific subject. So you can find the people that have an interest on that niche, and you can deliver value, you can answer questions, or you can just say, hey, here's a link, check this out. This might help you. That's it. You can have somebody do that for you. So you can actually pay somebody to do that for you and set it up where you're not doing anything. But the reality is that you can start creating passive income, start building your list of people, right? Because we got to work on our network. And most importantly, you have to invest in your financial education. That's why I'm inviting you to go to our website, go to the ebooks, all courses, download our ebooks, how to build cash flow with the internet, turn passive income on. It has over 500 pages long of financial education, made simple and a detailed guide, step by step, to showing you how to create passive income and true wealth today. Okay, like the wealth. You're gonna gain so much from this book. I'm telling you, it's gonna change your entire life. So we're doing that right now around the world. We're changing people's lives, and we want you to be part of this journey. We're creating different products and services to help everybody create more wealth and fast and with ease. I understand this can be something that is like, well, it's not for everybody, but I think everybody should do it because it's something that gives you freedom. Ultimately, it's going to give freedom. Passive income gives freedom. So it helps the person become more of who they are. A lot of times people spend their entire life working for money, and that's not who they are. They work for a job that they don't like to pay the bills, and that's not who they are. That job is not who they are. So they gave, money more importance. Money was, basically their master. We're not going to let money be our master. We are the master of money, not the slave of money. Okay, remember that we tell money what to do. We make sure that money goes and works for us, right? Money is going to go out there and work 24-hour shifts, non-stop. And we're gonna make sure that it comes back with more money for us. So we have to have the wealthy mindset in order to create wealth, in order to see opportunities. I want to tell you before I go, there's one deal that we're working on right now, because we are more than an investment management company, right? We invest in businesses, real estate, and different asset classes for passive income and sometimes capital gains. It depends on the opportunity. However, I want to tell you about this deal that we're working on, because I want to show you how you can also do the same thing. And it's about being aware of the opportunities. The second you shift your mindset with the wealthy, you will start seeing everything with opportunity. You will at least see what's an opportunity and what's not. Before, you were just going around not looking at anything as an opportunity. Okay, so you have to have the eyes of the entrepreneur and the master investor. Okay, and we're looking for passive income. We're looking for, right, passive cash flow. Passive income is passive cash flow, right? And we're looking for sound assets that we can control, an opportunity, something that we can control, whether we raise the capital from the bank or the people, but it's such a good opportunity that that money will find us, or we will find the money, right? We'll go knock on some doors and different banks, different lenders, and they will, for sure will invest in it because we have a track record and it's a good opportunity. We can show them how it's going to improve, how it can be scaled, or if we're starting out a new business, right? We're looking for cash flow. We're looking to build a system of systems. That's a business. Remember that, write that down. A business is a system of systems, okay? And to make a successful business, you have 8 elements. We talk about it all the time. That's the business and investor, or the master investor triangle, which it has, the cash flow triangle, which it has the mission, leadership, team, cash flow, communications, systems, legal, and product. Those are the 8 elements. We have to focus on those in order to, of course, understand whether something is a sound business or it's not a sound business, okay? Because those elements right there, they must be established in the business or in the investment that we're looking into investing in order for us to have success with that. Because if it doesn't have those systems, then something is missing, and that's part of what the business shouldn't maybe be purchased or be acquired, because maybe it's a bad business. Some businesses are toxic. Some businesses they need to just, close down. It depends on the situation, it depends on the financial statements. That's why we have to learn how to read our financial statements and learn how to read other businesses' financial statements. Remember that every business, every investment has a financial statement where it tells the story of that investment, in particular about the financial health of it. So it will tell you the liabilities, the assets, the income, and the expenses, and you can tell whether it's a sound or toxic business. So everybody has a financial statement too, every person, whether that person is poor, middle class, or wealthy. So go download the ebook on our website, and within that ebook, you'll find a document that says financial statement, and fill it out. I want you to fill that financial statement out because it's going to tell you where you are financially today and what you need to do to improve. Okay, so how many assets you have in your asset column? What is the type of income that you're making today? How do you make your income? Is it just ordinary earned income where you have a paycheck because you're exchange time for money? Okay, you have no passive income. You have no capital gains income coming from any stocks or any other paper assets. You have nothing else. So you need to work on your asset column. What is going to be your first asset that you need to work on? And you can also look at your liabilities and figure out whether maybe you can turn one of those liabilities into an asset to help you maybe come out of bad debt, right? And get into more good debt. But the liability column will help you understand, whether that particularly item that you label a liability on your liability column means withdrawing money out of you. And maybe it's based on, maybe it's a car that you're driving, right? But it's a liability because you're paying for it, it's not making you money. Maybe you have 2 cars in that liability column, but one of them can be rented out every single month through an application that is called Turo, Turo. And you put your car there and it's being
rented by the tourists and people around the area where you live that need a car for a day. Maybe they don't have a car or whatever, and they rent it out. And now that became an asset. That now, instead of being a liability, it's going to be an asset. Why? Because it's going to not only pay the debt service of that car, the mortgage, the payment, the monthly payment that you need to pay to the car dealership where you got that car, is going to be paid on its own from the money of the renters. And it's going to give you positive cash flow, because after the month ends, you'll have maybe, I don't know, 20 times more than the payment of the car. So now that car is literally creating you passive income. That will be your first asset that you have. So you see how easy we can start manipulating our financial statement to create more wealth and more freedom for us, because we all have 24 hours a day, but not everybody has the freedom to do the things that they want during that time. And we need money in order to have that freedom, but not only money, but it's the cash flow. It's passive income coming in from assets. That's how because if you're dependent on a job, you can't have that freedom, even if you have the money in the bank, because you need to show up to your work, otherwise you don't have a job tomorrow. So now your time is somewhat restricted, and everybody has time. Now, can you make the time to do the things that you love? That's the question. And that's what assets will give us, is the freedom, the ability to do whatever we want at any given time. They not depend on any job or anybody else. We have assets that are producing passive income, and we have excess of cash flow coming in, and we can, enjoy as we please. Okay, so very important to take money, business, and investing seriously as a priority. Okay, it's in tune with your health. I always tell you, work on your health. Do at least 15 minutes per day. It's going to help you also do better in business, guaranteed. Okay, so, but let me just go back to what I was saying, because I wanted to tell you about this farm deal that we're doing, because we're more than an investment management company. And we, of course, our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. So I had a meeting today with one of my business partners here at MI, a Master Investor, and we're working on closing this deal that is going to make millions of dollars per month. Okay, we have a network of, MI has a network of over 1,416 stores in the United States. Okay, and these stores are like gas stations, grocery stores. The number is a lot more than that, but in this operation, we're going to start with 1,416 stores. And what we're doing basically is connecting the farms, right? They're producing the fruit, and we making a deal with each store of the 1,416 stores. They're going to pay $2.75 for, let's say, the fruit, and we will be making millions of dollars once we do the first order, which will be 800 fruits per each store each month for 6 months, because that fruit only lasts 6 months. Its season is over after 6 months. So basically is 800 fruits per store. If you times that by 1,416 stores, that's 1,132,800 fruits per month to all the stores. Okay, and so we're paying the farmers, let's say less than 35 cents per unit. After shipping, let's say 50 cents, after we deliver the fruit. And what we're doing, we're setting up everything. So let me tell you, so we have a deal with the farmers. We get the fruit for a certain amount of money, very low, because they don't, they're just selling it per unit. So let's say we're paying 35 cents for the unit. And after packaging it and all of that's 50 cents. Okay, now it's ready to be shipped to the distribution center close to where all the stores are. So we're setting up a distribution center, about 3 different distribution centers that we're going to have, where the products and the pallets, we will have a trucking specialist who will handle all of the deliveries. And we already started, our negotiations with that trucking company. which is very reasonable too. So for 1,416 stores, right? That would be um, 1,416 pallets per month, because each pallet will have 800 fruits in the pallet. We're gonna have 32 boxes with 25 fruits each. Each box will be 20-pound boxes. So it roughly will have about 25 fruits units per box. And if you times that by 32, that's 800, okay? So it's gonna be 1,416 stores for the trucking company to deliver that. It's gonna be around, let's say 50,000. But when you times what we're going to be making after all expenses are paid on the first deal, you're going to be making $2.8 million after all expenses are paid. And that will be every month keeping the same amount of fruits. However, if the stores say, hey, we want 300 more, then that our cash flow will grow. And we don't have to do anything. Once we have done the first order and the stores continue to purchase that order, everything is set automatically. The trucks go, the trucking company will go over there where the pallets are ready to be uploaded into the trucking, into the trailer of the truck. It's a big 18-wheeler, and then they will deliver to the distribution centers, and they will handle all the distribution for us. So, we don't have to do anything, but all we did was connect the networks, okay? And that's why I want you to inspire, is that it is important to know about financial education, right? Because you need to have the vocabulary when you speak to other people. That's how we attract money. We don't chase money. Money comes to us. We make money chase us, okay? Because we have the right mindset. And also, having the right mindset, right? And knowing the right people, right? Influence is a big deal. So don't you ever, it's not only what you know, but also who you know. Like people say, no, it's not what you know, it's who you know. No, you have to also know. Like it's what you know and who you know combined together. Okay, that's how you're gonna be unstoppable investor and unstoppable entrepreneur, businesswoman, businessman, right? That's what we're doing here to increase our financial education, so our financial IQ goes up, and therefore our financial intelligence rises. The more financial intelligence we have, the more wealthy we will become and more freedom we will have, because we will have set up assets around our life that will produce passive income even in down economies. Okay, so understand that, with the farm deal, that was just one fruit. So we're making 2.8 million on one fruit. We can add as many fruits as the stores can handle, right? But that's just only one fruit on one deal, okay, that we're doing just with this particular operation. So I want you to start thinking in millions, billions of dollars, trillions of dollars. Think big, okay? Make sure that you have that type of mindset, okay? Because otherwise you're not going to operate with the right spirit. You have to have the entrepreneur spirit and the wealthy spirit in you. Don't speak with the poor spirit, okay? So the better you work on yourself and invest in your financial education, the more success and more passive income you'll have. Ultimately, you'll have more freedom. So make the choice today. Go to our website and start investing in your financial education. We have courses, digital products over there that will help you build passive income and true wealth. And of course, if you want a live consultation, we also have that available. We can sit down, we can discuss about the business operation, we can look at things, and let's just make sure that you're on the right track and start taking actionable steps towards creating true wealth, right? So thank you for having me, bringing you the good and bad news of money, the business principles at work in all economies. Stay tuned. We're going to be doing this more often, and leave me a comment if you like what you hear today. And if you learn something new, share it with the world, right? We want you to share it. If you have any questions, go ahead, because we'll open a dialogue for other people to also ask their questions and add to our conversation, and therefore we're all rising together. Okay, so invest in your financial education. Remember that today money is created with debt. That's why debt is tax free, and that's why we tell everyone here in our community: good debtors are winners, savers are losers. Okay, so as a job, if you've been a saver your whole life and you have money saved up, you gotta invest in your financial education so that you can make that money work hard for you and turn it into passive income. Turn your earned income into your passive income. Invest in your financial education. I'll talk to you next time. Take care. And make sure you go to all of our social media platforms and follow us: Instagram, Facebook, YouTube. Look for the logo, Master Investor. And welcome to the community. You have an investor inside of you. We all do. It's up to us whether we want that investor to be that master investor. Okay. Welcome to another podcast of Master Investor. Glad to be here again on another valuable financial education talk. Today, we're going to be speaking about how to create my financial plan with ease. If you're new to our community, make sure you subscribe, follow us on all platforms, look for the logo, become a partner of us just by subscribing here, right? And eventually you will get to see more of our products. If you have any questions, go to our website. I'm going to add the link below. And I want to also invite you to read our cash flow ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. You can find the link down in the description and get started with your financial education journey, right? It's all about investing. It's all about investing in our education so that we can understand how money works and be able to make money work hard for us and have assets that produce passive income so that we can have the freedom that we all deserve. Okay? So don't be a slave to money, be the master of money. And there are new rules of money that you must learn, because otherwise you will be struggling financially, because we'll be playing with the old rules of money. Like, if you're saving money is good, right? It's not good any longer, because money is not longer backed up by gold. Back in 1971, August 15, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, paper money, currency, and just an idea backed up by confidence. Today, money is created with debt. That's why debt is tax free. So after 1971, money became debt. And so we can utilize other people's money, the bank's money, because it's free money. Manage good debt. In other words, we borrow money to invest for passive income into an asset that produces passive income, something that goes up in value, maybe, right? And that is producing passive income, right? That is already doing that. Or you utilize debt, right? Good debt to start a business that will be successful because you have the business plan, you have the partners. It could be a real estate, commercial, residences. It could be businesses. It could be online business. Anything that will produce passive income. If you have a credit card, treat that like you have money, because it is money. That's how money is created. That's why it's tax free. So it's better to use your credit card before you use your own capital, right? In fact, use your own capital to raise more debt, more good debt, because you're going to utilize that debt to create passive income. That's what will determine whether something, whether that debt is good or bad. Okay, it's the way you use it. So if we're using debt to invest for passive income, then that's good debt, because it's going to make us wealthy. Bad debt makes us poor because it takes money away from us. There's nothing wrong with utilizing, your passive income to purchase a liability. To, if you want to drive a Lamborghini, then you can build an asset that will pay for the monthly payments of that liability, right? Or you can also rent out the Lamborghini and turn it into a business, perhaps. So you can always turn a liability into an asset with financial education. That's why it's important that we understand the different types of education that exist: academic, professional, and financial education. Most people will only know the first two, and that's the problem, because the traditional school system do not have financial education, because there is a mission in the school system that to this day it still plays its role, which is create two types of people: employees and soldiers. Employees that work for the corporations of the wealthy, and soldiers that defend the corporations of the wealthy, because the government is a corporation. So, you must understand that when you come out of school, people are taught to speak the language of an employee. They don't teach them how money works, what money is today, how to avoid taxes legally by using the tax code, because the tax code is a package of incentives for entrepreneurs and investors. So the more we follow the law, the more we understand business, we can actually be a tax-free entity. So with financial knowledge, you will be able to create wealth. Okay, so let's start with the steps that you need to take in order to build a financial plan. Having a strong financial plan will provide more financial security when the hard times arrive. Building a financial plan that will weather the hard times requires basic understanding of our finances. Investing in a financial education is the key to having a solid financial plan. Consider our current situation. What is the state of our finances right now? How many days will I be able to live the way I like if I quit working today? This inquiry will reveal our true level of wealth. Majority of people in the world can go without working for a paycheck because they will not know how to pay their bills if it is not working hard for earned income in someone else's company. Take a look at our monthly spending, add up the total amount of cash flow and assets that you possess right now, and we're going to figure out our wealth number, which is measured in time, because it's how much time do I have? Do I got 10 years that I can stop working right now and still thrive without going below my means, actually expanding and living above my means? Because we help everybody here in our community to expand, to educate themselves, to work on themselves, to invest for passive income, to grow their asset column. That's what we're here for, to help you understand that, look, we are doing it, you can also do it, okay? And we're gonna be that help along your journey. The following question is how you get to the wealth number. You must grab your entire money that you have, your cash flow, your passive income, right? Your savings, etc. How much is that? Divided by your monthly expenses. And that's your wealth number, okay? And you want to grab the entire money, right, that you have, the number. Like if you have passive income of $100,000 a year that your business are producing right now without you working, 100,000, okay, it's producing that much. Let's say that's how much you have. You divide it by the monthly expenses of, let's say, 3,000 per month. That number is your wealth number. That should be represent how many months you can live off of that income based on your monthly expenses, right? Your living expenses, the way you like to eat, everything, include everything in there, all your bills and everything. And then you can multiply, we can take that farther. You can multiply that result to however many years our assets will provide that passive income. So if that asset can guarantee me that I'm going to be able to provide, 100,000 every year for the next 10 years, then I need to multiply that result number, my wealth number, and then multiply for however many years is that, let's 10 years. So you can see your wealth, your months that you can live the way you like to live, or the way you're living right now, or not by shrinking, actually by expanding, okay? That's your freedom right there. This is statistic surprises a lot of people, so it is okay if it does too when you do it. Half the battle is won by simply being aware of it, which should be enough to spur us on to alter our financial course. Number one, find a reason why. When we enter any type of investment, we must be sure of why we're doing what we're doing. Okay, the why is very important because when hard times come, whether it's you're building a business, you're starting a new venture, you're launching a new brand, etc. If something is tough, not gonna give up because you have the big why. Okay, so make sure you write down your why. Find out why is that we have chosen to become financially independent in the first place, right? Why do you want to have this wealth? Why do you want to have passive income? Is it because you want to spend more time with your family? You want to travel the world? What are your goals? It's going to help you understand about yourself more. Okay. Number two, identify where today financially, where we are today financially. So we gotta figure out how our finances look. Knowing where we are is a must for going where we want to go financially. Be ruthlessly honest when it comes to our expenses as well as our passive income. Number three, choose the investment strategy that best fits our way of life. Where do we want to go from here now that we are aware of our financial situation? What is more, how we are going to get there? There are two things we should ask ourselves through this stage of the planning process. Am I making investments for cash flow, passive income, or capital gains? When we purchase an investment, we must be clear that what type of income we will receive from the investment. For example, if a person buys a stock and increases in value, then sell it, they receive capital gains income. Am I making investment for cash flow or for capital gains, right? Because those are the two types of income that you can get when we invest. Well, and sometimes people get nothing and they lose their money because they lack financial education, so they invested in something that was toxic. That's why it's important that you understand how to read financial statements, that you invest in your financial education daily, and also actively invest so that you can learn from your experience. Okay, it's not the investment that is risky, it's the investor behind the investment. So the more education you have, you can minimize risk. There's always going to be risk, but it's going to be a calculated risk, okay, that we're going to embark on. Number two, what is the mission here? Is financial freedom one of our goals? Is financial freedom one of the goals of your goals? Is paying off bad debt one of our goals and get into good debt? Is our objective to make enough money to leave a job and spend more time with our loved ones or fulfilling our passions? Have a specific objective in mind that we can pursue, whatever it may be. It is critical to find out the why. Okay, so that's very important. And then so the next is personal finance basics. It is time to include all the data from steps 1 and 3 above on your personal financial statement when we have gathered it all. In other words, once you have your expenses, how much income you have, right? How will you have any assets? You're going to plug it all in into your financial statement, and the financial statement is composed of the income column of an income statement, income column, expenses, and then we have the balance sheet, assets, liabilities, right? So be careful where you label an asset. If it's an asset, most put money into your pocket without you working. So if you have two houses, you live in one, and the second house, you are putting it through Airbnb, and it's being rented out the entire month, and it's producing passive income. And that passive income is paying for the entire mortgage of that house, any interest, and all the expenses of the house, and it's leaving you with some positive cash flow. Then that house is an asset. Your second home is an asset, but the one that you live on is not an asset. A lot of people label their house that they live in the biggest investment, the biggest asset. Is the bank's asset because the bank is making money off of it. You're paying mortgage to the bank. They gave you a loan. So it depends on the way the cash flow flows. That's what's important to see. Is it putting money into your pocket even while you're sleeping? Or is it taking money out of your pocket? So make sure you label them correctly, okay? And once you understand where you are financially, then you can say, okay, I need to start building passive income. I'm also going to add the blog. We created an article on this topic so you can actually read it, and you will find more things that we maybe didn't talk on this show right here, but we're going to be able to understand better once we see the diagrams that we put on our blog. So make sure you go over there to our website and take a look at this very podcast, which has the blog with it. Okay, we want to help you as much as we can deliver high quality financial education in whichever way we can legally possibly give it to you. So, podcasts, videos, blogs, um, text messages, anything. We're also working on our app, so stay tuned. Okay, the cash flow pattern of the wealthy class, we have a diagram where we show you that we receive income from our assets. We work on building our asset column. That's what rule number one is, that we work to build passive income and make money work hard for us, because once we get that passive income, we got to put that money to work. We don't just pay the expenses and the liabilities that we have, but we want to make sure that can we turn any of our liabilities into an asset so that that expense can come back to our asset column, or can we just add more assets, which is the next asset that we're going to acquire in our asset column. Is it going to be a storage unit? Is it going to be a multi-family property? What is it going to be? Am I going to launch a new company online? Am I going to do drop shipping? Am I going to put systems together to work for me? Right? What's the next asset that I'm going to build? That's what we should have in mind when we're receiving passive income. We should be allocating that money already into an asset that will produce more passive income. So we got to put that money to work. Okay, that's what rule number one is, that we work to build passive income and make money work hard for us. Okay, you can see the diagram on our website. There are three types of education. We talked about it earlier on the podcast: academic education, professional education, financial education. Academic education, as we all know, is very important because it helps us with math, reading, and writing. Okay, we all need that. Professional education, that type of education is needed in the world because we need lawyers, attorneys, CPAs, we need doctors, dentists, and they need to have their professional education to practice legally with that field that they love, right? They want to become a specialist in that field. So they need to have that professional education. In financial education, yeah, academic and professional education is important, but a person's education is incomplete without financial education. And a lot of times they don't find that out until they're very late, I guess. They may be very old and they don't have the energy to start. I don't believe age matters here, but the faster you become aware of the new rules of money and how to invest for passive income, the better. Okay, so to obtain a true understanding of finances, we must master several different lessons of money. Those who learn the value of financial education are able to construct solid financial foundations. Financial planning takes different intelligences. Number one, there are four. Mental intelligence is what most people equate with intelligence. It is head knowledge. It is very important, but without the other three intelligence, it is lacking. Some people excel at learning physically. Physical intelligence. They have to do, not hear, or read. That's number two. Number three is spiritual intelligence. It's not just something you get in church, but rather it is the intelligence we gain when we are inspired by something. For instance, there is a spirit that is created when we watch Special Olympic athletes compete and push their bodies to the limit. That inspires something inside of us. Number four, emotional intelligence is the maturity to keep a cool head and master emotions to respond the right way in all situations, including very difficult ones. Financial knowledge is made up of 90% emotional knowledge and 10% financial knowledge. This is due to the fact that most people experience financial hardship as a result of fear. They are hesitant to launch a new business concept. They worry that an investment may result in a loss. They are terrified of the financial information they don't have. They worry that they won't make it through difficult times. We must possess emotional intelligence to get past our fear. If we want to construct a lucrative financial house of bricks, only then will we be able to prosper throughout adversity and change. Wealth is financial knowledge. The very first new rule of money, wealth is financial education, right? Money is financial education. By knowing how wealth works, and that is always flowing to new places, we can continually educate ourselves about what is happening in the economies. For instance, if we know the dollar will be under pressure and lose value when the Fed started cutting interest rates, we next can turn to commodities like gold, oil, cryptocurrency, which often appreciate in value when the value of the dollar declines. When borrowing rates were at record lows and property values were low, we can then are able to sell our investments for a large profit and invest the proceeds in multifamily properties that produce passive income or any other business that produces positive cash flow. These investments are now beginning to pay off, right? Because we're now learning how to navigate through the ups and downs of the economy. So we don't predict the market. We know it's going to go up and down. We have the financial education to prepare, and that's why it's important that we diversify among the 5 asset classes that exist today. We talk about them all the time. A lot of people that talk about diversification, they talk about diversifying in one asset class, in paper assets, which is very dangerous because if the market crashes and all your eggs are in that basket, then you lose it all in an instant. So you got to diversify among the 5 asset classes and focus on building passive income. There are many assets out there that will do great in down economies, okay? And I'm talking about assets that we control, businesses, right? Real estate properties. It could be an online business, right? That the economy needs while, a product or solution, even while the market's down. So be creative and also innovate. Today is very important that when we're building a company, we are innovating so we can grow because there are much bigger competition due to the access of the internet. So now we have to stand out by innovating at all time and creating something valuable to the customers so that they can continue to spread the word, and also we can retain those existing customers for a lifetime. The economy goes up and down. Bad and good economies are starting to come. The only question is, will we be ready for them? Will we have financial education and therefore be able to build financial foundations of lucrative bricks? Or will we have a financial house of sand that will just get blown when the first storm comes around? Today, unfortunately, most people have financial houses made of sand, and there are all sorts of wolves that live out there in the darkness ready to destroy those houses. If we want to prosper financially, we have to prepare for trouble and change and build a financial house of bricks. How to build a financial plan made of lucrative foundations. Those with sound financial education, we can profit in both up and down markets. Many people lost practically everything, during the most recent severe recessions. People tragically lost their homes, retirement savings, and more due to the lack of controlling real assets, which is due to their lack of financial education. Some even commit suicide due to financial struggles. Others, though experience a different situation. We made the most money ever due to financial education and real assets that we control, while everybody else is losing money and is panicking because of inflation and the economy crashing. So a true inside investor or a master investor, we capitalize when the economy comes down. We always create cash flow. We are aware of the new financial regulations and have planned for difficult times, right? And so we are prepared because we know how to cash flow in down economies. I want to invite you to make sure you start working on your financial statement. Figure out today where you are financially, how many assets you have, what is the type of income that you're making today. Is it earned income, which comes from your job? How much is that? What is your living expense, right? Make sure you add everything, all your expenses and liabilities back debt, right? If you have credit cards that you just spend on liabilities, put that all there. Figure out the living expense, the number, okay? Your monthly expenses. And then work on building your first asset. If you don't have any assets, make sure you go to our website. You want to learn how you can get started today using other people's products. You don't need to have a lot of capital. In fact, we tell you, you don't need money to create passive income. You need knowledge. You need to invest in your financial education, because the job number one of an entrepreneur is to raise capital. And the job number one of an inside investor, which is a master investor, is to make money work hard for us. So, you can start with what you have and begin investing in your financial education. So go to our website. We have 2 ebooks right now, the 10 new rules of money. Okay, you can go get it. You're going to learn about the new rules of money. We talk about it on this podcast, right? 1971, President Nixon separated the gold standard from the US dollar. The old rules of money became obsolete. New rules of money are very important, because that is how we're going to be able to create wealth. You got to become aware of those new rules. And then we have the other ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. Is literally right now our flagship ebook, because it has over 500 pages long and is a bargain. This price is not going to last, because it has also additional bonuses in that book, because we created a digital course with the ebook. You can download the ebook straight to your device, okay, and keep it. It's forever, right? You can also have access to a virtual office that we're giving you on our site. And when you get it today, you're gonna be able to have a lifetime access to that course. So the more value we add into that digital course, which is a bargain right now, I suggest that you go get it, because in the future, that's going to go up a lot. And because the information that is compounding there, you're going to find a step-by-step on how you can get started making passive income using the internet, whether it's in real estate, in any asset class that you want to get involved in, okay? Start with one asset class, become successful at that. Once you have created cash flow and passive income, you have an asset that is producing your own autopilot, and you move to the next one, or you can scale that business, okay? But make sure that you start with one. That book right there has over 500 pages. It's going to teach about money. It's going to help you understand how money works, how wealth works today, and how to utilize debt. Everything about business and investing you'll find in that book. But most importantly, you'll have a step-by-step guide. Hold your hand throughout each chapter. You'll be able to see what you need to do exactly. Okay, we're showing you inside the ebook how you can create your first sale on autopilot, how to create your first passive income on autopilot, how to scale your existing business if you already have a business that's making millions of dollars, right? Maybe you need your stock at 2 million, 3 million, 20 million, right? We're consulting people around the world that have successful businesses to grow their business, because we're changing several little things in their business that they're not aware of, okay? We are aware of it because we study business every single day, and we're constantly investing. So we're helping these companies, double their cash flow within 6 months, because they change something in their marketing. We're doing, helping them choose a better strategy for taxes and much more. But you need to start understanding that, hey, we need to create or acquire an asset that produces money while we're sleeping, passive income, okay? So this ebook is going to change your whole life. It has bonuses that will help you fill out your financial statement, so you can download it into your Excel if you are familiar with Excel, or you can print it out and do it by hand. Okay, but you can fill out your financial statement and see exactly where you are financially today, which that was the homework of today. That's the task that we must do. Okay, so if you're listening to this for the first time, or you're new to our community, make sure you go to our website. If you're an existing listener, go and take action too, right? And you have also a mutual agreement that is available that you can use at any time with anybody. So if you're sending business to a person from your network, right, and say somebody, and that person has a business, and you're sending people to that business, you need to sign an agreement with that person and say, I would like to have this much percentage for every sale that I send to you. It is the ethical thing to do when it comes to building relationships. I see a lot of people leaving money on the table just because they don't have something in writing that will say, hey, I'm sending business to you. Just for that magic to happen, I would like to get a cut, which is totally legal and ethical. So you can utilize this universal agreement and renew it every year. Okay. Remember, it's all about building our networks. So at all times, you gotta be ABC, always be closing. Okay. And and think of how you can increase your passive income. Okay. Use your mind. I hope that this has been helpful. Let me know if you have any questions, what you think of the program. And of course, go to our YouTube channel, find us over there, subscribe, and make sure that you spread the word, right? Share this with somebody that will help you, whether it's your partner, whether it's your friend, right? Somebody that's in business with you. You want to build your team, so you want to get them in the right mindset, okay? So remember, today money is created with debt. Debt is tax free, okay? So we want to be comfortable using debt to invest for passive income, and that is good debt because the passive income is created by us investing that borrow money into an investment that is producing money, and it's paying the debt service, the interest, it's paying the maintenance and everything and everybody that is involved, and it's also, of course, leaving us with positive cash flow. The most important words in business are cash flow. So get used to saying that, become comfortable by being uncomfortable, put yourself in rooms that will make you grow, and make sure you give us a like. I will talk to you on the next podcast, or you might see me somewhere on YouTube. As we grow our company here, we're going to bring guest speakers and we'll be able to talk about their business so that you can get inspired, so that our community becomes aware of the different issues that exist when building a business. Okay. So thank you for having me. I appreciate your time in business, bringing you the good and bad news of money, the business principles that work in all economies. Bye for now. Hello, welcome to another live stream of Master Investor Company. Glad to be here again with another valuable video on financial education and everything that you need to know in order to start building wealth in your life. Okay, and remember, there are new rules to money. So if you want to be playing the game of money with the right mindset, with the wealthy concepts that will get you very wealthy, then you need to understand the business principles that work in all economies. And we have that here for you. I hope that you enjoyed the video. Today's topic is going to be called, what are ways that you can make money online? Okay. And you can find the blog on our main website. I'm going to put the link somewhere on the description. If you're listening through our podcast or if you're watching this on the live stream right now on YouTube, make sure you check out the description because it will have information that will take you to our website. It will also give you the opportunity to download our ebooks. One of them is called How to Build Cash Flow with the Internet, Turn Passive Income On. It is important that you understand how the cash flow system works, how to build one, how to acquire systems that do the selling and telling for you. This ebook specifically will have 500 pages, more than 500 pages of financial education and a step-by-step guide on how to build your asset column. And remember, even if you're acquiring a real estate property, whichever asset class that you want to get involved in for passive income, then you need to have access to the internet. That is why this ebook is essential for any entrepreneur, any employee, self-employed, or any inside investor. Even if you have an existing business and you want to scale that business, then you need to read this ebook too. Okay, this is for everyone. You can find the ebook on Amazon, or you can go straight to our website and you will be able to download it. I suggest that you get it from our website because you have additional bonuses that will come with the digital course. And every time we upload more valuable documents and content into that digital course, you will always have access for life. Even if you got it at a certain price right now, in the future, the price will go up for that digital course. However, today, you're going to pay a bargain to what is going to be in the future because the more value we add into that digital course will raise the price, but you will always have access to anything that we put in that course, regardless of the price that we will charge in the future. So get it for a bargain right now. Remember, you make the money when you invest, not when you sell. Okay, so go to our website, masterinvestor.education, and download the ebook, subscribe to our free newsletter, read our articles that we put every single week with financial education made simple. Remember, our mission here at Master Investor, we are more than an investment management company, and our mission is quite simple. It is our goal is to raise the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. Okay, remember there are three types of income. We talk about it all the time. Earned income, that's when a person has a job and they get a paycheck or a salary, they exchange in time for money. That type of income is taxed at the highest bracket. In fact, the tax code and the business laws are not in favor to employees. Okay, so that's why when you look at a check for a job, you usually see all the taxes and everything taken out even before you touch your money. Okay, so a lot of people will spend their entire life working for earned income. There's nothing wrong with having a job if you love your job and you enjoy that field, but you also need to think of building passive income because when time comes to retire, you need to understand that you need to have income coming in somehow. Okay, so you need to also focus on passive income even if you love your job. However, if you like to escape the rat race, if you want to get out of that job that you hate, then you need to listen to our podcast, our video blogs. You need to read our ebooks, subscribe into our digital courses, and start building your asset column. Okay, there are about 5 different asset classes that exist. We talk about them all the time too. And I want to tell you about the second type of income that exists. We talk about three. So earned income is number one. Okay, majority of people will only know how to make money by working hard for money. They're a slave to money. Okay. Income number two is called capital gains income, and that comes from the activity when you purchase something at a certain price and you sell it for a higher price. That gain right there is called capital gains, and that is also taxed at a higher bracket. And in some exceptions, you'll be able to defer taxes to a later date. For example, in real estate, you purchase a property and you sell it, and you roll the gains over to a new investment that is bigger and meets the requirements of the exact law that you're using to defer taxes, then you'll be able to achieve that. Okay. But capital gains usually is taxed at a higher bracket too. So the third type of income is passive income. And that is the best type of income because it's taxed at the lowest bracket. In fact, you can minimize taxes all the way to zero legally if you have the right team around your business. And I'm going to show you how to build your team, how to acquire the right group of people that will help you navigate through a tax strategy, tax planning, having the right bookkeeper, the right accountant, the right business lawyer. Okay. And everything can be done very cheap. In fact, the business will pay for those expenses, but they are very important. Remember, we talk about expenses all the time, and a lot of people think that in order for you to become wealthy, you need to spend less. No, it's actually you need to spend more money, acquire more expenses. Not all expenses are bad, so understand that. Okay, and in the next few minutes, I'm going to show you some ways that you can start building passive income online. You can set up your business online. You can start a new business. You can partner up with other people, right? And with existing businesses, you need to create the products or the services. It's up to you how you want to tackle your finance problem that you may have today. Okay, everybody has problems, and what you need to do is raise your financial IQ so that you can solve your financial problems and help other people along the way too. Okay, so Master Investor, like I said earlier, we're more than an investment management company. Okay, we invest in different asset classes, we invest in businesses. So if you have a business that you want to start, if you have something that you need to share or you need to raise capital, you can send us an email, go to our website, and we take a look at it, and we will let you know if we want to partner up with you, or maybe we have resources that can help you, launch that business. Okay. But the most important thing is that you understand that our rule number one of our community here at Master Investors, that we work to build passive income and make money work hard for us. Okay. That's the job number one of an entrepreneur, is to raise capital. Okay. Once you learn how to raise capital, then you can learn how to make money work hard for you. So if you have saved that money through your job, then your job is to invest in your financial education and then turn that saved capital into passive income. So turn the earned income into passive income. And the only way to do that is if you have financial education first and foremost, and then you find the right deals and learn how to acquire or build an asset that produces passive income so that you can multiply that money. You can put it to work. Okay. So remember, rule number one of our community, we work to build passive income and we make money work hard for us. You see the difference between the poor mindset and the wealthy mindset? The poor mindset, they like to chase the money. Here at Master Investor, because we all have an investor inside of us, it's up to you whether that investor becomes an average investor or becomes a master investor. We hope that you take on the path of becoming a master investor through financial education, because it will give you a lifestyle of total freedom. It will give you the sense of being able to do anything that you want in life, pursuing your passions, fulfilling your purpose. But you need to focus on financial education. Okay, you need to understand the new rules of money. You need to speak the vocabulary of a businessman so that you can attract the right partners in your projects, and of course, so that you can raise money, you can find the money. Okay, when you have a great deal in front of you, money will find you. And if money doesn't find you, you will find money, okay? Because you will be able to speak to the right lenders. And remember, we encourage everyone not to be a saver, to become a good debtor. Because today money is created with debt. That's why debt is tax free. And that's why we encourage everyone here at Master Investor to learn how to manage debt so that you can become very wealthy, okay? Because debt is tax free. So if you're using debt, you already minimizing taxes all the way to zero. Legally, you cannot pay taxes on debt, okay? And then if you invest that debt into an asset that produces passive income, then passive income is also tax-free when you have the right tax strategy, like I mentioned earlier, and you're equipped with the right team around you that understands the laws and the tax code so that they can help you navigate through that and take advantage of all the benefits, because the tax code is a package of incentives for entrepreneurs and inside investors. Okay, so let's dive into our blog today. What are ways to make money online? I hope that introduction can shine some light into what is financial education and how you can become wealthy today. Okay, if you have any questions, let me know in the comment section. I'm going to come back and answer them, but I do want to see you enroll in one of our digital courses. I'm going to get a notification, and you can, once you're enrolled in one of our digital courses, then we can talk through our virtual office that we have on our website. You'll be able to have a virtual office to yourself, and you can download any documents that we put in there. You can download any ebooks that we have in there straight to your device, okay? But you can also view them just by having them in your virtual office, okay? That's like your workplace, okay, to build your wealth. All right, so business systems beginners can use to make money online. The ability to build a system-based business, or a business that represents the B side of the cash flow circle, once belonged to a select few. The admission threshold was high. Before the internet was here, it was harder to become a business owner or an inside investor, right? We talk about the cash flow circle. If you're watching this on YouTube, you can see a diagram of the cash flow circle, okay? And it's divided in 4 slides. On the left side of the cash flow circle, if you divide it with a line in the middle, you'll find the E, that stands for employees. The S stands for self-employed. And these people on the left side of the cash flow circle, they work for money. They have a job, okay? And they need to exchange time for money. If you're a small practitioner, maybe of the law, if you're an attorney or if you're a doctor and you have a small practice and you have to show up to see your clients, then you're on the left side of the cash flow circle, okay? On the right side of the cash flow circle, you'll find the B stands for business owner, and the I stands for inside investor. On the right side, you'll find about the 10% of the people that control all the wealth in the world, okay? Business owner owns systems that work for us even when we do not work. Inside investor, money works for us. So you see the difference. On the left side of the cash flow circle, they actively working to earn money. On the right side, we actively acquiring assets and we're making money work hard for us. So we're working to build passive income, okay? Because it gives us freedom, and we're doing what the government wants us to do in the tax code, so we get all the benefits that the laws provide us, because we're doing exactly what the government wants us to do. And if you live in the United States, you live in a capitalist country, so even better, okay? That was costly and risky back then, right, to start your own business. Success had a significant financial benefit, therefore many individuals try. Sadly, many try and fail. The world is changing in modern times because to the internet. If they know how, almost anyone can create a system-based online business. This article will provide you with several business building suggestions. Let's first talk about the advantage of starting a company in the B side of the cash flow circle. Remember, the B stands for business owner. Those who controls a system of systems that produce passive income because it's fulfilling a problem in the marketplace. So find a need that you want to fill in, okay, and then fill it by having a system of systems doing the selling intent for you. And I want to show you exactly some examples of how to do that. The ideal source of income. In general, there are three types of income, and they are not all made equal. We talked about them earlier on, but let's review them again. Earned income is the money that employees and independent contractors earn. Frequently, this entails trading your time for money. It is the income with the highest tax rate and the fewest tax breaks. Profits from investments are referred to as capital gains income. Okay, and those can be, made when you purchase a car and you sell it for a higher price. You got something wholesale and you sell a retail price one time, right? You did it one time. And you buy stock and you wait a year and you sell it because it went up, and that gain right there is called capital gains, and you usually will pay taxes on that. It is the income with those who make a living from the investments often uses phrases like purchase low and sell high. If you can make it work, it is wise counsel. Also, it has hefty taxes and demands management. Also, it might be dangerous because you frequently have little control over whether something's worth increases or decreases. Like you're relying on the market when you're doing investing for capital gains. You're usually relying on the market to go up, and so we know the market goes up and down. And you can't control that. So a lot of people loses money because they are hoping that the market will go up and then it crashes, and then they just didn't have financial education, so they didn't invest for passive income. And remember, there are investments out there that will cash flow, that will create passive income even when the economy is crashing. So that's why it's important that you diversify among the 5 different asset classes that exist, so that you hedge for inflation and any down economy. Okay, so business owners and inside investors who are on the right side of the cash flow circle earn passive income. The best source of revenue is from this type of income. Why? Because it has the lowest tax rate income, is money in our pocket even if we are not working, and offers other tax benefits. Anyone who wishes to build financial freedom and wealth need to learn the art of passive income. If the goal is to be wealthy, then this income is for you. Fortunately, there are numerous online alternatives to generate passive income today. The effectiveness of an online business system. We have the ability to be entrepreneurs thanks to the internet and computers. The systems in your company are run by a computer. It enables you to interact with customers and conduct business online via social media and email. You get access to legal counsel as well as accounting tools. The computer enables you to look up manufacturers anywhere in the world. Also, you can easily Google anything you wish to learn more about or watch a YouTube video. Education is literally almost free. In fact, it is free, right? You just log into your YouTube account like you're doing right now, and you're watching a free video like this one with a lot of value behind it, which is free. It just costs you a little bit of your time. And remember, if you invest in your time wisely, because one of the major difference between the poor and the wealthy is the way we spend our time. So if you're educating yourself financially, you're going to be far ahead than the average person who's watching maybe something that is not really applying into their finances. Maybe something else that keeps them entertained, but it's not really adding any value into themselves. It's not improving their financial IQ. It's not self-development. And it may be something to stimulate the moment they want to just relax. Okay. And you want to always be in your tippy toes, learning something new, pushing yourself, being outside your comfort zone. Okay. Learning new words, expanding your vocabulary. Okay. Also, you can easily Google anything you wish to learn more about or watch a YouTube video. Education is free and the opportunities are limitless. Building a profitable internet business that generates income even while you're asleep is now simpler than ever. But the majority of people don't take advantage from this, interestingly enough, and ironically, right? Because the information is free. You can actually put together systems, and in fact, the platforms and the systems are also free. They offer you free months right, to get started. So you can, once you get charged, by that time you already have made money from the business. So you can use that money to pay uh, the systems and whatnot. But you can actually get started with no money. Remember what I told you before? It does not take money to make money. It takes knowledge, right? But once you have money, you gotta make that money make more money. Okay, but with knowledge, you'll be able to multiply that money. Okay, and you can get to the velocity of the formula of the velocity of cash flow, and that's when you repeat the formula of acquiring more assets that produce passive income. So now you have excess of cash flow, you have experience, and you have financial education. Those are the 3 E's of a master investor. Okay, but first you need to focus on your first asset. If you don't have any assets right now in your asset column producing you passive income. Okay, remember, an asset produces passive income whenever we're not working. Even while we're sleeping, it produces passive income. Okay, that's an asset. Liability takes money out of our pocket. There's nothing wrong with liabilities or expenses, as long as we have an asset paying for that liability, right? And so you need to, before you get a liability, think about acquiring an asset, building an asset, investing that money into an asset that will produce enough money to get that liability. So now you have that liability, whether it's a Lamborghini, whether it's a mansion that you want to live in for free. Remember, the wealthy, we position ourselves to get everything for free legally because we have assets producing that income. So we don't have to work hard to earn the money to pay for those things. We actually have our businesses working hard. Okay, we have investments working hard to pay for a lifestyle. So at the end, everything is free. And we talk about the infinite return on investment. That's when we recoup the entire money back. So let's say you invested $10,000 because you purchased a rental property, right? Whether it's a duplex or it could be an Airbnb residential home or whatever it may be. Just for the sake of this example, think of it like you put $10,000. Whether that money came through a credit card or a personal loan or whatever that may be, you recoup the entire money back because the business created that money back. Okay, the business starts to cash flow and now you recoup that $10,000 back in the first 3 months. Now you have no money invested into that investment. So now it's infinite return on investment because now you're getting money for nothing. You have no money invested in the investment because you recoup the entire money back. But the investment still produces passive income. You see that? Why is money for nothing? It's money from thin air. Now you're getting free money, right? And all you have to do is continue to operate the operation, right? You continue to oversee the entire operation. You do the maintenance, whether it's a residential property, but everything is being paid by the investment and it's leaving you with positive cash flow. And you have no money invested into that because you have recouped the entire initial capital that you invested back. Okay, so when you invest, you gotta think about, who are the partners, how fast would I get cash flow, and how long would it take me to recoup my money back that you invested, whether it's the bank's money, whether it's a credit card, whether it's other people's money, right? You gotta figure that out. You gotta have it on paper. You gotta know exactly because the history of the investment, of the asset, right? It can show you. So if you're acquiring a real estate property, you should have tax returns and you should have a pro forma where you can see how long it would take you to recoup the money back and how much would you keep for yourself as positive cash flow. Okay, very important to answer those questions. You have to understand that a true investment is about simplicity. Okay, if you can't explain it to an 8-year-old, then it's probably a bad investment. Okay? But the majority, okay, so we talk, okay, why? Because there are two, okay, so the majority of people don't take advantage from how simple it is to create a home-based business because they are skeptical, because they are still living with the old rules of money. They are listening to the wrong people. They have the wrong mentors. They may be brainwashed with the old era, with the industrial age, and they haven't switched their mindset and the core values about money. And so they have a hard time changing, right? Because they are too conditioned about working at a job where they have to show up at an office instead of using the internet from home to make a fortune online and create freedom, a freedom lifestyle. The most effective resource for digital entrepreneurs. Although it is useful tool for the digital entrepreneur, the computer does not have brains, just a system really. The brains behind the business must still take the helm in order to create a self-sustaining system. This is why so many internet entrepreneurs fail. A lack of understanding. They lack intelligence but possess the necessary technology. They frequently create an S cash flow circle, self-employed business, rather than in a B cash flow circle, right? Where the B has, the business owner has systems, right? Working hard, and the self-employed has a job, has to show up because he has not figured out how to put systems together. There's a fine line. Instead of starting a business, they create a job that they own. They and their time are necessary for it to exist. They cannot make money if they are not working, which frequently involves staying up late. But a genuine digital firm does not require its owner and founder to labor in order to generate revenue. No matter what, the business system continues to function and create passive income, okay, even while we're sleeping. That's what I want to show you, okay? By the end of this video, I want you to get the ebook, How to Build Cash Flow with the Internet. And also we have the other one that's called the 10 New Rules of Money. Get both of them. Okay, you can find it on Amazon if you like to read your ebooks on Kindle app, but I suggest you get it straight from our website. Much better. You have additional bonuses and you have a virtual office, and trust me, you want to get it from our website. Why success depends on our system. A system of systems make up the human body. A business is similar. The circulatory, respiratory, digestive, and other systems that make up the human body, there is considerable probability the body will become paralyzed or die if one of those systems fails. A firm operates in the same manner. We talk about the 8 elements of a successful business. We're going to look at a diagram below if you're watching this on YouTube, where we have the cash flow triangle, or the business inside investor triangle, to generate a successful business. To create a successful business, you need to have these 8 elements in place. Any entrepreneur should be familiar with the B, business owner, and inside investor cash flow triangle as a system for creating a successful company. All of the businesses and inside investor cash flow triangle elements can be expedited in the internet era for a lot less money, and actually without any money. Remember that knowledge is the new money. It does not take money to make passive income. It takes knowledge. Using the business owner and inside investor cash flow triangle to generate online income, passive income. For instance, communicating for a business used to be highly expensive. To conduct internal communications, you have to spend money on gear such as phone systems, fax machines, copiers. You have to spend a lot of money on advertising to get in front of your target market. You can send emails throughout the world, text on your phone, use Zoom abroad, and promote on social media now for essentially nothing. Also, all of these items are quick to set up. In a post-COVID-19 future, your clients may even be expected to do these things. Systems, and you can see the triangle right in front of you. You have the 8 elements. I'm going to tell you which ones are them quickly. Mission is at the bottom. Then you have team, leadership, right? This is the outside part of the triangle. And then you have cash flow, communications, systems, legal, and product. A lot of people that start a business, they think the product is the most important aspect, and it is not. All of the 8 elements are very important. In fact, if one of them is not in place, then it's usually a bad business and it will fail, or it's a bad investment. You want to ensure you run the investment through this triangle, okay? Systems work the same way. Imagine that a few years ago, we needed to communicate with teams all around the world. We had to invest in an expensive server system. With platforms like Google Docs and Slack, we can now exchange papers online and collaborate for free. Now let's imagine we wish to offer goods through a catalog. We had to make investments in currency, order systems, telephone staffs, and a big supply chain. Today, we may use a website like Amazon.com or Facebook business page to list our products, sell them, and fulfill customers' orders. We can get started right away. The point is that even while starting a business is easier than ever, we still need to be aware of the essential mechanisms that must be in place for it to be successful. And we need to be smart to locate and develop those systems in the digital world in a sustainable manner. Ways to earn money online. We can create a wide variety of internet businesses, but the ones listed here are only a few of them. Although not an exhaustive list, this can serve as a good place to start. See something we like from the list? Yes, then make extensive investigation on your own. We can find a ton of materials for each of these online businesses I'm going to mention below. Number one, real estate wholesaling. Finding a deal, putting it on the contract, and then finding another buyer who wants to buy the deal, right? For a fee is the art of real estate wholesaling. We're essentially selling the contract. The appeal of a real estate wholesaling is that we can get started with little capital while earning a sizable profit. Read how to build cash flow with the internet. If you want to learn more about real estate wholesaling in depth, real estate wholesaling is a great way to make money online. For starters, websites like Zillow, Redfine, and others make it simple to search for and find properties online. Also, LoopNet for commercial real estate properties. Also, a great location to search is Craigslist. The second option is develop a website where we may list our real estate contracts for sale, assemble a sizable database, and do email marketing. A mature internet real estate wholesaling company wants investors to come to them rather than having to go look for them. By increasing our volume to the point where we can pay staff to source bargains for us, we can also convert this into a business that generates passive income. Number two, discover our first investment property in real estate. Number two is purchasing stocks. Let me see. Number two is discover our first investment property in real estate. Okay, when we started in real estate, it required a lot of time to find hot leads on excellent homes. We either had to visit auctions and investment clubs or engage with a realtor to get through the numbers and numerous postings. All of these things are now possible to perform online, and we can frequently set up alerts to notify us when homes that fit our criteria are listed. We can quickly search almost any home in any location using websites like Zillow and Redfin, and we can even contact with a local agent with ease. And we can find lenders too, right? We can do the whole deal online. The ultimate passive income game is real estate. After we discover a property that generates a profit, we can engage a manager to take care of it, which will deposit money in our bank account each month and have tremendous tax advantages. This type of income is called passive income. Again, read our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, because it has a chapter on how you can acquire your first real estate property to build passive income. Number three, purchasing stocks. The days of a new broker in order to purchase and sell stocks are long gone. If dealing with paper assets is your thing, creating an online account at places like TD, Ameritrade, E-Trade, and others couldn't be simpler or quicker. Therefore, it is simpler than ever to find the knowledge we need to place wise stock bets. A subscription to a few financial publications, free newsletter, and simple Google searches can put you light years ahead of other investors and traders. Want to learn more? You can read our ebook because we have a chapter on how to invest in stocks for passive income. A lot of people that invest in stocks, they're investing for capital gains. When you invest, you get either two types of income: capital gains income or passive income. Remember, here at Master Investor, rule number one is that we focus to build passive income and make money with hard facts. When you focus on passive income, you usually can also have capital gains. For example, if you have a property that's producing you passive income and you find a new property, you can sell that property. You still got all the passive income the entire time that you held that property, and now you're going to sell it for a capital gains. Okay. Same thing with a stock. You can actually hold a stock and get passive income, but many people will only hold a stock to then sell it in the future if the market goes up. We're going to show you a strategy and different ways that you can actually get passive income in the stock market. Number 4, purchasing cryptocurrency. If stocks aren't our thing, we might want to think about something more useful like investing in cryptocurrencies. In this continuously changing industry, cryptocurrencies like Bitcoin, Ethereum, and many more provide a fresh and exciting method to generate money online. Okay, check out our newsletter. We have a lot of information. We're actually coming out with a new ebook on cryptocurrency, so stay tuned for that. Number 5, offer actual goods on eBay, Amazon, or your own website. You can get deals on wholesale and then list them on these websites, and then you just charge retail. And all you have to do is deliver that. You can do drop shipping. In other words, you can make the deal happen and then place the order from the manufacturer, and the manufacturer will take care of the packaging and will send that directly to the customer. Okay, so you never actually have to store anything. Although you might believe that Amazon is only used by large retailers, millions of small businesses really sell goods there. In fact, small firms can offer their goods online to one of the largest markets. Great if you already have a tangible item to sell. If not, you can simply locate manufacturers who produce them on demand and ship to order, and find a ton of generic things to offer on the site. Think plastic hangers. Check out this course that we talked about how to build cash flow with the intern, because it's going to help you there. It seems interesting to you. It is very best available right now to help you start building passive income online. So if you want to get started, read the ebook. Consider selling on online marketplaces like eBay and Etsy if you are passionate about specialized products. At COVID-19, if you have been business-minded, you would have created masks and sold them on Etsy. The items were flying off the shelves. Lastly, on platforms like WooCommerce and Shopify, we may easily create an e-commerce site for yourself if we want to complete control over our database, cash flow, and systems. Number 6, make a content machine that generates income. Content is king, and if used properly, it has the power to create an empire. There are numerous routes we can take there. Think about promoting our ability to produce material for others. Get a sizable clientele base and employees with contractors to complete the work. On websites like LinkedIn, Upwork, Craigslist, Fiverr, and others, we may do that. Just keep adding tasks onto your subcontractors' bench is filled. Making information products like courses to sell and sell and capitalize your expertise is another fantastic way to generate passive income, right? You create a course, you did it one time, now you have it on all the websites, different platforms, and people are buying it even when you're sleeping. You created it one time, and now it's going out the shelves. You're working out, you're having fun on the beach, and you're getting customers because you have systems and you have platforms doing the selling and telling for you. So think about if you have any skills that you want to share with other people and you want to help out, in your area of expertise, and you want to put that on a course, then you can do that very easily today. You can just record podcasts, you can record a digital course with video. You can actually have artificial intelligence creating your video for you. You don't even need to show up your face on the video. You can have an artificial intelligence person, show up on the video, and you just tell them what to say. Okay, so you can actually create an e-course right now. Making informational products like courses to sell and capitalize is a great way to build your passive income. People will pay to study from us if we have excellent and established skills, because online learning is huge today. The best thing is that there are several subscription-based membership systems available where we can easily host our content and manage our subscribers. Do we are not even want to go that far? The Kindle cash flow course will teach you how to generate income on Amazon simply by sharing your knowledge via Kindle. The wonderful thing about information goods is that once you produce them, you can start earning money without having to do any more labor. Like I said, read our ebook on how to build cash flow with the internet. We have a section on how to launch your digital product. It has over 500 pages long. So we cover real estate, we cover stocks, we cover just about everything in there. Affiliate marketing, which leads me to talk about number 7, affiliate marketing. Making our own affiliate blog or publishing on affiliate networks is a fantastic additional option to earn passive income, right? There are many subscription products out there that we can sell and promote for free, okay? We can just sign up for the affiliate program, and now we get a unique link for all the products that that company sells, and all we have to do is promote them to the people that need that product. And every time somebody buys the product and stays buying that product or upgrades to a new product, they will always pay us because we brought them into the table. So the company will always give us a percentage. We should definitely look into affiliate marketing if we have never heard of it. In essence, we write articles on the goods and service of others in exchange for a cut of any sales made via our affiliate link. Creating relationships to sell is easy after we are a reputable affiliate marketer, but the content must be high quality and offer genuine value. Remember, it's all about bringing value to the marketplace, right? So you can create a free blog. We have newsletters that you can sign up that are free, and you can write on these platforms and provide the links of the solutions of the products that you're selling, but you're given a detailed blog about a certain topic. So what are your passions, right? And what do you want to bring into the marketplace? There are products just on every niche that you can think about: health, wealth, self-development, yoga, meditation, anything that you can think about, you will find a product that you can sign up for affiliate programs. Today, just about every company has an affiliate program because they want sales, they want more customers. So it doesn't cost you anything but just your time at the beginning to create a blog. And remember, a blog will stay up forever, just like a video. And people can find it a year from now. And if it's really good, it will go viral. And you will be sleeping and you'll get clicks and you'll get sales on autopilot. Okay? Amazon and ClickBank are two of the most well-liked and effective affiliate networks. Number 8, be a consultant. Do you possess technical commercial expertise in areas like Google AdWords, Facebook advertisement, LinkedIn, or the nuances of search engine SEO? Then perhaps your best option for making money online is to work as a consultant for small businesses. These days, companies in every sector are springing up like mushrooms and could all use your experience. Business owners may pay you to advise them on how to develop or grow their firms utilizing online technologies, depending on the breadth and depth of our knowledge and level of experience. Small business owners require assistance with a variety of technologies, including building websites, developing content calendars, and expanding email lists. The sole question is, do you understand how? And then you can deliver that to them. Okay. Number 9, be a coach. A coach can be a very successful way to generate money online, similar to how a consultant offers advice on strategy and implementation of the business solutions. When necessary, we can offer constructive criticism. Nevertheless, We can also be uplifting and wise when we think it's appropriate. Joining the ranks of a professional and personal coaching can be a terrific career choice if you have a can-do attitude and serious ways to helping people in their lives. And remember, you can record yourself, so everything will be done online, and you can coach people just through videos. Okay? And you only did it one time. You can have 1,000 people in one class. Number 10, being an online assistant. Do you believe that the majority of internet jobs demand a bit too much work? No worries. Register as a virtual assistant and carry out basic daily activities for your customers. As a virtual assistant, you will need to be familiar with the fundamentals of Microsoft Word, Excel, and other programs in order to complete simple data entry jobs. Also, you might start your own virtual assistant business by contracting out your labor and utilizing technology to make huge sums of money. You can once more advertise your services on websites like Upwork, Craigslist, Fiverr, and others. Remember, it's all about creating systems. So if you like to start as a virtual assistant and then now you can create, systems or acquire systems that will allow you to delegate those jobs, and now you're just overseeing the operation. Now you can create passive income. So remember, you can turn it into a passive income business very easily using the internet. That's why I need you to read that ebook, How to Build Cash Flow with the Internet. Okay. 11, invest and sell domains. People will pay you a fortune to have such short, catchy domains names in their possession if you have a creative mind and can come up with them. Right? So think of businesses that are being created and go get domains and then call them and sell that domain to them, because a website is everything today. So a business is created, they don't have the website, then a website definitely is an asset to that business. So make sure that you're ahead of the curve, get the right domains, and you'll be surprised how much money you can actually create. And today we have, websites where you can, put up the price for whatever, if you have a domain and a company wants it, you can have them pay you per month. So if it's going to be $5,000, $10,000 for the domain, they can pay you $100 a month until they pay it off. So you can have different passive income coming in from this investments that you make. Okay, due to its low time and capital requirements, domain flipping, or I call it flipping, is a lucrative business for passive income, because you can actually have them, instead of them paying you one time, they can pay you monthly. Okay, at the cost of their registration, you can buy a desirable domain name and resell it for a profit. However, just like any other online business, you will need to perform some research before investing any money in this. To obtain an idea of what will be popular for domain names, visit sites like cebu.co.uk, afternick.com, and other domain auction sites. Simply visit Flippa, buy domains, or GoDaddy auctions to start listing your domain for sale. See it as real estate investing, but less risky. And of course, if you have credit, if you have debt, use a credit card to invest for this wisely. Okay, make sure that the domain name is a good domain name, and you know that the person who has started a business on that will pay you for that. Okay, and it's easy because you can check whether that business is established. You can check how long the business was created, and you can even see who owns the business, and you can get in contact with them. Okay. Number 12, be an internet researcher. The enormous amount of knowledge we pick up as a side effect, to use the term loosely, when we spend a lot of time exploring the web, is one of the finest things. Why not create a company around a market segment we believe we are an expert in? Individuals will pay premium price to freelancers to conduct online research, or to put it another way, perform data mining. A laptop, a strong internet connection, and a team of remote researchers from nations like the Philippines and India are all we need, right? Because we can delegate this to them. Being a specialist in a few specific niches is always a good idea. By doing this, we can give our clients the best results, which will make them happy to recommend us to others. Everyone, including marketers, political organizations, lawyers, and college teachers, needs research services. We can add the people on that short list to our client database. So remember, there are many ways, and there are a lot more ways you can start building your business online, your systems that will produce passive income. I believe if you have no assets right now, read our ebook, How to Build Cash Flow with the Internet, because it's going to help you get started right away. And the beautiful thing about the internet is that really you can get started for free. You have the ability to acquire systems and promote your digital courses and promote other people's services, products through affiliate marketing and many other that we mentioned on this valuable video today that will help you build passive income. Remember, capitalize your passions, learn how to build systems, expand your vocabulary in business so that you can raise capital from the front end by selling to direct clients and also by raising capital through the banks and other people's money, OPM, right? And use OPT, other people's time. So you can delegate. Once you have a job, you can delegate that because time is the most precious asset we all have. So if you have a job and they're paying you to research a certain topic, now you can go to a website where you will hire a person from India that will do the research for you, and you just pay them what they were charging, you keep the rest. And now you can do, go on the next job and you can bring in more clients. So now you're not working for that money. Now you're just passing that work to somebody else. They do the hard job and you keep the money, you keep the cut, and you can do that through a system so that now everything is on autopilot and you don't have to be there to make that. And now it turns into passive income. Okay, the focus is to build passive income. Whatever you do, focus whether that business can be scaled, whether it can be leveraged and can be turned into passive income, right? So I hope that you enjoyed the video. Make sure you go to our website, leave us a comment. If you want to read the entire blog, make sure you go to the blog section and you can also subscribe to our free newsletter. Welcome to Master Investor, again, bringing you the good and bad news of money, the business principles that work in all economies. I'll see you on the next video. Thank you for watching. Make sure that you smash the like button, subscribe, and turn on the notifications button so that you know when we go live or upload a valuable video that will change your life like this one. Stay great, and remember today, money is created with debt. That's why good debtors are winners and savers are losers, because debt is tax-free, so we gotta use debt to invest for passive income. And rule number one of our community is that we work to build passive income and make money work hard for us. And our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we look at opportunities to build passive income and true wealth. Thank you for listening. Thank you for watching. I appreciate your business and time. Bye for now. Hello, welcome to another live stream of Master Investor Company. Glad to be here again on another valuable video that will change your life forever. Make sure you subscribe to our community and visit our website if you're ready to start building your asset column. Remember, Master Investor is more than an investment management company. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. In order to reach financial freedom and build wealth, you need to focus on your asset column. Today's topic is going to be called, how do the wealthy print money legally? And that is right, because the wealthy works to build passive income. Okay, majority of people spend their entire life working for earned income, which comes from a job. When you have a paycheck, when you have a salary, that is earned income. And when we invest, we get two types of income, either capital gains income or passive income. Here at Master Investor, we encourage everyone to focus on building passive income. In fact, rule number one of our community is that we work to build passive income and make money work hard for us. Because the job number one of an entrepreneur is to raise capital. And the number one skill is to sell without selling using marketing and systems. And the job number one of an investor, of an inside investor, is to make money work hard. So when you are playing the game of money on the right side of the cash flow circle, and you're going to see a diagram in a minute, how does that look, and where you can tell where you are today if you are on the left side, because on the left side are the employees and the self-employed, and on the right side you find the business owners and the inside investors. So once you have raised capital to acquire an asset, the asset will produce more income, right, in the form of passive income, and you gotta make that money work hard for you. So we gotta get great at raising capital, right, because that's the job number one of an entrepreneur. And of course, we gotta get great at making money work hard for us. And if you have worked your entire life for earned income and you have money saved up, then your job is to convert that earned income into passive income. So yes, you can become a business owner and an inside investor with financial education at the same time. And it's all about taking action, but taking sane action by first investing in your financial education, like you're doing today, listening to a podcast or a video. If you're watching us from YouTube right now, then this is spending your time wisely that the wealthy do, because financial education is the key and the foundation of true wealth, because it's going to give you the ability to tell the difference between an asset and liability, how to build wealth, the new rules of money. Is going to give you the core values of the ultra wealthy so that you invest like the wealthy do. And since the wealthy do not work for earned income, we work to build passive income. Then with financial education, you can also do the same thing. Now, if you're new, make sure that you leave us a comment, share this great content with other people, go to our website, find a digital course that best suits you, and start building your asset column with real assets that your company control, that will produce passive income even during bad economies. Remember, there are assets that will hedge for inflation in bad economies, and with financial education, you can actually print money in any type of economy. Here at Master Investor, we prepare through financial education for any type of market, okay? We don't necessarily predict the market because we know that it goes up and down. So what we want to do is become great at knowing how to utilize the financial education and its knowledge to print money legally, okay? And what I mean by printing money legally is using OPM, other people's money, which comes from the banks, private lenders, private investors. That is using OPM.
And when you have financial education, if you have a great deal and you have a team, money will find you, or you will find the money to fund that deal. Money will be coming to you. Instead of you chasing money, money's gonna chase you, okay? So let's dive into our video blog. If you wanna read the blog, you can also visit our website. We have a free newsletter, and you will get all of these articles straight to your email, and you can read them once they are published, or you can visit our website on a daily basis and read the articles that we're publishing. We're giving knowledge for free that will change your life if you apply this knowledge. However, if you want to take massive action and you want to expedite your results, then you want to enroll in one of our digital courses, get one of our ebooks. We have 2 ebooks right now. One is called How to Build Cash Flow with the Internet, Turn Passive Income On. You can find it on our website, or you can also go to Amazon and read it through Kindle, okay? The other ebook is called The 10 New Rules of Money. Both of these ebooks will change your life forever and will give you a new perspective about money, business, and investing, okay? So with financial education, anyone can print money too. Learn to print your own money, since money is losing more and more value daily. We talk about it all the time because after 1971, exactly August 15, 1971, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, became fiat money, a currency, became just an idea backed up by confidence. It's not longer backed up by gold. And what does that mean? It means that the new rules of money emerge, and that today money is created with debt. That's why debt is tax-free legally, and that's why the ultra wealthy, we love to use debt. In fact, we encourage everyone in our community to become extraordinary at using debt. Don't be debt-free if you want to become wealthy. You gotta learn to be comfortable by using debt to become wealthy, because it's going to give you leverage, and it's going to give you the ability to acquire great assets that produce passive income even while you're sleeping. There are about 5 different asset classes that you can invest on, and you gotta focus on investing in those asset classes for passive income. And you need financial education in order to do so, okay? So remember that today money is literally fake money. It's created with debt. That's why there's no taxes on debt. So when we use debt to invest for passive income, we're already minimizing taxes all the way to 0, because debt legally cannot be taxed. And passive income also can be utilized to minimize taxes, okay? Because the tax code and the corporate law are a package of incentives for entrepreneurs and inside investors, for those who are playing on the right side of the cash flow circle. The average wage for American workers has either decreased or remained unchanged over the past 20 years. However, how do the wealthy print money legally? In the meantime, inflation has risen steadily. Simply put, this indicates that whoever works for earned income is earning less money, and it is buying them less than it formerly did. In other words, in order for you to buy the same stuff that you used to buy, it's going to cost you more money. It's going to cost you more hours at your job if you're working hard for earned income. It is absurd that to believe that earning at a decent job and saving money can help a person advance in today's economy. It's actually naive, and it's a lack of financial education that people tend to think that way. Every day, our money loses more and more value. We must learn how to print money on our own legally if we want to succeed in the new financial system. What is an infinite return? Having the power to print our own money is one of the finest benefits of having a financial education. This can be done legally using the financial concept of return on investment, ROI. Most financial experts will tell others that a return on investment of between 5 and 12% is good. And if the people do not have financial knowledge, it is. They will also say that the danger increases with increase in return. That applies even more if the people lack financial intelligence. Yet, if we have high quality and we have high financial intelligence, we will understand that achieving an endless return on our investment isn't completely impossible. In fact, that's what we're going to try to do every single time we invest in a project, in a business, or any type of investment. which always attempt to get an infinite return on investment. Money for nothing. That's what we call it here at Master Investor when we speak about an infinite return. More exactly, an infinite return occurs when we receive a full return on our investment in a cash flowing asset. We still own the asset or control the asset and continue to benefit from the cash flow on a month to month basis. In other words, we recoup the entire money back if we have invested any capital upfront to acquire that, whether it is debt that we borrow from the bank or private lenders or investors, or you use some of your capital to put down to acquire, and it's a combination of your capital and the bank's money, recouping the entire money back that was initially invested, plus paying the debt service back, and once you receive your entire initial investment back, then now you have money for nothing. You're literally getting money for nothing. You have no money in the investment because you recoup the entire initial investment back, and it continues to print you money legally. It could be a home that is turned into an Airbnb, and that home is bringing you, 10 times more than the mortgage, and the maintenance and everything is being paid with the cash flow of that operation. It could be a commercial property. It could be a store online that you have. It could be a digital book. It could be a digital course. Anything that will bring you money even while you're sleeping, and it has returned the entire money invested initially back to you, and whoever invested and lend the money. And once you continue to receive that, by you having control over that asset, is called infinite return on investment. So you literally have no money invested of your own in it, and it's continued to provide passive income. Okay, that's the holy grail right there. Printing our own money starts with being on the right side of the cash flow circle. If you're watching this on YouTube, you can see in front of you the cash flow circle. On the left side, we have the E, which stands for employee. That's the person that have a job and they work for earn income. And also on the left side, right below the E, we have the S, which stands for self-employed. Who owns a job? It could be a small doctor who has a practice, right? A private practice, or an attorney who has a private practice, an accountant. It could be anyone who has a small business or a small practice, I should say, and who has to be part of that infrastructure. In other words, they have a job, they own a job. Okay, maybe they don't have somebody else above them, but they have to show up to see the clients. They don't really own systems or control systems in order to print money. They still have to show up every single day. So on the left side of the quadrant of the cash flow circle, you will find that that's where majority of people are playing the game of money, and that's why usually they struggle. They don't have financial freedom. They literally don't have a way to build true wealth, because they have to work hard for earn income. They have to show up in making the money. Okay, so on the right side of the cash flow circle, you'll see that the B's are in there in the I's. The B stands for business owner. We own systems that work for us even when we do not work. The I stands for inside investor, aka a master investor. Money works for us. Remember what I told you at the beginning of the broadcast? The job number one of an entrepreneur is to raise capital, right? And the number one skill is to sell without selling, using systems and marketing. Okay. And the job number one of an inside investor is to make money work hard for us, because once we have the money, then we gotta make that money work hard for us. Okay, we gotta tell the money, hey, you go work hard for us. We don't have to work. You go out there and work and make more money for us. Okay. In a nutshell, the cash flow circle has two sides. Employees and self-employed are on the left side. Business owners and inside investors are on the right side. On the left side of the cash flow circle, people are unable to print their own money. Only if we eat, sleep, and breathe on the right side of the cash flow circle, we will be able to construct a legal money printing machine. It is clear why this is the case. Employees do not own the machine. The machine is not their property, so they work for the machine. Moreover, self-employed do not own the machine. They have a business that frequently subcontracts to the money printing aspect. They own a job that often contracts to the money printing machine. They cannot possibly reach the infinite return that comes with a money printing machine, since they sell their time, which is a limited resource. Like I said earlier, if a doctor shows up to see 20 clients, he can only see 20 clients a day, or either raise the price on each client and see less clients, but he still has to show up unless he invents and creates a business that has a medicine that can solve a million people's disease, right? And can sell it and produce it in a way that he doesn't have to be involved, then now that doctor becomes a business owner with systems. Okay, you see the difference, right? Build a money printing machine on the right side of the cash flow circle, because they are the only ones who have found out how to legally print our own money. The ultra wealthy only operate on the right side of the cash flow circle. We own and control the machine, thus the explanation is also very straightforward. Business owners create businesses particularly for the aim of printing money lawfully. After we have recovered our initial investment in the business back, we may easily attain infinite return on investment. The same is true of an inside investor. We are in the money printing business and making infinite returns once we recover our initial investment and still control the asset or machine. We can only print our own money legally if we own the machine, which means to operate on the right side of the cash flow circle. Take a look at some of the examples. I'm not sure why it didn't show up the examples that I have put in here. They're right here. Yeah, I have them down below. Okay, perfect. How to print our own money in business. I started a master investor company at my own kitchen table. Rather than use my own money, I raised funds from investors. In less than 3 years, thanks to the growth of the business, we have paid back our investors 100% plus, an additional 100% to purchase back their shares. Today, our business puts millions into our pockets, even though we have none of our money invested in it, because we have assets reducing debt and reducing OPM, other people's money. That is an infinite return. In other words, our business prints money for us legally. How to print our own money with other people's money. This brings up a crucial point: leveraging OPM, other people's money, to obtain infinite return fast. Before getting into OPM, we should first discuss a key concept from Master Investor: the distinction between good and bad debt. If we grew up learning the old rules of money, we have probably heard that debt is a negative thing, but it is simply not the case. If we want to become wealthy, we must take on debt as long as it is good debt. That is the new rules of money. Liabilities, including goods like vehicles and trips, are financed with bad debt. Some of these are things that are unnecessary and depreciate with time. But as long as we have an asset that takes care of the payments in full, then we can acquire any liability. Liabilities, every month they cost money and they should be paid with the passive income generated by the asset. Good debt is used to purchase assets that put cash in our pocket each month, even when we're not working. Good debt is things like equity partner money, a loan for an investment property, venture capital, a credit card that we're using to invest in a business, to start a business, etc. OPM is a type of good debt. To use it effectively, we must have high level of financial intelligence, but once we do, printing money happens far more quickly. As you can see, the cash flow pattern of the wealthy, I put the diagram right there, and you can see it, how we focus on our asset column, and that's how we create our income, which is called passive income, right? We don't have a job. We have assets that work hard for us, and that's how we make our money. It's through passive income from cash flow and assets, and it goes from the asset column to our income column, goes down to the liability column. That's the way our cash flow is flowing, right? Goes down to the liability column, and it goes to the expenses column, and it goes out, okay? And it can go back to our asset column, because we can turn liabilities into assets. And we talked about it before, right? An example: if you have a Lamborghini and that Lamborghini is just costing you money, but you want to drive it, say you have an asset that's paying for that Lamborghini, and you want to turn, since that Lamborghini is a liability and assets paying for it, right, that we have, but let's say you want to take it to the next level, and you say, okay, I have a liability, which is a Lamborghini that costs me $4,000. It's, the rent is $4,000 per month. I have an asset, I have a house that's paying for that every single month. So I'm not working hard to pay for that. So great, I can keep it as a liability, but if I want to turn the liability into an asset, I can rent the Lamborghini 5 days a week to tourists, and I just drive it on the weekends. So whenever I want to, and the Lamborghini will print me $1,000 every single day just by renting it out to tourists around the city. Okay, so now that Lamborghini is bringing, if I'm renting out per week, say $5,000 times four, $20,000 per month on passive income minus the 4,000 that I have to pay for the rent and of the Lamborghini. So I end up with about $16,000 on passive income. You see, so we can turn that liability into an asset. Not all liabilities can turn into an asset because some of them are like taxes for the government, for the property, etc. So, but you can always, with financial education, turn as many liabilities into assets. Okay. But before you obtain any liability, you want to have an asset that will cover for the payments of the liability. And then if you want to turn that liability into an asset, then you can also do that. Here's an illustration for an OPM, other people's money. Scenario one, $100,000 purchase price, $80,000 loan at 5% interest, $20,000 of our own money for equity. Running through a simple mortgage calculated, the annual cost for this loan will be about $8,500. Assuming we have an income from the property of $11,000 a year after expenses are paid, our total net income will be $2,500. $11,000 minus $8,500. That's how we get to the $2,500. Our return on investment for this will be $2,500 divided by 20,000, which is 12.5%. Scenario two, this is where it gets good. Listen to this: the same deal, 100% purchase price, but this is with more financial education and with higher financial IQ. $80,000 loan at 5% interest, right? We receive a loan from the bank, from the lender, and the $20,000 that we need to put down, we use OPM, other people's money. If we have a credit card, if we have the capital cash, we want to use that capital to go ask for a credit card. And instead of using and killing our own money first, we're going to take advantage of OPM, other people's money, like a credit card at 7% interest. We get paid 50% of the net operating income as a finder of the deal. In this case, our annual loans cost will still be $8,500, but we will also have an additional cost of around $1,500 for the other people's money we borrow for equity based on and assume 7%. So total loan and OPM cost will be $10,000. Again, assuming we have an income from the property of $11,000 a year after expenses are paid, our total net income will be $1,000, which we get to that by 11,000 minus 10,000 is at $1,000. Our fee for putting the deal together will be 50% of the net operating income. In this case, $500. 50% times 1,000. Our return on investment for this will be an infinite return because we will be making $500 without any money in the deal. As we can see, OPM, other people's money, is a powerful money printing machine when we use it correctly and legally. How to print our money in real estate. Master Investor constantly collaborates with other real estate partners to print money through real estate. We will locate an underperforming apartment complex, buy it with investor money, OPM, with the bank's money, make improvements, boost the rentals, and raise the property's worth. Then we can refinance that property tax-free and repay the investors with the loan proceeds, all the while continuing to generate positive cash flow because we maintain control over the asset. With repayment of all investors, they continue to benefit from the cash flow too. That too is an infinite return on investment. These are just a few instances of how we can print our own money with the correct financial education. Furthermore, printing our own money really makes more sense than to invest our money over the long term in the stock market, working hard at a job to pay more in taxes, saving in money in the bank, and losing purchasing power, or working harder at a job to pay more in taxes. Yeah, it makes more sense to build our asset column with printing money machines that work hard for us to create passive income. Increase your financial IQ today and start printing your own money the legal way. If you want to learn more about how you can start printing your own money, get our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. You can find it on our website, or you can also find it on Amazon if you like to read it on Kindle. If you get it from our website, you're going to have additional bonuses. You'll have a virtual office that you can read the ebook. You can download the ebook to your device, but you can also have access to additional content that we are offering inside the digital course of How to Build Cash Flow with the Internet, which the more valuable documents and content we add to it, you will always have access for life, regardless of the price going up eventually. The 10-year rules of money is the next ebook that we have. Amazing ebook. You can also find it on Amazon. You can go get it straight from our website at www.masterinvestor.education. Find the link in the description of this video or the podcast if you're listening to us through our podcast app. And make sure that you subscribe to the channel. Let me know if you have any comments. I hope that you learn, and I hope that you also take massive action in building your wealth and understanding that it is all about how you're making your money today, right? Do you have assets or do you have a job? If you have assets, you want to get to infinite return on investment. You want to always go into an investment thinking, how fast can I get to an infinite return on investment? How fast can I recoup the entire money back that I invested? And can I keep control over the asset after I do that and continue to benefit from the positive cash flow of that asset, okay? And if the answer is yes to all those questions, then you are on the right track to printing money legally. I hope that you enjoyed this video, bringing you the good and bad news of money, the business principles that work in all economy. Thank you for watching, and if you have any questions, please leave the comment or question below. I'm going to come back and answer, and I'll see you next time. Make sure you subscribe to all of our platforms. Master Investor, we're on TikTok, on Instagram. You can also go to our website and find all the links to our social medias in there, okay? Thank you very much again, and I appreciate your time in business. Remember, today money is created with debt. That's why debt is tax-free, and that's why we encourage everyone here at Master Investor to become good debtors. Good debt makes us wealthy, and bad debt makes us poor. Bye for now. Welcome to another live broadcast of Master Investor Company. Glad to be here again with another valuable video on financial education. Remember, Master Investor is more than an investment management company. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today, I have something special for you. We're going to be speaking about what are the simple rules for investing. These rules can literally change your finances forever if you apply them into your life. Before I start diving into our video blog, I want you to visit our website, www.masterinvestor.education, and subscribe to the newsletter. It's free. You can get articles straight to your inbox every single week with financial education made simple that will change your life forever. Remember, knowledge is the new money, and the holy grail of building wealth is to have financial education so that you have the ability to make decisions when it comes to investing. Rather than you giving your money away to somebody else to do the investing for you, you're going to be an active investor who is in charge of your money, and you're going to be able to make that money work hard for you and create positive cash flow. Remember, the most important words in the business language are cash flow, okay? Because since money is not backed up by anything anymore, after 1971, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, became paper money, a currency, and just an idea backed up by confidence. So money today is literally fake money. And today, money is created with debt. That's why debt is tax free. That's why we encourage everyone here in our community, a master investor, who is learning to become a master investor, to understand that you need to become a good debtor. In other words, be comfortable by asking and borrowing money from the bank, from private investors, right? You need to learn how to raise capital. That's the job number one of an entrepreneur. And the job number one of an investor is to make cash flow work for us. In other words, once we have that money, once we acquire a loan, once we borrow the money, we gotta make that money work hard for us. And how do we do that? Is by allocating that into an asset that produces passive income in any type of economy. There are 5 different asset classes. We talk about it all the time. In each asset class, you can invest for passive income. Majority of people will always invest for capital gains because they don't have the financial education that it takes to build passive income. Okay, so there are 2 types of income that you can get from investing: capital gains and passive income. Rule number 1 of our community here at Master Investor is that we work to build passive income and make money work hard for us. Okay, so if you're hearing us on our podcast or you're watching us on YouTube or any other platform, make sure you subscribe, leave a comment. If you have any questions, drop it below. I'm going to come back and answer them for you. And that way we have a dialogue and we open up a conversation. You might be able to answer other people's questions as you ask your question. And I'm going to come back and answer and provide feedback to your question, okay? And make sure you take massive action. Get our ebook. We have several different ebooks on Amazon. You can get them straight from our website. One of them is how to build cash flow with the internet, turn passive income on. And today, even when you're investing in real estate, you need the internet. You need to be able to navigate through different websites and platforms to find the right asset, whether it's a commercial real estate property or a residential property. So the internet is the most powerful tool, aside from your mind, right, that we have available to us right now. Okay, so we need to have the ability to navigate and understand how we can create money from thin air using the internet, because remember, knowledge is the new money. So once you have financial education, once you have the right deal, you will learn that money will find you. And I'm going to go ahead and start with our video blog, because that leads me to talk about the rules for investing. Okay, you can find the blog on our website. I'm going to also leave the link in the description. If you want to read it, if you're watching this on YouTube and you just want to read the entire blog, then you're welcome to do that. We have free blogs that are coming out every single week. And if you want to get them in straight to your email, then just subscribe to our newsletter. Okay. Learning to invest like the wealthy do. The continuous transition from the left side of the cash flow circle to the right side of the cash flow circle is one of the primary indicators of impending financial freedom. What are the simple rules for investing? Similar to how a caterpillar transforms into a lovely butterfly, becoming an inside investor or a business owner requires transitioning from employment or self-employment. Okay, remember, the cash flow circle contains 4 types of people. In the left side, you'll find the E's, the employees. Right below them, you'll have the S's, which stands for self-employed. And then on the right side, you have the B, which stands for business owner. And on the below that, you have the I, which stands for inside investor. Okay, so you want to be on the right side of the cash flow circle and operate in that side, because that's how you're going to build true wealth. Okay, in the left side of the cash flow circle, you're going to work for earned income. You have a job, and you get a paycheck, or you have your own practice. If you're a doctor, but you still have to show up to work, so you're getting a salary, you're getting a paycheck, you have to see clients every day, so it requires your time. So if you want to truly become financially free and build wealth, then you need to move to the right side of the quadrant of the cash flow circle, okay? And you'll be able to find that inside of our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. It has the diagram in there. You can see it. You can tell where you are today and how you can make the transition. But the first step you need to do is to invest in your financial education. And you'll find out in a minute why. Similar, understanding what to do when you have more. Let me see. Let me pick up right here. It takes time and frequently necessitates a complete shift in attitude and behavior about money. So, right, when we start investing, you got to remember that it takes commitment, right, to invest in your financial education and change the core values that you have regarding money, okay? A lot of people have a hard time changing that, okay, because they've been taught their entire life to think about money a certain way, to work hard for money. If you're not working physically hard, then you're going to feel that you're not doing what you're supposed to be doing to build wealth. So the middle class and the poor class usually tells their kids to go to school and get a job, and that's how they will build wealth. And that may be, you can't really build wealth on the left side of the cash flow circle because you're working for money. You only have a certain amount of hours per day, okay? So you're chasing money. You're going after the bag. And so that takes the ability to use leverage to make money chase you instead. I'm going to show you how to do that, because once you have systems like the business owner, once you control systems, money comes to you. Money is flowing into your bank account because your systems are doing the selling and telling for you. Understanding what to do when you have more money unexpectedly available is one of these behaviors modifications. The temptation for those on the left side of the cash flow circle can be to, at best, follow traditional advice about money, or at worst, to spend it all. And that's the main problem about people when they are saving money. They save up their entire life to give it to somebody else, to put it into fake assets, because they feel the need that they need to get rid of that money, right? And they don't know how to invest themselves. So they give it to a salesperson who's making money on commissions, and most likely will end up losing all that capital because the investor is the one that's risky, okay? He or she doesn't have financial education, so he or she gives the money away to a salesperson, and the salesperson doesn't know anything more about investing than the investor itself, and he just wants to put that money in fake assets because he makes a commission or she makes a commission of that. So fake assets are like 401ks, mutual funds. These types of fake investment vehicles, they're fake because they don't make you any money. They're not printing you money every day, every week. You have to put in money into them every month. So they're not paying you passive income, okay? So an asset puts money into our pocket whenever we're not working, okay? That's an asset, right? So it's a business or an investment that puts money, puts passive income into our pocket whenever we're not working. If it's not doing that, then it's not an asset, it's a liability. That's why these fake assets like the 401k, mutual funds, etc., they take money away from you, and they don't put anything into your pocket. So they are considered liabilities and fake assets, and very risky fake assets, because a lot of times people end up losing their entire money because they're relying the investment on the market. And as we know here at Master Investor, the market goes up and down, right? So we are in the game of preparing for any type of market. Instead of predicting the market and relying on the market, we have financial education so that we can cash flow even when people are losing money, okay? And you'll be surprised because a lot of times we use that as an indicator that there's opportunity. When we see a lot of people losing money, a master investor will go into that sector to cash flow from the lack of financial education that the individual has when it comes to money, and we can see opportunities that other people cannot see. Okay, so remember that. Okay, remember that the most important thing to build your wealth is financial education, because with that you have the power in your hands to make financial decisions, okay, without having to give your money away. This can happen whether it comes from an inheritance, a raise, or a bonus, or any other source, to avoid squander it on obligations like holidays or cars liabilities. Such common advice might be to raise your 401k contributions, or to save as much money as you can while continuing to live within your means, below your means, right? And I always say here at Master Investor, we must expand and live above our means. That's how we're gonna get to the growing process. If we are in a corner trying to save money, it's gonna make us smaller. It's gonna make us shrink in all aspects, and we don't want to do that. We actually want to expand. Okay, so you want to be comfortable by feeling uncomfortable when you're living above your means. You need to start thinking, how can I create more passive income? How can I have the things that I want without me having to work hard to pay for those things? And the way to do that is to create and build assets using debt, using other people's money, OPM. Okay. All of these themes have been extensively discussed, so it should not be surprising that none of them are regarded as good advice. If you're about to get a windfall of fresh funds, this is the ideal opportunity to implement the wealthy principle. Invest in assets with a positive cash flow. Okay, that's what I mentioned earlier on the video, that the most important thing is to start building and acquiring assets that produce passive income. That's how you really become financially free and you build wealth. It's the only way. If you're working hard for a paycheck, you're gonna have to work harder and harder and harder to make more money. Okay, and usually you have more responsibilities the more money they pay you. So think about that for a second, and trust me, if you love to do what you're doing today as a job, I still recommending you that you need to take a look at building passive income, because you're going to need it. After you retire from that job, then how are you going to live the way you want to if your pension plan is not the way you thought it was going to be? Okay. Remember, 401k, those are fake assets. Okay. They don't make you any money. Nevertheless, you must first comprehend the basics of investing in order to do that. These are Master Investor's essential investing principles. One of the hardest things about people in shifting is their mindset and habits about money. It requires dedication and execution with the new rules of money. That's why we created our financial department here at Master Investor, because we are an investment management company, but we want to also extend our knowledge to those people who are in the fences about becoming a master investor. We all have an investor inside of us. Okay, whether you're an employee, a self-employed, you're dealing with money every day, and you're using that money to invest in either liabilities or assets. And so it's all about shifting your mindset and understanding that there are many ways that you can actually make money without having to work hard for earn income, without having to have a job. Okay, and acquiring the financial education that you need so that you can turn that into knowledge and make it and turn that into passive income, make that knowledge work for you. Okay, basic rule of investing number one: adjust your money mindset. The idea of changing our thinking from that of the poor and middle class to that of the wealthy is discussed extensively in the ebook How to Build Cash Flow with the Internet, Turn Passive Income On. Learning what the wealthy invest in that the poor and the middle class do not. Both the middle class and less fortunate instruct their children to go to school, find a good career, work hard, and save money. And that should make them wealthy, right? But it doesn't work that way, okay? And we see it all the time, okay? Throughout history, you can look at your friends and You can look at the person who has not job and has businesses and investment. That person is more successful, more wealthy than the person who has a job and went to college and had a career. Okay. Usually, if you have financial education, you will definitely be the person that went to college and studied, because there are two types of people that come out of the school system: employees and soldiers. People that think they want a job, they speak the language of an employee, they want a secure job, they want a secure company where they can go and devote their entire life to work. And there's nothing wrong with that if you love your job, like I said, but you also need to build passive income. Okay, you can still do it on the side. The wealthy instead instill the following lessons in their children: learn how money works, create decent jobs, make money work hard for you, and invest in assets with positive cash flow. That will make you wealthy, and it does. The idea that you may get wealthy by working for a salary is one of the fundamental misconceptions shared by the poor and middle class. But because of the way the tax system is set up, it is actually very challenging to achieve that, because the laws and the tax code are not in the favor of employees. The tax code and the corporate law are incentives for the entrepreneur and the inside investor. Money as a business owner can be invested before taxes. We do not only have more money to work with as a result, but it also lowers our overall taxable income, which means we frequently pay less in taxes than people in the poor and middle class. Remember, three types of income that exist: earned income, that's when you have a job, you get a paycheck, you have a salary. Okay, that is taxed at the highest bracket. You have no room to minimize taxes. That's why when you get a paycheck, or when the person gets a paycheck from their job, taxes have already been collected and other things. So they usually get a half of their paycheck, right? And then if you, the second type of income is capital gains income. And that's when we purchase something at a certain price and we sell it for a higher price. It could be a residential home, it could be a stock, anything. It could be an item that is that has some sort of value, and we sell it for more than we purchased it. So that gain right there is called capital gains, and we usually have to pay uh, taxes on that too, which is set at a higher bracket. There are exceptions in real estate where you can roll that over using the law and defer taxes, but you still have to pay some taxes when it comes to capital gains. Okay, so earned income and capital gains income are taxed at a higher bracket. And then we have passive income, which is the type of income that the wealthy works for. And that's why rule number one of Master Investors is that we work to build passive income and make money work hard for us, because majority of people spend their entire life working for earned income. And then maybe they try to do capital gains income because they don't have the knowledge. So they just want to give the money away to somebody to invest it for them. So eventually they maybe can sell their stocks or can sell their portfolio, whatever, and get some capital gains from that. Okay. So financial education is the way of financial freedom and true wealth. Okay. This is the wealthy mentality that also explains, and I want to also mention that passive income is taxed at the lowest bracket. You can actually be tax-free entity when you use debt, because debt is tax-free right off the bat. And if you invest it for passive income, that passive income can also be minimized, can all the way to zero in taxes, legally done, because the tax code are an incentive package for the entrepreneur and inside investors. So when you use the laws, when you do what the tax code is telling you to do, when you're getting passive income, even if you're making millions of dollars, hundreds of thousands of dollars per month, per year, you can minimize that all the way to zero and pay zero in taxes. That's why people were mad at Donald Trump when they found out that he paid no taxes, okay? And it's because he has done everything legally through the laws and the tax law. It's not just him. There are many wealthy people that pay no taxes. You can look it up online, look at the reference and check them out, because they will tell you, hey, I'm using the laws that allows me to be a tax-free entity. And I think it's great, because we're providing jobs, we're creating services, products, we are already doing our share. So We should be able to take advantage legally of those laws. That also explains why so many members of the lower and middle classes were outraged when they discovered Donald Trump had paid no taxes during the presidential race. They simply don't get how money functions or how the wealthy conduct themselves. To become wealthy, you must first change your perspective about money and investing. That there are other sources of money is the first step towards doing that. So shift your mindset about money, okay? Adjust it. That's the basic rule of investing number one. Basic rule of investing number two. Determine what type of income we are working towards. Like I said, many people spend their entire life not knowing that other types of income exist, and they think that the only way to make money is to get a job and work hard at a job for the rest of their life, not knowing that there are better ways to actually create money, okay? Most people just consider earning money at a successful job. They are unaware that there are various sources of money. But Master Investor always stresses that there are three various forms of income and that each is influenced by a different mindset. The ordinary earned income. The majority of individuals think regular earned income when they discuss earning money. The 9 to 5 set makes money like this. It is typically obtained through a paycheck from a job due to the government deducting money from your paycheck before you even receive it. It is the most taxed income and is therefore the toughest to accumulate wealth with. That's earned income. Number two, capital gains income. A 401k and various paper assets, including mutual funds managed by a financial advisor, salesperson, are common sources of capital gains income for the majority of highly compensated workers. The majority of capital gains income comes from paper assets like stocks, bonds, and mutual funds due to its forced yields and second highest tax rate. It is somewhat challenging to accumulate money. The majority of experts agree that over a lengthy period of investment, you may anticipate returns of roughly 7% per year for your capital gains income. Of course, there can be significant ups and downs during that period. A person with little financial intelligence would think a return of 7% is a lot, but wealthy people would reject such an investment approach. Three, passive income. High financial intelligence individuals execute an investment approach that would generate passive income. Real estate, royalties, and dividends from businesses and stocks are the usual source of passive income. Rent from a rental property is considered passive income. Since Master Investor receives royalties from our ebooks, digital courses, businesses, real estate, there are assets that generate passive income. It also counts as passive income if you own a company that pays out profits to you. In other words, it is money that you receive whether you work or not, because to its mix of low taxes and potentially unlimited returns, it is the income with the lowest tax rates, the most tax advantages, and it's the easiest income with which to accumulate wealth. If we want to be rich, work for passive income. A wealthy advice from Master Investor. Basic rule of investing number three. Transform regular income into passive income. Most people begin their lives earning regular wages as employees. Understanding that there are other sources of money and then converting your earned income. If you save money, right, don't give it to somebody else. Get your financial education right, and then you'll be able to convert your earned income as effectively as you can into those other sources of revenue are the first steps on the route to accumulating wealth, right? So don't give your money, don't get rid of your thousands of dollars, your hundreds of thousands of dollars that you can actually put to work when you have financial education. So you should invest in your financial education first, figure out which asset class you want to go into. There are about 5 different asset classes that you can invest on for passive income, and you need financial education. A lot of people only go into those classes to invest for capital gains income. You want to invest on passive income because passive income comes in and you control the assets. Capital gains is just a one-time thing. You sell it, you get that gain, and that's it, but it's not working hard for you to make you money, okay? So the whole purpose of becoming wealthy is that we have assets under our control, under our company's control, and they are producing as passive income, positive cash flow. Okay. Master Investor created a straightforward illustration to demonstrate the three types of income. You can see it right in front of us. We have just a circle. Inside of the circle, we have three types of income. On the left side, we have the earn. In the middle, we have capital gains and then passive income. Okay, you can find this if you're listening to our podcast. You can go to the link in the bio, the description, and go to our website to read the entire blog and be able to get the diagrams. Okay, that is all an inside investor should do. In a nutshell, according to Master Investor, it is as simple as it gets. This is the reason why receiving a raise shouldn't be invested in a 401k or used as an excuse to save money by living below one's means. Rather, they should pay themselves first and invest that money in cash flowing assets and as much financial education. In short, convert your earned income into passive income. The easiest way to do this is to make our investment cost an expense and to make it our most important expense. You can see another diagram where we have wealthy people. We have an income statement on the right side, and it says buy assets first and pay taxes after, if any. So you have the income column, and then you have the expense column. In the expense column, one of our priority expenses are acquiring assets. We put money into an asset before we put it anywhere else. So get your mindset into the mode of investing in assets that produce passive income, right? Otherwise, it's not an asset. If it's not producing passive income, it's a liability. And then pay taxes, if any, because since you're investing for passive income, you can minimize taxes all the way to zero. But remember, you need to get your team together. You need to get a CPA. You need to get a business attorney that speaks the language of the wealthy so that you can minimize and use the laws for the wealthy or for anybody, really, right? But the wealthy takes advantage of those laws because we're the ones that are providing jobs. We're the ones that are investing on assets, and we are providing services and products in the marketplace with systems, okay? And then we have acquired liabilities. So there are three things that you'll see in the expense column in there. You have number one, acquire assets. Number two, pay taxes, if any. And number three, acquire liabilities, right? So there's nothing wrong with liabilities as long as you have an asset that will cover for the payment of that liability, because liability takes money out of your pocket. So if you want to have a luxury of some kind, whether there's a car, whether there's a mansion, whether there's anything, a private jet, you want to have an asset that's making those payments every single month of that liability before you even think about acquiring the liability, okay? Wealthy people buy or acquire assets first before tax dollars and pay zero in taxes in many occasions. Then we acquire liabilities by having the assets pay for the expenses of liabilities. All is done legally using the laws of the tax code and corporate law. And then we have the other picture with the diagram with the poor and 90% of the people, and it has the same income statement with the income column, and we have expenses. And that you'll find that poor people and 90% of the population pay taxes first, right? Because they're working for earned income, and then maybe buy assets after. Okay, they usually have priority number one is pay taxes. Priority number two, acquire liabilities. And then number three, maybe acquire assets. And usually they have no money left and they have no financial education because they're working hard at a job where they're investing the entire time working at a job. Therefore, they have no time to read financial education and apply that education into their real life. So usually they have no assets in their asset column. And most people try to buy assets with after dollars. Many times it is not enough to afford any assets after everything is paid, including the liabilities. And remember that the job number one of an entrepreneur is to raise capital. So as an entrepreneur and inside investor, we like to go to a bank and use their money. So like if you have the right mindset, if you have the team, you have the opportunity, money will find you. And you'll find out that's one of the basic rules of investing too that we have in our package here today. Basic rule of investing number 4, savers are losers. According to popular belief, saving money is not the key to achieving financial freedom and independence. Savers are in really losers. They are the ones that invest their money in low interest accounts in the assumption that it will magically increase to provide them with their entire lifestyle by the time they retire. That is both ineffective and poor financial advice. Saving money has little value in a society where practically everything is designed to steal it. The odds are against you, from inflation to taxes to hiding costs in your 401k, which are fake assets. Instead, today's winners are the spenders and debtors. Money is not backed up by anything like it used to be with gold. It is a form of a payment that is constantly changing, much like an electric current. Money is now moving from one industry to another. It dies if it stops moving, just like a current. If our money isn't moving, it is slowly withering and losing value. The wealthy are aware that we must monitor market activity and shift our money in accordance with it. This explains why the traders who executed the big short achieved a stunning profit. They observed the flow of money because they were paying attention. But more than that, they observed the assets it was occupying and realized their value was worthless. They were aware that they could shift their money ahead of the curve to where other people eventually would. The first always feast and the last always starves in the realm of money. Okay, so you want to have the financial education that you need and start investing for passive income and be ahead of the curve. With financial education, you'll be able to achieve that because majority of people, they have no financial education in them, and therefore they have no eyes for opportunities. Okay, and remember that even in down economies, a master investor will always cash flow. Okay, because there are investments in assets that will protect you from inflation in down economies. In other words, it will make you very wealthy in down economies. Okay, so invest in your financial education. Basic rule of investing number 5: the investor is the asset or the responsibility. Investing in the eyes of many is dangerous. Yeah. In actuality, the risky party is the investor. The asset or liability is the investor. We have seen investors lose money when everyone else is making it. In fact, because those are the places to find the true investing bargain, an inside investor loves to trail risky investors. So it's, remember basic rule of investing number 5, the investor is the asset or the liability. Okay. This implies that our understanding of finance can either be an asset or a problem. If we decide to invest heavily while having a low financial IQ, they will make a lot of blunders that high financial IQ investors will take advantage of. Put money into your financial education first if you want to transition from being a risky investor to a master investor. Start modest with your investments as part of your education because nothing beats real world experience. Learn from the failures and then make bigger and bigger investments. However, a big deal, a big investment requires the same amount of energy as the small deal. So always think big. And the bigger the investment is, when you're raising money, the better, because the bank and the private investors will stop looking at you as an individual and will look at the investment itself. So I always encourage you to think big. Okay, if we're going to be thinking anyways, might as well think big. Okay, we can also develop our financial acumen by attending and reading daily investing knowledge like you're doing today. We specifically created an ebook, like I mentioned earlier, in digital course, How to Build Cash Flow with the Internet, Turn Passive Income On, to show you how to think and invest like a wealthy person. Basic rule of investing number 6: great deals attract money. Remember what I told you? Once you have the mindset, once you have the team and you have an opportunity, money will find you, or you will find the money. Whenever we initially find a wonderful offer, we might initially be concerned about how to raise money. Keep in mind that our responsibility is to remain attentive to the chances before us and to be organized. Master investors advise if we are ready, which entails having training and expertise, and we locate a good bargain, the money will find us or we will find the money. The point made by Master Investor is that getting the money was the simple part. Finding a wonderful bargain that attracted the money was the challenging part, which is why so many people are willing to invest in a master investor. Other people's money, or OPM, is what this is, and it is worth learning more about how to raise capital by using good debt. Basic rule of investing number 7. Learn to evaluate risk and reward. To succeed as an inside investor, we must develop the ability to weigh risk and return. A person opening a hamburger restaurant stand is an example. Would that be a wise investment if you had a person with a $25,000 budget and a businessman and a business plan for a burger stand? The answer is no. There's too much risk for not enough payoff. Pretty nice, but what if we told you that this person has spent the last 15 years working for a significant burger chain, has served as vice president of every significant department, and is prepared to go out on his own and establish a global burger chain? What if you could purchase 5% of the business for just $25,000? Would you be interested in that? Sure. Yes, because there is a greater payout for a given level of risk. You see the difference? So it's all about having the plan, having the opportunity, having the team around you, and of course having your financial education right so that money can find you. Okay. The one example is the person didn't have any experience and it was just too risky. The second example, you have the person who is opening and building a global burger chain because he has the expertise, he has the knowledge, and he has a team around him, and he's selling 5% of the company. Okay, so that brings in confidence for the investors and the banks, so they're willing to pay for the $25,000. It takes a lifetime commitment to investing in financial education to learn and master the laws of investing. Yeah, these fundamentals will get you going. It is up to us whether we become a master investor or just an average investor. Remember what I told you? You have an investor inside of you. It's up to you now what you do with it, whether you become a master investor or you stay an average investor. Keep in mind that the rest of your life you will be dealing with money. So it's your choice to make whether you want to live a life above your means or below your means. Get our ebook, The 10 New Rules of Money and How to Build Cash Flow with the Internet, Turn Passive Income On. I hope that you enjoy the 7 basic rules for investing that I talked about today. I'm sure it's going to help you tremendously. You can find our product services if you're wanting to find a real estate deal. We can also help you with that. We have a whole team behind the scenes that, we are investing in real estate. We also help other people find the deals. And if you need a business plan, if you need invest in something and you want to run it through our department, let us know. We have live consultations. We're here to help you build passive income. Our mission is to elevate the financial well-being of humanity through high-quality financial education made simple to build passive income and true wealth. Okay? And let me know if you have any questions, and you can see the blog on our website, and you can get the ebooks straight from our website. You'll have a virtual office that you can access the ebooks, download them, and you will have additional bonuses that will come with those ebooks inside the digital courses. However, if you'd like to read your ebooks in your Kindle app, then you're welcome to go to Amazon and find those ebooks in there. How to Build Cash Flow with the Internet, Turn Passive Income On by Master Investor, and the 10 New Rules of Money by Master Investor, and we have a new ebook coming out this month. So stay tuned, and thank you for watching again, bringing you the good and bad news of money, the business principles that work in all economies. Remember, today money is created with debt. That's why debt is tax-free. So become a good debtor. Be comfortable by borrowing money and investing that for passive income. if you truly want to become wealthy, you gotta leverage debt, okay? And learn how to minimize taxes all the way to zero and be a tax-free entity. Follow us on all platforms at Master Investor. Thank you for watching, and I will see you on the next broadcast. Bye for now.